buying oil from Russia.
Global headwinds, biggest challenge.
We've reduced the slabs. There shall be only 2 slabs, and we are addressing also the issues of compensation cess.
Government unleashes long delayed reforms.
टोटल 5 लाख युवाओं के जो जॉब्स हैं वो आपसे छीने गए। महाराष्ट्र के युवाओं, आप इस बात को समझिए।
How can Finance Minister ensure job creation? What to expect from Union Budget 2020? What to expect from Union Budget 2026? Pre-Budget Roundtable.
Hello and welcome to the pre-budget special roundtable. Never before have geopolitical issues cast such a fog of uncertainty over a budget-making exercise. In a climate of intense global headwinds and uncertainty, Finance Minister Nirmala Sitharaman's 9th consecutive budget this Sunday will be expected to sustain reforms and achieve macroeconomic stability and ensure that growth doesn't taper off. What then are the challenges before the Finance Minister and the Modi government, and what lies ahead in 2026 for the Indian economy? Joining us on the pre-budget roundtable is a stellar panel of economists and industry voices. I'm joined by Neelkanth Mishra, Chief Economist, Axis Bank; Soumya Kant Ghosh, Chief Economic Advisor, State Bank of India; Pranjal Bhandari, Chief India Economist, ASEAN Economist, HSBC; Nilesh Shah, Managing Director at Kotak Mahindra Asset Management; Naina Lal Kidwai, former President FICCI; Sajid Chinoy, Chief MD and India Economist at JP Morgan. Good to have all of you. Some of you are part also of the Prime Minister's Economic Advisory Council. I'm going to go question by question as we do on the round table, and we'll get all of you to respond to those questions. Let's start with the first big question. What is the principal challenge facing Finance Minister Nirmala Sitharaman in this budget year? Neelkanth Mishra, why don't you kick that off? I'll get each of you to get 90 seconds to tell us, if you were Finance Minister, what would you see as your principal challenge 2 days out from the big budget?
So there is significant slack in the economy. So the very fact that the core inflation indicators are showing such low measures, and we have the economy significantly below the pre-pandemic path, suggests that there is space for the government to stimulate. But at the same time, I think it's important to make a choice between fiscal and monetary. The biggest challenge, I think, for the government right now is that it has chosen the path of fiscal conservatism, which I think is the right one. It is likely to stick to the debt to GDP path that it has guided to, 50% at the central level till FY31. But this is not reflecting in lower yields. So if the government borrows less, that should mean that the cost of borrowing in the economy should come down. There are clearly transmission issues. Some of them lie at the door of the RBI, but I think there are many challenges in front of the government as well. I think yeah, go ahead.
No, before I go to my next, just to, do you believe that maintaining the FY26 fiscal deficit at 4.4% amidst mounting infrastructure, welfare, defense expenditure post-Operation Sindoor, do you believe that that will be met? Are you confident of that? Or is that a big challenge?
Look, there has been some tax slippage. I would say that there is potentially some slippage of 70,000 crores, which is give or take about 0.1, 0.2% of GDP, 0.2% of GDP. But that, given the significant cash balance which is accumulating, I don't think should be difficult to finance. But I think the challenge is not this year. The challenge is what happens next year. And more importantly, what happens in FY28 when the pay commission hit comes to the government, and how they manage to retain the path to 50% debt to GDP. But I think the immediate challenge is much bigger, which is that despite this fiscal consolidation, despite this remarkable fiscal discipline, the cost of money in India, the cost of capital is not falling as sharply as it should.
Okay, I'll get you to expand on that later. But Sajid Chinoy, what do you believe is the principal challenge facing Finance Minister Sitharaman?
Good evening, Rajdeep. I think the principal challenge is the global backdrop against which this budget is being held. I think these are truly extraordinary times. There's a certain global order that we've come to expect over the last 80 years, which is unraveling and unraveling rapidly. This has two implications. In the near term, this is leading to a lot of financial instability globally. You've seen gold prices at record highs. People don't know if there's a risk-free asset that you can consider risk-free in the world anymore. Concerns about dollar debasement. Now, in that environment, the typical reaction for emerging markets like India is to hunker down. When there's global instability, be conservative, reduce your fiscal deficit, create buffers. But what's unique about this global environment is it's also one where, the law of the jungle has begun to prevail, and economic heft really matters for global leverage. And that would argue to go in the other direction, to be adventurous, to push on the reform pedal. So I think the challenge that is unique this time is you've got one set of forces arguing for conservatism. There's another set of forces arguing for being adventurous. And I think the way to, bring this together is I think the fiscal deficit will be conservative on the math. I think deficits will go down to reassure investors that India's macro fundamentals remain very stable. But I think this year's budget is to be not the numbers, but what happens in the budget speech. And we use the budget speech to inject much needed reforms or a continuation of the reforms in the last 6 months, and you exhibit your adventurism over there. So I think that's the balance. How do you simultaneously be conservative on the fiscal math, but be adventurous on the reform front? So you're telling people that, we're going to push hard on the growth ladder, but we're not going to do it at the risk of macroeconomic instability. It's that balance, I think, that is going to be crucial in this budget.
We'll come to specific reforms also later on the roundtable. But Pranjal Bhandari, your view, what do you see as the principal challenge facing Finance Minister Nirmala Sitharaman?
Yes, thank you very much, Rajdeep. I think there are two challenges. One is uncertain growth and the other is a weakening currency. Now, on uncertain growth, last 12 months, the growth numbers have been very good, but we can't take this for granted because a lot of one-time good things happened. For example, after a long time, there were good rains. Suddenly, oil prices fell, which is good for the economy in terms of growth. Then we had inflation falling, so the central bank could cut rates. We had all of those tax cuts, GST and personal income tax. We had enough to get us good growth numbers. But the efficacy of all of this could start to decline as we get into 2026 or FY27. And what will drive growth then in a global environment that remains uncertain? I think that's sort of like the number one challenge for the finance minister at this point of time. We can get into what I think is the right thing to do right now, but mostly I would agree with the previous speakers that it's a combination of restraint. Don't become too adventurous on the fiscal part or on the monetary policy part, and stick on with a lot of the reforms. I just want to make one point here, that this is not a T20 moment. It's like playing a test match. We don't have to hit a 6 in every ball. The scoreboard doesn't really have to look exciting at the end of every over, because I think that's how we really win this one. So we have to really get into these important reforms which get us good, meaningful, medium-term growth. And, we can speak a little bit later about both external and domestic reforms. Quickly,
in fact, that's my next question. What are the key reforms going to be? I'll come to that. But I like the T20 analogy with test matches, because remember, we are not a very good test match team at the moment. We are a brilliant T20 team. So in a strange way, with the T20 World Cup coming up in a week's time, you're telling us the finance minister should not be looking to hit the ball out of the park on day one. You're asking this to be a budget for the next 2-3 years. Am I broadly correct? Or set the direction for the next 2-3 years?
Yes, exactly. Yes.
Okay. Soumya Kanti Ghosh, your first reactions. What do you believe is the principal challenge facing Finance Minister Sitharaman?
Yeah, thank you, Rajdeep, for having me on the show. I think the budget, the primary challenge the finance minister is facing is the extraordinary global situation. I think we are living in a fragmented world, and you don't know what is going to happen today or even tomorrow. Every day the policy is changing, and that is actually creating a lot of pressure on the external environment. So when you are so that is the first thing. The second thing is that in that context, it is also creating a lot of pressure on macro variables like the rupee, the interest rate, and other factors. The third thing is that in this era of significant policy uncertainty where you don't know what is going to happen tomorrow, you don't know whether the trade deal with the US is going to materialize, it is better that we stick to the basic principles of economics in the budget. We stick to the fiscal path because we have actually has been one of the few countries which have charted a very conservative fiscal deficit target after the pandemic, and which has paid dividends to us in terms of a low inflation. And the second thing we need to do is basically do some of the reforms, continue on the reforms path. We have done a lot of reforms in the last year in terms of the macro reforms. Right now, maybe it may be the time to do some of the micro reforms, which could actually give dividends. So in my sense, I think there is nothing to do any extraordinary, but just stick on the basics and on the path of consolidation. And I think that will pay you dividend.
Nainalal Kidwai, principal challenge from an industry perspective facing the finance minister. We've seen in the economic survey itself questions being raised as to why is private investment not doing more despite all the concessions and benefits that they've got. Is that a big challenge? How do you get private investment? Net FDI is another challenge. Are those issues that you believe the finance minister will have to address create a climate where people feel a bit more confident about investing in India?
Raj, you're absolutely right. In fact, for a FICCI confidence survey which was just conducted, the three things that industry CEOs put right on top were job creation as number one, capital expenditure, to your point, and the third was export. So all three, to my mind, given the finance minister has always heard and understood what industry wants and requires, have got to be on her mind. So the job creation, I think, becomes critical in light of tariffs, which have impacted high job-intensive sectors like apparel, leather, diamonds, and therefore how we help those industries through these times, but also look at intensive job creation industries, so manufacturing to a lesser extent maybe, but the service sector, tourism, must figure in terms of the job creation element. On your point on capital expenditure, that is directly related to demand. And the GST cuts are reflective in terms of seeing that demand go up. Capacity utilizations have risen to about 75%. The sweet spot is typically around 80%. When the sweet spot, I mean that as capacity utilizations go north of 80%, industry begins to look at investing in more capital expenditure. So it's directly related to demand for goods, and that can come both from domestic demand, which the GST cuts have helped, but also from exports. And that leads me to the third point that industry CEOs had pointed out, which is exports. What we can and need to do to drive exports comes from making sure that we have cost-competitive industries. So that's every factor of production: cost of capital, cost of land, cost of electricity, cost of logistics on the one hand. And on the other, the schemes that we have dedicated ourselves to, the PLI schemes, I believe SEZs are very critical going forward. And given the success of the electronics industry, one of the asks from FICCI has been, let's look at a large-scale electronics park on the style of Shenzhen, on the style of what Vietnam has created, where the supply chain, including the OEMs, the manufacturers, all come in under one roof, and we provide the support of infrastructure and ease of doing business within these limits, and push for exports in areas like electronics, where we've already seen some success.
Nilesh Shah, as I said, I'm going to conclude with you, Nilesh, on this, on the first question, which is the principal challenge facing the finance minister. You track the markets very closely. What is the market expecting?
So I don't know about market, but let me put my expectation. India historically is known as Sone ki Chidiya, but our present situation is more like Kasturi Mrug.
Like Kasturi Mrug. We get about 2% of GDP by way of foreign direct investment. On a net basis, that amount is almost negligible. About 150% of our GDP is lying in precious metal. Majority of that is locked in Tijori parallel economy. I really want finance minister to think out of box and bring the savings which is locked in the Tijori into the bazaar. That can raise tax revenue for the government, which will allow them to spend money on capital expenditure and infrastructure. It will also put money in the pockets of entrepreneurs. They will be able to spend or they'll be able to invest. At one shot, we will be able to unlock our frozen savings and benefit economy from a growth point of view. Finance minister has trinity of impossible in front of her. Keep on spending money on capital expenditure because private investment is subdued. Yet maintain the path of fiscal prudence because you have promised to bring down debt to GDP ratio to 50% by FY31. And this can be achieved by raising non-tax revenue, asset monetization, divestment, or converting Kasturi Mruk to Sone Ki Chidiya.
I like the Sone Ke Chidiya analogy as well. But let's hit, you see, it's all very, I think everyone knows the concerns, the challenges in a way, but how do you initiate? The word reform has been used by several of you. So I'm going to ask you for specific reforms that you would have. Neelkan, you go first. What is that specific reform? The Prime Minister speaks of a reform express in 2025. And yes, there have been attempts made. The Labour Code, for example, kicks in now in a month or so. Do you believe that enough is being done? And what would you now like to see to in a way give the animal spirits of the economy, of the investors, an opportunity to actually put their money where their mouth is in a way?
So the very fact that the pace of fiscal consolidation is now easing. So we did about 80 basis points of explicit consolidation in FY25. If you include the off-balance sheet changes on the GST compensation cess, FY25 fiscal year that ended in March 25 was 130 basis points of fiscal consolidation. This year, we had 40 basis points of fiscal consolidation. In the next year, the fiscal consolidation will be lower. So in a way, the government is now done with the hard miles on fiscal consolidation. And therefore, the economy should start doing better. So there is not, I think, any pressing need to do all the fiscal stimulus in the budget itself. But you're absolutely right. I think the working environment, operating environment, from what I see, a number of the recommendations from the Rajiv Gauba committee, which is giving recommendations on a frequent basis. It's not a one-time committee. So there are several of them, including the rescinding of quality control orders, which seems very nerdy and too detailed. But I think the impact on some sectors, especially like apparel exports, can be substantial. So there are many such measures that are already underway. It would be great if some of those also are further announced in the budget speech. As we discussed earlier, there's not much room for fiscal giveaways and not much of flexibility on the budget side. And the government has attempted to make budgets much more predictable than they used to be, which is a good thing. And therefore, a number of the exciting features can come in the budget speech. And in that speech, in terms of reforms, I think greater clarity and certainty on the taxation side. This is something that, and including some of the decisions that recently came from the Supreme Court, there are new types of concerns which are emerging among investors. I think certainty on the direct tax side, simplification of procedures and processes, decriminalization of many of the potential offenses. So we are aware that many such attempts are underway in the government. They are exploring many such changes. Easing those would be too much detail. It's not very good for headlines, but they can have a substantial impact on the growth momentum over the medium term.
You know, because Sajid Chinoy, a word that I heard in Davos last week was not ease of doing business, but the speed of doing business. And yet I hear from MSMEs that many of the regulatory compliances are still far too burdensome. So in the first instance, do you believe reform, how do you make it speed of doing business if you have so many regulatory compliances still in place?
Rajdeep, you're right. I think, the whole focus on deregulation from the economic survey, is to try and improve the ease of doing business. And it's in a world where there's so much Chinese excess capacity, which threatens our small, medium enterprises. You don't want to shackle these SMEs by giving them more compliances. But let me answer your original question. What specific reform does one advocate?
Yes.
It's very clear to me what the near-term objective should be. We all agree the near-term objective has to be to jumpstart private investment. So the question is, what is ailing private investment? And in my mind, it's basically demand visibility. Balance sheets are very strong, cash levels are high, profits are high. But in a world with so much excess capacity in China, businesses need to see more visible demand. A lot of that demand has to come from exports. I've said this before, only 13 economies in the last 100 years have grown at an average of 7% for 20 years. And those 13 economies had one thing in common, very strong export growth. And, I'm very encouraged that in the last 6 months, the government has not succumbed to export pessimism and is on this, a raft of free trade deals have been signed. But the question is, what do we need to do to succeed and to create a force multiplier for those free trade deals? And in my mind, the specific reform has to be to clean up the customs duty part. The oldest adage is that an import duty is like an export tax. So I think this is a wonderful opportunity on the back of all these FTAs for the budget to attempt a significant simplification and cleaning up of import duties, tariffs, and non-tariff barriers. If in a world of global value chains, it's only when you get that ease of imports will you be able to succeed on exports. I think that's a very tangible thing the government can do. It will reinforce the impression that we are serious about export-led growth, in this difficult and hostile global environment.
I'm going to put up a graphic in a moment also, of course, of the falling rupee, because there are concerns of that. And the economic survey also admitted that the rupee is punching below its weight. But Pranjal, what is that key reform that you would like to see to ensure that we have a test match mood and not T20?
I'm going to follow on that analogy. I think we've taken some very good steps on external reforms already. We were dragging our feet on many of these trade agreements, but we've signed several of them, one with EU, one with UK, New Zealand, and many more in the offing in the next year or so. So I think that's great. We've cancelled a lot of the quality control orders. We seem to be, having a softer approach to China. At least, we've resumed some of the flights and all of that. I think these are sort of great ways to integrate back with global growth. My sense is that I think this was the missing piece why private investment wasn't taking off. Exports were very weak. But then there is one thing we've still not done, and I'm hoping that this is something we take forward, which is look east. All of this while we are looking west, we are having trade agreements with the EU, with UK. But what about looking east? What about a relationship with ASEAN, where a lot of the manufacturing happens? Can we partner with ASEAN in this global value chain? Can we be more open to Chinese FDI? Perhaps not in very sensitive or strategic goods, but what about mid-tech goods like textiles, footwear, furniture? I think a lot of partnerships can happen here. Look at Vietnam, getting all of these Chinese FDI in mid-tech goods and growing 7.5% per year. I think these are great opportunities out there that we should really try to get. And the final one is the rupee. I'm very glad that it came up in a big way in the economic survey. I think the currency at this point depreciating is not a bad thing because it's an offset to this 50% tariff that we have from the US. It helps make our exports competitive. You will never have, any economy really increasing their exports over time with a very overvalued and a very strong currency. So I think these are good steps. We're making the right noises. The economic survey had a lot of gold in it. And my sense is, I think we're on the right track. We just keep working on all of these reforms.
Before just to push you on the point you made about China, do you believe, therefore, and anyone can please feel free to dip in on that. Sajid, if you want to respond to what you heard from Pranjal, because you also spoke just now about earlier about the need to be perhaps a little bit more adventurous. Are you saying that we should be also looking at, do you agree with Pranjal that we should be looking east as well, not just at a EU deal, but looking at possible ways of strengthening trade ties with China, where we have a huge trade imbalance at the moment?
Is that for me?
Yes, yes, go ahead, sir.
No, absolutely. I completely agree with Pranjul in the following sense. The most dynamic region of the world in the next 20, 30 years is going to be Asia. Most global growth is going to come from Asia. So we need to do two things. A, we need to integrate better with Asia and have more free trade agreements with them. And I've been advocating we should be joining next after the EU deal, among the largest free trade regions, frameworks in the world, which is the CPTPP, which has got 15% of global trade flows through that. So that would be the next goal. With China, the fact is we have to learn to live with China. China has got the kind of excess capacity that nobody else has. It has the manufacturing prowess and the technological capability that nobody else has. So India will be very reliant on Chinese intermediate goods for a long period of time. The choice we can make is, do we want to import that or do we want to attract more Chinese FDI? And I'm very much in the latter camp that, I understand geopolitical considerations, but we should be thinking of easing press note 3 and attracting more Chinese FDI. That does two things. There will be some technological transfer, and that value add, a lot of that value add will accrue to India. It'll create jobs in India rather than us importing from China. So we have to learn to create a better relationship between these two. One final thing I'll say, Rajdeep, a lot of hand wringing about the rupee. The rupee is a symptom. What India needs to work on is on attracting capital flows and stable capital flows on foreign direct investment. And some of the things that have been said, including simplifying the tariff regime, import tariff regime, simplifying some of the restraints on China will help us attract more FDI.
Soumya Kanti Ghosh, what structural reforms are needed to sustain the FDI inflows in a volatile global environment? I look at RBI data, November 2025 saw net FDI outflow of $446 million. This comes on the back of $1.67 billion of outflow in October. So this is another major challenge. Do you see the budget providing any kind of direction in terms of structural reforms that are needed?
Yeah, thank you, Rajiv. I think I will venture out a little differently in terms of addressing the reforms which needs to be done at this point of time. While I agree with the fact that custom rationalization is the need of the hour, because we have done on the direct taxes first, then you have addressed the indirect taxes. Now is the time to clean up the customs stack. But apart from that, on the rupee front, if you're asking me, from the last January 25 till January 2026 till today, there's been total outflow of around 17 billion US. So as long as this portfolio is capital flow doesn't stabilize, I think I don't see the rupees settling soon at the current level. It will continue to be volatile, and it will also depend on how the pace of the other trade deals.
No, but should we be concerned about it? Some of the guests suggest we shouldn't be too concerned about it. Do you believe we should be concerned about a volatile rupee?
See, at the end of the day, I think there is both an yes and a no to it. Yes, there is some part, there should be a little amount of concern in the sense that if the rupee continues to depreciate, there could be a self-fulfilling prophecy of declining it further. On the other hand, the argument that rupee could act as a shock absorber is also correct. But in my sense, I think continued depreciation of the rupee also sometimes creates a self-fulfilling prophecy, which could take it down to lower levels, and which is exactly has been emphasized in the economic survey, where we're saying that the rupee is actually punching much below its weight. Because if you look at the trade deficit data of the last year and this year, it is hardly any different. So there is no macroeconomic reason to suggest that why the rupee should be depreciating. So keeping aside those facts, I think there are a couple of reforms which I would like to mention. I think the first thing is on the agricultural sector. I think for the last couple of years, we have done a lot on the SME sector. We have introduced a credit guarantee scheme, which has been largely successful. I think now is the time for the agricultural sector maybe to unveil an omnibus credit guarantee scheme which exists from the SME sector, and also to redefine the agricultural value chain in the Indian context, so that the sector gets fund and investment, which is unfortunately a little absent in India. The second important thing, which is also very important for a country like India for the ease of living, is the urban infrastructure. You have seen that how cities after cities in India last year has been ravaged by floods and urban infrastructure. So I think it's high time now that the local bodies, specifically the urban and the rural local bodies, and also the government takes up the reforms of the urban infrastructure in the right earnest. I think the government has made the move in the right direction in the past. It's now high time that is actually operationalizing it. The final point which I will mention is also a very important point, is that I think the government has introduced a very successful land scheme, cardholder scheme, which is called the Shramik scheme for the rural households. I think the time has come possibly for the urban households to have a scheme like that. If we can introduce a scheme whereby you give property cards to the urban population, that actually would also help in urbanization, making it competitive for the industry to know which urban piece of land they can use for industrialization. Because as of today, it's a very politically sensitive issue in the Indian context, these land reforms or this taking up lands for industrial purposes. So I think some sort of reforms in this sector would help a long way in making the urban land market competitive and also help in the urban infrastructural process, which we badly need today.
Nirmala Gidwai, again from Davos, one senior global economist told me if there were 3 things he would do for the Indian economy, it would be find ways to increase rural productivity, look at urban governance, and look at skilling. Now, these are 3 areas which the budget can't tackle all of this. But if you were to pick one area where you believe the reform thrust now should be there, what should it be?
So I would just go back to an ask that comes every year, and that is the whole area of tax clarity. And it cuts across every industry. So you take the example of the GCCs, big service providers across the world, large employers, 1,600 of them now in India. Is there clarity in every one of their minds on how transfer pricing will work, how ESOPs will work? What is that national framework and structure that they can plan on as they go forward and possibly as we look to attract more? So I do think that the way our tax regimes are very complicated, muddy the works. And it's going to be very critical to have a principle by which we can actually set these frameworks in advance so that companies come in not trying to evade tax, but they get caught in the crosshairs of interpretation and then all the issues that follow. And related to that in reforms is the whole area of dispute settlement. I've seen a statistics which also says that the CITAs, there's 40% vacancies therein. So we need to resource the departments. We need to make sure that the dispute settlement happens quickly and indeed cut down the sheer degree of disputes, for which those reforms are internal and actually, I think, quite easy because we're not dependent on the rest of the world or tariffs or any of the headwinds outside. So let's sort these out. In fact, in the same FICCI CEO survey, 80% of the respondents said customs reform. This is very much, again, in our space and something that we've just got to tackle. So looking at the way we handle our own house at times when we can't predict what's happening from outside in terms of tariffs may be important. And otherwise, I agree, as I had also said, exports are critical. Skilling is, of course, important. In fact, FICCI put forward a wonderful idea on a sort of youth skilling scheme where folks at the age of 21 to 30 can be deployed for public services. So they can come in for sanitation, for helping in rural surveys, in various ways, which brings them into the economy, gives them that earning, and anything that comes into the earning mechanism also creates demand, and therefore I would hope capital expenditure from the private sector.
Where a lot of schemes have been announced in recent times, the internship scheme, for example, was announced, but when you look at the ground, those schemes actually haven't translated into the kind of action. Now, this is not just the center, but the states. A lot of focus is on the union budget. I think state budgets and state finances need to be looked at. But I'll give you, Nilesh, what is that big reform you'd like to see, and then go to Neelkant.
So the one big reform I would like to see is to set up Ease of Doing Business Commission, a regulatory authority where any entrepreneur who is burdened by compliance rules, regulation, can reach out and
coordinate across central, state and local government to provide solutions to the entrepreneur. It should also have authority to remove many of the unnecessary compliance burden. Ease of Doing Business Commission a commission where an entrepreneur can reach out 24/7, 365 days a year is the need of the hour.
Okay, the ease of doing business commission. We'll try and get your audio fixed in a moment. But Neelkant, you're hearing these various ideas. As I said, there are lots of ideas, and you cannot fault the Modi government for throwing up ideas. Startup India, Stand Up India. There was an internship scheme announced last time around. A lot of these schemes are well-intentioned, no doubt. But the execution at times, it depends on which part of the country. State finances are a big issue. We focus a lot on the union budget. The economic survey also expressed their concern about the number of states that are experiencing high revenue deficits. Does the budget need to give some kind of a signaling as well to the states?
Let's see what the Finance Commission has to say. Remember that in all of this discussion, we are assuming status quo on the Finance Commission side, and this is around this budget. The 16th Finance Commission will also be submitting its recommendations. So it is quite possible, given that the fiscal largesse, the fiscal indiscipline that is very clearly visible in many of the states, is hurting longer-term growth potential. It is up to the Finance Commission to actually create weights and measures, incentives and disincentives, which influence the transfers to the state. So it is quite
because
possible.
You see, because there's a feeling, just to push that, Neelkant, is that the government's one eye, and it's been said in past budgets, has been on which states are going to the polls. And therefore, those states get, in the budget also, schemes are announced for those states. You saw immediately after the 2024 elections, Bihar and Andhra Pradesh were the flavor of the season. Do we need, in a way, the budget to do that? Or do you believe the Finance Commission should be now looking at much more closely at the way states are spending money? The budget needs to give the big picture.
Exactly. So the budget does not have the discretion. So the center does not have the discretion to allot or allocate specific funds to states in the budget. So the Consolidated Fund of India cannot make subjective decisions. So some of the schemes that got a lot of publicity in the media for Bihar and Andhra Pradesh were about PSUs announcing specific projects. That's not part of the Consolidated Fund. The state-specific measures and the incentives and disincentives need to be a part of the Finance Commission recommendation. So if there are revenue deficit grants, if there are specific incentives that the Finance Commission can create, that if your capex to GDP is so much, then you get maybe a few tens of basis points higher funds, which can, in its entirety, can be substantial in terms of the absolute amounts. I think those changes can happen there. The center has created, in fact, this is something the economic survey also flags, that this 1.5 lakh crore interest-free loan for states for doing capex has actually helped support the capital expenditure at the state level. So if this was not the case, and this also comes with certain conditions, if you have to meet certain conditions to be eligible for this, if this was not the case, the state capex would have been a lot lower. Those are some very interesting charts in the economic survey as well. So there are measures. Maybe this 1.5 lakh crores can be made 2 lakh crores. Maybe there's some additional conditions that can be put in. But remember that if you try to go too tight, you are actually creating a longer-term federal problem. So one of the reasons the 14th Finance Commission had advocated against too much of discretion being given to the center and allowing more fiscal freedoms to the states was exactly to let the federal polity work. In fact, what I would be a strong votary of is that the states themselves, though of course this has nothing to do with the union budget, but the states themselves focus a lot more on the state finance commissions and start thinking about tier 3 devolution, because some of the challenges on the urban side can only be tackled at scale. You can have the chief minister drive urban infrastructure and financing for one city or two cities, but the bandwidth will not be there. So the only way to handle it systematically for 500 and 1,000 towns and cities is to allow tier 3 devolution to happen. But that's not a topic for this union budget.
Sure. I just wanted to for a moment only focus on state finances, because as I said, we focus a lot on union budgets and don't look at state budgets across the country. But back to the big final question, what is your forecast for the Indian economy is a question I want to pose at the end to all of you in 2026. And importantly, the question that's been a running theme, how should the government respond to global headwinds? Sajid, you want to go with that? What is your forecast, therefore, for 2026? And an area we didn't speak about a bit, disinvestment. There's a lot of talk of deregulation and disinvestment being pushed through in this budget. What is your forecast for the Indian economy in 2026 in the first instance?
A couple of things, Rajiv. One is that India is clearly experiencing cyclical recovery. Pranjal touched upon this. 2025 saw lots of cyclical supports, your income tax cuts, GST cuts, rate cuts, regulatory easing, a strong monsoon, and that's going to drive growth for the next 2 or 3 quarters. But the budget needs to be thinking about the morning after. What happens when these cyclical impulses fade? And there, my suggestion for a long time has to be that if private investment has to pick up, you need to boost demand more structurally. You need to boost demand more structurally, both in terms of exports and in terms of consumption. We spoke about what needs to be done on exports. On consumption, really, it's about how do you boost labor incomes over the next decade. We're in this crazy time where there's this race between capital and labor. And the only way that labor will be able to compete with this inexorable capital productivity is, a mission-like mode on education, on skilling, on health. I know these are boring things. They've been said before, but I think this is absolutely crucial. Without that, labor will struggle to compete with capital. Without that, we won't get the labor incomes that are going to drive consumption. So I'll just say that in the next few quarters, growth is going to remain strong. This is a cyclical upspring, pickup, but we need to ensure that this recovery continues. I'll end with the analogy that Pranjal made on the T20 in the test match. I think on macroeconomic stability, it's okay to be in test match mode. Right, on fiscal build buffers, monetary build buffers. But when it comes to reforms, we have to think we're on a T20 match. We can't be on the reform front taking a test match approach, because let me tell you, in 22 years, by 2046 or 2047, our demographic dividend peaks. So the next 20 years are going to be absolutely crucial. After that, our working age population goes to zero. And it's very hard, as China is finding out, to get 7-8% growth when your working age population goes to zero. So yes, on macroeconomic stability, go the test match mode. On reforms, we're in the midst of a frenetic T20 against a very hostile global backdrop.
Pranjal, you want to respond?
No, absolutely agree. And I would say that I think...
And your forecast as well.
Sure. I have a 4-point agenda on the economy. Number 1, restraint, have fiscal restraint, maintain your macroeconomic stability, very important in an uncertain world. Number 2, continue with all of these external reforms you've been doing, like bringing down protectionism, signing trade deals, but please also look east, not just west. Third, all the domestic reforms that you're doing on deregulation is great. I call it hard reforms, but also think of the soft reforms like tax certainty, which Nirmala was speaking about. And fourth, maintain a flexible exchange rate, because it can be the number 1 shock absorber at a time when there's so much of global volatility. I think if we follow these 4, we're in a good way. In terms of GDP growth forecasts, because there's so much of uncertainty, I would sort of put it in the 6.5% to 7% range. Yesterday's economic survey, pointed at about a 7%. I would be a little lower than that. I just want to go in a little conservatively in a very uncertain year.
Okay. Nainalal Kidwai, your forecast for... Soumya, why don't you go first and then I'll come to Naina. Soumya Kanti Ghosh, your forecast for 2026.
Yeah, I think on a growth perspective, we are actually for a growth rate of around 7% for the FY27. But as I pointed out earlier, I think we need to do the things which we're doing. We need not go for any extravagant things, because I think a lot of these extravagance and what is going to happen in the next couple of months, we're going to see from the countries like US in terms of geo-fragmentation, and that is only likely to increase. So in an increasingly fragmented world where nothing is uncertain, I think what we can make certain is our policy trajectory. And apart from the various policies which other panelists have mentioned, I will again harp on a couple of things. First is that on the ease of living. I think on that ease of living, the government has actually initiated a lot of macro reforms. Maybe is the now time for micro reforms from an urban infrastructure perspective. The second point which I'd like to know is, say is that maybe now is the time to go for some of the reforms which are a little bit sensitive reforms. As I said to you, agriculture is one of the sectors where price discovery has almost been absent in the last the couple of decades. We have tried to do it, but it is always a sensitive issue. And maybe is now the time to come to do some sort of a price sensitivity, because a large part of the Indian population still lives in the rural areas. And finally, I think on the fiscal front, and as Nilkant was mentioning in terms of the Finance Commission recommendation, of course, the FC recommendation will be out in the next couple of days. But the only thing which we can say at this point of time is it's important that we maintain on this part of fiscal consolidation, debt consolidation, and also on the part of the states also. Because after all, India is a union of 28 states and the center, apart from the union territories.
Nainalal Kidwai, is business bullish about 2026, or is business very worried about the uncertainty? Again, taking off from Davos, on camera, people say all is good. Most industrialists will give 11 on 10 to the budget, whatever Nirmala Sitharaman says. But there are those who privately speak otherwise. And there is a bit of a fear factor there, that there is concern because of the uncertainty and anxiety.
I can only say, harking back to the same FICCI survey, that the mood was pretty optimistic, that there is a belief that India will achieve the 7%. And I think it comes from some of the demand-related reforms that had set in over the last year. And the hope, therefore, that as demand builds, there will be reason to go in for more capital expenditure. I would also like to believe that there is room, even while we look at fiscal constraint, to up infrastructure spend. And I know that these are contradictory, but I believe this is possible because finally InvITs and REITs have taken off. And the ability for government to securitize its assets by chucking those assets which are indeed yield returning or interest bearing, throw them into these InvITs, and in the process, therefore, free up that money to go back into infrastructure. So while looking at fiscal constraint, to just make the infrastructure that's already there work for us to be able to create more of that infrastructure, because infrastructure spend has been a huge success from this government. It brings logistics reductions, it helps industry, and as we've well seen, it kickstarts the economy. So I would hope that we will continue to see some reforms in the bond markets, which are again critical by bringing in long-term finance, and by maybe even tweaking again the capital gains tax on the way bonds and bond savings are indeed being treated. We bring the mojo back into our bond markets.
Nilesh, are you bullish about the economy in 2026, or should we be very cautious?
I'm bullish on the economy. Of course, there are worries in terms of monsoon. This year we might get impacted by El Nino. But my expectation from the budget will be, it will be a budget where there will be a part to ensure that there is revenue surplus on a sustainable basis. And CapEx is higher than the net borrowing program. Last year, the budgeted CapEx was 11.2 lakh crore, and the net borrowing program was 11.5 lakh crore. I hope this year, the borrowing program is less than the CapEx.
Okay, I just have a minute or two on the show. I thought we'll do a, if you were Nirmala Sitharaman, would you be sleeping well at the moment for the next 24, 48 hours? Nilkant Mishra, would you want to be the finance minister in the times in which we live?
It is definitely a very challenging task to maintain on the course, sustain on the course of fiscal consolidation, even at a time of severe global volatility. There are so many claimants for the limited fiscal resource that are available. To actually use this opportunity of macroeconomic stability that exists within India to drive structural reforms, take long-term risks. So definitely a taxing job, but we've seen some remarkable success over the last 6-7 years, and I think we should be optimistic about the future as well.
Sajid Chinoy, Would you sleep well if you were the country's finance minister over the next 24, 48 hours ahead of a budget with global headwinds? Who knows what Donald Trump does tomorrow morning?
I think at this point in time, no policymaker around the world can sleep well, given the global volatility. But, I want to underscore the fact that India still, we shouldn't forget, is still a relative beacon of macro stability. Our fiscal, over the last few years, what we've seen with the government is to under-promise and over-deliver on the fiscal. So we have been gradually building buffers in the last few years, whether it's fiscal, whether it was monetary, whether it's the exchange rate. So I think we should take comfort from the fact that macroeconomic stability is assured, and I'm sure the budget on Sunday will reinforce that. The question is, as we remain conservative of macro stability, how do we also simultaneously become more adventurous and continue the reform impetus that, that has started the last 4 or 5 months? I think that balancing act will be the key challenge.
Okay, so final word to you, Pranjal, since you gave the T20 test match analogy. You said finance minister should look at this as test match and not T20. There's also 50 overs. So you need both, don't you? You need to have a few things that you accelerate and a few things you're cautious of. Would that be a more balanced approach to take?
Yes, basically, continue to persevere was my point. And, if I was finance minister, I would sleep well because the country is doing a lot more reforms right now than we were doing same time last year. We've been able to do things like signing trade deals with countries in which we were dragging our feet for 10 to 20 years. So I think we've come a long way, and there's a big task cut out for the future as well. So I need to sleep well. So I'm sort of 100% energy for that too. So I think, it's a very difficult time, but we're doing the right things. I think we're doing reforms. We have to accelerate some. We have to persevere on some. I would say, again, this is a test match.
Okay, let's leave it at that point. I think it isn't easy in these times of global headwinds and the uncertainty it causes, but I'm glad that we had such a fine panel of voices who've given us a chart of what lies ahead. And I want to thank each and every one of you for taking the time, for joining us on the budget roundtable ahead of Union Budget 2026. Thank you to each and every one of you. And to you, the viewers, thanks for watching. Stay well, stay safe. Jai Hind, Namaskar.
Nirmala Sitharaman would be to maintain stability amidst volatile geo-economic situation.
What will this budget mean for the average taxpayer and the common citizen?
And how will the reforms expressed continue to be on track in 2026?
Join my colleagues Maria Shakil and Siddharth Zarabi budget coverage of Modinomics 2026.
See you there.
इस वक्त हमारे साथ छगन भुजबल जी हैं। भुजबल जी, अजीत पवार फैक्शन की तरफ से महाराष्ट्र को जो एक महिला डेप्यूटी चीफ मिनिस्टर मिल गई है, क्या आप लोगों ने कभी सोचा कि चीफ मिनिस्टर भी बनाना है?
हम तो देखिए, हम फुले शाहू अम्बेडकर की राह पर चलने वाले, हम तो चाहते हैं कि महिला मुख्यमंत्री भी बननी चाहिए। सारी बड़े बड़ी जगह के ऊपर जो है महिला हमको दिखनी चाहिए। और ये एक बात है कि अभी वो जो हादसा हुआ है उसके पार्श्वभूमि पर जो है ये सब प्रोग्राम हुआ, करना पड़ा, क्योंकि 3 दिन के बाद कितना दिन हम रुकते थे।
लेकिन वही बात तो बहुत सारे
चर्चा शुरू,
बहुत सारे लोग तो इसी बात के कह रहे हैं कि कितनी जल्दी क्या थी, अभी तो शोक खत्म भी नहीं हुआ था।
अभी भी शोक खत्म, फिर भी आप ही लोग जो है पहले दिन से पूछ रहे हैं कि मर्जर का क्या होगा, तो उसमें जल्दबाजी नहीं है। तो ये अपनी अपनी जो समझ की बात है, कोई बोले 3 दिन 4 दिन जल्दी हो, कोई बोले लेट हो। हम तो चाहते हैं कि दिल्ली में दूसरे दिन उसी दिन जो है शपथ ली गई है, ये भी देखा है हमने।
Joy and celebrations are in the air as filmmaker Atlee and his wife Priya announced they are expecting their second child. The duo took to social media to share the happy news, offering a glimpse into their growing family. The announcement featured the family dressed in coordinated white outfits, with Priya gently cradling her baby bump. Adding to the charm of the reveal, the couple also lovingly mentioned their pets, a detail that has been winning hearts online and making the announcement even more intimate. Fans and celebrities including Samantha Ruth Prabhu and Kirti Suresh flooded the comments with congratulatory messages. The couple tied the knot in 2014 and welcomed their son Mir in January 2023. Professionally, Atlee is currently working on the tentatively titled AA22 into A6, starring Allu Arjun and Deepika Padukone in prominent roles. In the age of soft launches and silent confirmations, Disha Patni may have just dropped the loudest hint without saying a word. A new video of the actor alongside Punjabi singer Talvinder has surfaced on the internet. In the viral clip from Lollapalooza, India, the duo is seen holding hands amid the speculation about their romance. As the rumored couple strolled through the festival together, fans were quick to react, with many wondering if this subtle public moment was their way of going official minus the announcement. Interestingly, in an earlier video from the same event, the Bollywood actor and Punjabi singer were seen entering the venue separately. Now, this isn't the first time the two have sparked dating buzz. During the wedding celebrations of Nupur Sanan and Stebin Ben in Udaipur, a video emerged of Disha socializing with guests while holding the arm of a man many viewers identified as Talvinder. The two were also spotted together at the Udaipur airport as they were leaving for Mumbai. Despite the growing speculation, neither Disha nor Talvinder has addressed the rumors or spoken publicly about their alleged relationship.
Make your media plan smarter with India Today Live TV on your connected devices. Amplify your brand with 100 million smart internet viewers. To advertise, mail us at sales@aajtak.com.
बहुत ही ज्यादा अगर आप देखें तो सुनेत्रा पवार जी के चेहरे पर भी एक मुस्कान भी नहीं है आ सकती है।
मुझे लगता है कि अभी सुनेत्रा पवार अजीत पवार जी की पत्नी थी और 3-4 दिन पहले ही अजीत दादा का जो एयरपोर्ट क्रैश में मृत्यु हुआ है और महाराष्ट्र में पहली घटना ऐसी हुई है, तो राष्ट्रवादी कांग्रेस पार्टी ने निर्णय लिया कि अजीत दादा तो चले गए हैं, फिर अजीत दादा की याद रखने के लिए उनकी पत्नी को ही मतलब डिप्टी सीएम बनाना आवश्यक है, पार्टी का अध्यक्ष बनाना आवश्यक है। इसीलिए उन्होंने मतलब ये निर्णय लिया। ये तो जल्दी शपथ हुआ ये बात सही है, लेकिन राष्ट्रवादी कांग्रेस पार्टी ने निर्णय लिया, माननीय देवेंद्र फडणवीस ने उसको मान्यता दी और आज सुनेत्रा अजीत पवार जी ने शपथ ली है और पहली बार महाराष्ट्र की महिला डिप्टी सीएम बनी है।
लेकिन अठावे जी, बहुत सारे लोग कह रहे हैं कि अभी तो शोक चल ही रहा था, इतनी जल्दबाजी क्या थी, किस बात की?
जल्दबाजी का विषय नहीं है। अभी जल्दबाजी अजीत दादा भी ऐसे थे कि अगर कोई ऐसा दुख का कोई प्रसंग आता है तो उसके बाद अजीत दादा दूसरे दिन काम पे लगते थे। तो जो मतलब अब पवार फैमिली है, पवार साहब, शरद पवार साहब भी है, वो भी मतलब काम पे लगे हैं। तो मुझे लगता है कि बहुत जल्दी हुआ है बात तो सही है, लेकिन अजीत दादा का अधूरा काम पूरा करने के लिए अजीत दादा हमेशा का काम करने वाले थे, तो उनकी याद अगर रखनी है तो जल्दी ये प्रोग्राम होना चाहिए था। इसीलिए राष्ट्रवादी कांग्रेस पार्टी ने निर्णय लिया और आज सुनेत्रा पवार जी का शपथ हुआ है और वो जो महिला डिप्टी सीएम है पहली महाराष्ट्र में बनी है, वो अजीत दादा को याद रखकर अजीत दादा जिस तरह काम करते थे उस तरह
मर्जर की भी बात हो रही है। शरद पवार फैक्शन जो है वो कह रहा है कि मर्जर की भी बात हो रही है। आपको लगता है ये मर्जर होगा इस तरह से?
हाँ, उसके बारे में मुझे मालूम नहीं है। अभी मर्जर के लिए डिफिकल्टी ये है कि भाई शरद पवार साहब अगर एनडीए में महायुति में आना चाहते हैं तो ही मतलब दोनों का एक साथ आना हो सकता है। तो इसीलिए मुझे लगता है कि
स्वागत होगा।
अगर वो आते हैं तो उनका तो स्वागत है।
Make your media plan smarter with India Today Live TV on your connected devices. Amplify your brand with 100 million smart internet viewers. To advertise, mail us at sales@aajtak.com.
बंगाल की जनता को अपील करने के लिए आया हूं कि बंगाल की अस्मिता का विरोध करने वाली तृणमूल कांग्रेस को अगले चुनाव में मूल समेत उखाड़ कर फेंक दीजिए और यहां एक राष्ट्रभक्तों की सरकार लाइए। मैंने शुरुआत में कहा, आनंदपुर में लगी आग ये कोई हादसा नहीं है। 25 लोगों की जान गई है, 27 लोग लापता है। और एक कांड क्यों हुआ? क्यों हुआ? ये जो मोमो फैक्ट्री के मालिक है उसमें किसका पैसा लगा है? ये मोमो फैक्ट्री के मालिक किसके नजदीकी है? किसके साथ? विमान में मोमो फैक्ट्री के मालिक विदेश की टूर लगाए हैं और अब तक मोमो फैक्ट्री के मालिक का अरेस्ट क्यों नहीं हुआ है? भाइयों बहनों, आज 25 लोग मारे गए, 27 लोग लापता है। मैं ममता जी को पूछना चाहता हूं, अगर ये घुसपैठिए होते तो आपका रिएक्शन ऐसा ही होता क्या? अरे बंगाल के नागरिक मारे गए हैं, इसमें वोट बैंक की पॉलिटिक्स क्या कर रही हो ममता जी? आपको शर्म आनी चाहिए, शर्म आनी चाहिए। और मैं आज यहां से बंगाल की मुख्यमंत्री को मांग कर रहा हूं कि इस हादसे की तटस्थ जांच, न्यायिक जांच करानी चाहिए और सबसे पहले इसके लिए जिम्मेदार लोग जो है उनको जेल की सलाखों के पीछे डालना चाहिए। मुझे शुभेंदु जी बता रहे थे, समीक भाई बता रहे थे, परिवार को वो मिलने गए, हमारे कार्यकर्ताओं ने विरोध किया, उन पर पुलिस ने बर्बरता की। मगर ये ममता जी, आपकी पार्टी का और आपकी सरकार का भ्रष्टाचार अब छिप नहीं सकता। आनंदपुर वेयर हाउस का
Make your media plan smarter with India Today Live TV on your connected devices. Amplify your brand with 100 million smart internet viewers. To advertise, mail us at sales@aajtak.com. Make your media plan smarter with India Today Live TV on your connected devices. Amplify your brand with 100 million smart internet viewers. To advertise, mail us at sales@aajtak.com.
Presented by the all-new Kia Seltos, badass forever. Special partner SBI Life, अपने लिए अपनों के लिए. Exchange partner NSE, enabling a billion dreams.
So sorry.
अरे मित्रों, भाइयों बहनों, दोस्तों, अरे सुनो सुनो सुनो। खुशहाल रहना है तो काम करो प्यारे, मेरे हर रिफॉर्म को सलाम करो प्यारे। अरे खुशहाल रहना है तो काम करो प्यारे, मेरे हर रिफॉर्म को सलाम करो प्यारे। मेरी सरकार कमी होने नहीं देगी, बजट से उम्मीद कभी खोने नहीं देगी। मिल के हमारे साथ साथ चलो प्यारे, हाथों में लेके सब हाथ चलो प्यारे 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 प्यारे। विकसित भारत के ख्वाब होंगे पूरे, कृषि टैक्स रिफॉर्म न रहेंगे अधूरे, रह जाए सब दिल थाम कर प्यारे, हाथ जोड़ सबको सलाम कर प्यारे। मेरी सरकार कमी होने नहीं देगी, बजट से उम्मीद कभी खोने नहीं देगी। खुशहाल रहना है तो काम कर प्यारे, मेरे हर रिफॉर्म को सलाम करो प्यारे प्यारे प्यारे।
Presented by the all-new Kia Seltos, badass forever. Special partner SBI Life, अपने लिए अपनों के लिए. Exchange partner NSE, enabling a billion dreams.
It's a first Sunday ever for a union budget as Finance Minister Nirmala Sitharaman creates history by presenting 9th consecutive budget of the Modi government. Hello everyone, this is our special broadcast. Over the next few hours, we'll try and decode the big numbers, but also give you the picture of the health of the Indian economy. Remember, this is a big moment for India, you and me. And this machine right here, the budget dashboard, will give you a sense of how we are looking at in terms of how the numbers will be playing out as well. But first up, a look at the headlines now. All eyes on Finance Minister Nirmala Sitharaman, who will be laying a roadmap for Viksit Bharat, taxes reforms and a growth push. Spotlight will be on part B of Finance Minister's speech, which will have the reform roadmap. In a record, Finance Minister Nirmala Sitharaman will be presenting her 9th straight union budget, the first union budget to be presented on a Sunday. Stocks and commodities markets are open today. Amidst global uncertainties and Trump tariffs, Finance Minister's budget has her task cut out. The question is, will it sustain India's growth momentum? Amidst dwindling government revenues due to tax cuts, support for jobs, manufacturing and MSMEs remain key challenges. But SOPs for poll-bound states and capital expenditure on infra may remain centerpiece. Mr. Piyush Goyal hails India-European Union trade agreement and an exclusive conversation with India today. A day before the union budget outlines key outcomes from the mother of all deals.
India has the potential, and 140 crore Indians today have made it a collective vision to make India a developed and prosperous nation by 2047. So it's a very holistic, comprehensive vision of a developed India that we are working on.
Filmmaker Rohit Shetty has been targeted. Firing has happened at Rohit Shetty's house in Mumbai's Juhu. Cops probe incident to identify the perpetrators. In moments from now, Finance Minister Nirmala Sitharaman will present her 9th union budget at a time when India is growing faster than any major economy, yet facing global headwinds. Remember, the economic survey projects growth of 6.5 to 7%, but also flags weak consumption, food inflation, risks, and concerns over the quality of jobs. This budget is therefore not just about numbers, it is about direction. Will the government stay the course on the capex-led growth or shift focus to consumption relief? Will fiscal discipline hold or give way to political pressure? Remember, last year's budget laid the foundation. This will decide whether growth translates into lived prosperity. The economic survey has given the diagnosis. The question is, will this budget deliver that prescription? You're watching a special coverage on India Today on the union budget. But first up, there's a piece of breaking news that is coming in now. All eyes are on the union budget. In an hour and a half from now, Finance Minister Nirmala Sitharaman will leave her home and head straight to Kartavya Bhavan. That will be where the first photo opportunity will happen with Finance Minister and the entire team which has drafted this budget. Will this budget be about jobs, infrastructure, political sops as well in 5 poll-bound states? Remember, there are 5 states which go to polls in the next 2.5 months. Finance Minister's vision of growth will become clear, but the big takeaway will also be about Part B of the speech of the budget. Part B of Finance Minister Nirmala Sitharaman's speech, which is going to be longer perhaps. That will be read again by the Finance Minister. This is for the first time it is happening in all these 75 years. Remember, the first budget, of course, was presented in independent India in 1947. And the question is, she is all set to present the budget in Parliament in few hours from now. The budget speech, of course, is going to begin at 11 a.m., wherein the Finance Minister will be laying out the key economic figures and the government's development plans for the upcoming fiscal year. But in what will be a marked shift from what we have seen in all the budgets presented by multiple finance ministers since independence would be that she will be speaking about the Part B of this budget. And that's where the details of the custom reforms are likely to come from. That's where the details of the reform express of the Modi government is likely to come from. Remember, this is the budget which is expected to accelerate India's journey towards Viksit Bharat 2047, coming at a time when the rupee has hit an all-time low and the economy is battling global uncertainties. There are external factors at play, like the US tariffs and geopolitical tensions. Finance Minister may focus on simplifying regulations and pushing structural reforms to attract domestic and foreign investment. That's going to be the big takeaway. And despite the tight purse strings, the Finance Minister is expected to cut spending and may include new measures, particularly for the 5 poll-bound states, where the mother of all battles will be playing out in the next 2 months, ladies and gentlemen. That's West Bengal, Tamil Nadu, Kerala and Assam. As we have seen in the past, when the focus was on poll-bound states, particularly Bihar, and also an effort to reach out again to the NDA partners, which included Chandrababu Naidu's Andhra Pradesh. So what are the big pillars on which this budget is likely to rest? What should we be seeing as the big takeaways? But first up, let's go straight to where Finance Minister Nirmala Sitharaman lives. That is her residence. I'm going to bring in Piyush Mishra now. Karishma Asudani is joining me from Finance Ministry. Remember, Finance Ministry has shifted now from a North Block to Kartavya Bhavan. And that's where the photo opportunity is likely to happen. Karishma, you're looking bright this Sunday morning, the first budget ever to be presented on a Sunday. That's where Finance Minister is going to be doing the first photo opportunity with the entire team which has drafted the budget.
Well, Mara,
Karishma, if you heard me.
This is a new venue, new team of Finance Minister Nirmala Sitharaman, and the same old process of budget, but with a twist, with the flavor of more importance given to Part B, which you also mentioned, of course, about Maria. And let me bring this straight to our viewers that the average 80-minute speech that Finance Minister Nirmala Sitharaman usually delivers on a budget day has about 35 minutes that's denoted to Part B, which consists of direct and indirect taxes. But this time, while the focus is going to be more on on Part B, we are expecting big reforms coming out of the indirect taxation. And this is how the government is playing out its deregulation part, which has also been discussed at international platforms, where IMF has also shared that Indian government now moving towards deregulating and simplifying its already existing reforms is only a way that it's paving towards its growth path of 2047. So expect a lot of big bang reforms today coming on customs front, also because India has been at the cusp of signing many trade deals, and 2025-2026 is the year where amidst all the geopolitical action and external headwinds, India is taking its own little silver lining out there by diversifying its markets and making its relationships stronger on the trade front. So today's expectation of the union budget is going to be on simplifying its customs reforms, on simplifying regulations pertaining to import tariffs, and making trade deals easier and flexible and better for the countries. Besides that, of course, expect a strong economic reform policy towards 2047, stronger financials in terms of its fiscal path that the finance minister, of course, has been reiterating for years.
Okay, so Karishma has given us one of the big talking points which was likely to emerge. Karishma, they're speaking about the custom reforms. Remember, there has been enough and more indications which has come in from multiple quarters, and that has been the feedback which has come in also from the industry, that custom reforms must be brought in, because it's getting difficult for the businesses to come to India despite FTAs. Remember, in the last 1.5 years alone, close to 6 free trade agreements have been inked. I had spoken to Commerce and Industry Minister, Mr. Piyush Goyal, who had spoken about what is going to be the likely direction as far as the industry is concerned. But first up, remember, the big takeaway of multiple budgets, remember, this is the 13th budget of Prime Minister Narendra Modi, has been about the spending in social sector. One such sector is Awas Yojana, which is the residential scheme, the home scheme of this government. Just look at this graph, which is very clear that it has been consistently going up. Financial year 2020, 21, 22, it of course peaked at that time. That is the year just after the COVID. 24, it did go down because, and then it went up last year. This time, the projection is 73K. It is likely to go up again because the sense certainly is that this is an area which needs more spending. This is the social sector. We have been speaking about it. That's what the larger focus of the budget is likely to be. Let me bring in Piyush now. Piyush, the Ayushman Bharat Yojana or Prime Minister Awas Yojana, these are key focus areas of this government, and it becomes particularly important in the backdrop of the elections. 5 states which are going to polls, of which the BJP is very keen, particularly in ensuring that it is able to get its strategy right in the state of Bengal.
Well, that's right, Mari. You would remember that last time when Nirmala Sitharaman had presented the budget, we had seen the announcements having a huge impact on the elections, especially in Delhi Assembly elections. Remember that huge tax relief was given to the common man, following which we saw how BJP had a very good performance in the state of, in national capital, and following which it was also able to form the government. And like you rightly mentioned that yes, the schemes like Ayushman Yojana, the schemes like Pradhan Mantri Kisan Nidhi Yojana, direct benefit transfers, all these schemes will have a lot of impact. The sources within the government, Maria, have indicated that the age limit could be decreased from 70 to 60 in Ayushman Bharat Yojana, which is going to give benefit to thousands of people who are above the age of 60. As far as Kisan Samman Nidhi is concerned, what we are also given to understand is that it could be increased from 6,000 to 9,000. So we can expect a 50% increase in that scheme. Also, apart from that, announcement in the sector of railways could be made. More than 300 new 300 new trains are likely to be announced. At the same time, more and more benefits could be given to the common man, the salaried person. More tax relaxations could be announced. It could be increased from 75% to 1 lakh if we talk about the standard deduction. So there are multiple things which we have already got the idea from economic survey, which has indicated countries' growth between 6.8% to 7.2%. So all these things are likely to be announced, and that announcement will begin at 11 a.m. But before that, a lot of things have to happen. Right now, I'm present here at Nirmala Sitharaman's residence. Right behind me, you can also see the entry gate, and this is the place from where she leaves every time early in the morning. She goes to Finance Ministry, meets with the officials of Finance Ministry and her colleague who is the MOS Finance, and after that meeting, customary meeting, they also show the digital copy of budget. Photo op takes place at the Finance Ministry, and after that Nirmala Sitharaman along with her colleague goes to the President House, and today also she'll do the same thing. She will get the permission from President to table the budget, and after that permission there will be a customary meaty dahi exchange will also take place, that will be served by President of India Draupadi Murmu. After that she'll go to Parliament House where the cabinet meeting will happen, and then cabinet will pass the budget, and after that at around 11 a.m. Finance Minister Nirmala Sitharaman is going to table the budget. Like we have already discussed, there are multiple reforms. Those are likely to be announced. More relief to common man will be given, and yes, it will have a lot of announcements which will be beneficial for, especially for NDA partners for the upcoming assembly elections in 5 states. So a lot of announcements are likely to be made. We'll have to wait and watch.
In all these 5 states which go to polls, none of them are NDA partner-driven state. It is, if you look at Assam, it is a full-fledged BJP government which is there in the state of Assam. But when we look at the big picture, of course, that is from where Piyush is reporting from. There will be that shift which has happened from the briefcase that the finance ministers usually used to have to the transition which happened in 2018 to the Bahi Khata. Interesting image there again. Then it is also about the Dahi Chini to ensure that it's about good elements that will be presented in the budget. The feel-good budget should also be there. Another scheme, just look at this data, viewers, it's about the Ayushman Bharat. This is the health scheme of the Modi government, one of the key ideas of Prime Minister Narendra Modi, and the budget for this one has been consistently going up. If you look at it, how it has been consistently increasing, keeping in mind how important this sector is. This is the health sector. We have been speaking about it. The housing and the health sectors are likely to see an increase when it is about the budget allocation. But this budget is also coming at a time when the government has inked an important deal which is being called or touted as the mother of all deals. In an exclusive conversation with India Today, Union Commerce and Industry Minister Piyush Goyal has outlined the government's vision for economic growth ahead of the budget, and he has addressed whether the proposed FTA with the European Union will have an impact in the next fiscal year. Let's listen in to what he had to say, and then I bring in the guests. India is aggressively reshaping the global trade footprints. And one such example is the crucial, or should I say the landmark deal which has been inked. India and European Union trade deal has been sealed. And the man who was leading the trade talks is the Union Minister for Commerce and Industry, Piyush Goyal ji. He's joining me here. Mr. Goyal, this has been in the making for 18 years. What made it possible now?
I think there was lack of courage of conviction when the Congress-led UPA government initiated talks 2006, 20 years ago. They launched in 7, aborted in 13. After 6 years, many rounds. because they didn't really understand the dynamics of a trade agreement with the developed world. They were not able to appreciate that the complementarities between the developed world and a developing country will safeguard the interests of our labor-intensive sectors, will open up opportunities for millions to get jobs, to get trading and export opportunities, and will help the Indian economy improve in terms of quality, improve in terms of its ability to grow faster. That government basically was weak in its understanding of economic fundamentals. And we saw that the way they steered the economy to literally become a fragile 5 economy by 14. It is Prime Minister Narendra Modi who recognized that India has the potential, and 140 crore Indians today have made it a collective vision to make India a developed and prosperous nation by 2047. And no country in the world has become a developed nation by living in isolation. You have to allow markets to flourish. You have to look for international trade to grow. You have to bring the best of technologies to your country. You have to attract a lot of capital to your country. And therefore, Prime Minister Narendra Modi in the last 4 years has entered into 8 free trade agreements with 37 countries in the aggregate. All of them are developed nations. None of them with less than $20,000 per capita income. Therefore, in a way, insulating our economy from any competition really, because our $3,000 per capita economy makes products which don't really compete. They complement the developed world. At the same time, opening the doors to large investments to flow in, improving our own quality standards, improving what we produce and what we serve our consumers. Therefore, 140 crore customers, consumers, will get a better deal in life. So it's a very holistic, comprehensive vision of a developed India that we are working on and that are reflected in our free trade agreements.
So is this going to be a budget of consolidation, or will it really start a new growth cycle? That is the big question that will be answered by Finance Minister as she presents the budget at 11 a.m. Joining me on the special broadcast is Rajiv Mantri, Managing Director, Navam Capital. He's joining me here in the studio. Shankar Iyer, political economy analyst, author, columnist, is here as well. Sanchita Mukherjee, senior business economist, managing partner, Walk the Talk LLP. Nasser Salim, Managing Director, Flexi Capital, is joining us this Sunday morning. Dr. Achintan Bhattacharya is Professor of Public Policy and Corporate Governance and former Joint Secretary, Department of Financial Services, Ministry of Finance. Venu Gopala is Swami, is National Spokesperson of the Congress. We have Rumki Majumdar, economist of Deloitte, joining us. So we have a long list. And thank you so much for making the effort to join us this morning. Let me begin with my studio guests here. Shankar Iyer, a lot of anticipation. This is coming at a crucial time, given the uncertainties that we are living in, but also the government of India trying to create multiple buffers with these FTAs which have been inked.
Essentially, a financial statement has become the Santa Claus moment for the Indian economy. So everybody expects something in the stockings and some booty will come. And this year, obviously, there is a lot of expectation because we are sort of situated in a K-shaped economy. There are those who have done well, and then there are the factors, those who have not done well. The other way to look at it is the domestic economy seems to be doing okay, but we face a lot of external threats. So we look at rupee. We are the fastest growing economy with the lowest inflation, and yet the rupee is getting hammered and the FIIs are selling out. Net FDI is down. So all of these are issues, what we call vectors that determine how the economy will grow, and how she addresses it with her tax policies or with allocations is what remains to be seen.
Okay, so we'll be looking out for, Shankar Iyer says, will there be some kind of tax cuts, or should we be prepared for the indications which has come in, particularly on the customs area, which is the custom reforms that the government seems to be ready to unveil. And interestingly, Rajiv Mantri, this time, the part B of the budget, which usually used to wrap up in just 15 minutes, is going to be read completely and totally.
So to Shankar's point on customs reform, I think aligned with how India has...
There she will go and
Mantri, just hold on to your thoughts.
With her
the
colleagues,
finance minister has now left her 15 Safdarjung Road.
After going there at President's house, she will then go to the Parliament where the cabinet meeting will take place, and after the cabinet passes the budget will be tabled at around 11 a.m. A lot of reforms, a lot of new announcements are likely to be made in this year's budget too. Remember that this is the 9th straight time that Finance Minister Nirmala Sitharaman is going to table budget there for the financial year 2026-2027. Which video journalist Ankit Singh and Piyush Mishra in Delhi, India Today.
Rajiv Mantri, please go ahead.
So I was mentioning, alongside the trade deals that have now taken place, there should be further reforms in customs to ease the frictions, to get rid of the frictions, and to facilitate for businesses the opportunity to exploit some of the trade facilitations and liberalization that has happened. So I think this is a big one that we should watch out for. And there's been a lot of chatter around this, of course. So there's no smoke without fire. I think something should happen on this front.
Okay, so you're expecting something on that front. Rumki Majumdar, what are your expectations from this budget? Okay. Nasser Salim, please go ahead and share your views.
Good morning, Maria. Great to be back on India Today. So clearly, as far as we are concerned, we track the capital markets very closely. And I think two major points that we're looking out, at least from our industry, is suggestions on how to support exporters hit by tariff shocks, Maria. That has been one indirect impact that we've seen. We need to see a roadmap, clearly, Maria, which talks about the direct offsetting rebates for labor-intensive sectors, such as textiles, apparels, gem, and jewelry. I think all of them have suffered huge, sudden impact of tariffs. 50% tariff burden upon them has been imposed by the US. And I think that is something which also even the economic analysis shows punitive US tariff hikes, which have caused immediate and order cancellations and a lot of shipment in terms of losses. I think the other quick one, clearly, of course, is, we keep tracking this is massive FPI exodus, Maria. I think, that is something which we are looking forward to, a short-term mechanism that the RBI in support, with RBI, along with the Finance Ministry, can provide liquidity during sudden outflows. I think that is, again, something which has also been mentioned in the economic survey report, saying about, flight of capital moving out. I think, set up a foreign portfolio investor stability window is something which we can look forward to. I think those two very important things. One last thing that clearly we are watching, as part of our indicators is what they will do in your original question on Part B. Part B of the budget usually talks about taxation reforms. And I think that if the finance minister is starting out, may also look promising because there is expectation of certain tweaks in the STT, which is security transaction taxes, making sure that, the foreign portfolio investors, we've seen a lot of exodus, as I just told you, maybe they come back if we do some positive changes there and recalibration of short-term and long-term capital gains. Also in terms of both equity and fixed income. The other quick one is, of course, the sheer taxation impact on long-term capital gain from 12.5. If that can be rationalized, brought back to about 10% for equity and equity-oriented schemes, that's again something which may also look prudent at this point of time, at least in terms of expectation. Maria.
Okay. Since you spoke about the foreign direct investment or FDI, just look at the graph, viewers. How the sense certainly is that in the financial year 23-24, that is where it plateaued. With this number, $71.4 to $71.3 billion, it did go up substantially at $84.8 billion in the financial year 22, but the sense, again, it went up in financial year 25. So, Dr. Bhattacharya, do you think the big challenge would certainly be to, with all the FTAs having been inked, particularly in the last 1.5 years, the government trying to send a message that it is prepared for an unpredictable White House. That's why it has moved to other areas, opened up markets in other parts of the world. This is where the big challenge would be, that how much of FDI actually India sees.
Thank you and good morning. I feel that we have accepted that global uncertainties will continue. The way US has completely disarranged the global rule-based order. But we have a very stable, resilient macroeconomic. And despite the inequality, the consumption push is very, very important. And I expect if the government initiates some more reform measures and which are an essential element of keeping the effective demand in the country to grow at 7+%. And this will take care, given that EU FTA, say, all these things taken together, India is poised for growth. I'm not talking about 45 years hence. I'm talking about India is now a resilient economy which can, yes, withstand the shocks that is happening along. I expect that if the reforms are pushed forward, yes, and some consumer effective demand is created, things will improve and it will improve further. Thank you.
So at the start of the budget session, if you remember, Prime Minister had highlighted, in fact, those are the visuals of Finance Minister Nirmala Sitharaman reaching her new office, that is the Kartavya Bhavan. We have been discussing about the lot of expectations and the burden of responsibility that she has, particularly in the times that we are living in. That's where the first set of visuals will be coming in. We'll continue to look at those visuals, but remember at the start of the budget session, Prime Minister Modi had highlighted about the big takeaway which is likely to be of this budget, which is going to be, which he said, Reforms Express, something that happened last year in terms of the direct and indirect taxes. Remember, in the month of October, we saw the next generation GST reforms, and then this sense is that this budget will again be about consolidating that reforms. The reforms agenda of the Modi government is likely to be reflected also in this budget, which is likely to come in the customs area or the customs zone. Let's listen into what the Prime Minister said, and then I bring in others.
देश का ध्यान बजट की तरफ होना बहुत स्वाभाविक है, लेकिन इस सरकार की ये पहचान रही है रिफॉर्म, परफॉर्म एंड ट्रांसफॉर्म। और अब तो हम रिफॉर्म एक्सप्रेस पर चल पड़े हैं, बहुत तेजी से चल पड़े हैं। हमारे हर निर्णय में राष्ट्र की प्रगति ये हमारा लक्ष्य है, लेकिन हमारे सारे निर्णय ह्यूमन सेंट्रिक है। हमारी भूमिका, हमारी योजनाएं ह्यूमन सेंट्रिक है। हम टेक्नोलॉजी के साथ स्पर्धा भी करेंगे, हम टेक्नोलॉजी को आत्मसात भी करेंगे, हम टेक्नोलॉजी के सामर्थ्य को स्वीकार भी करेंगे, लेकिन उसके साथ साथ हम मानव केंद्रीय व्यवस्था को जरा भी कम नहीं आंकेंगे।
And I'm going to go straight to where Finance Minister is right now, and that is where Karishma Sudani is joining us live from. Karishma, the entire Finance Ministry moved to Kartavya Bhavan just few months ago, and the first set of visuals will be coming in from there. That's where the Bahi Khata will be displayed to the entire country, the image of the Bahi Khata. So give us a sense of what should we be expecting in the next few hours.
a tablet form of Bahikata, in fact, which also kind of signifies that the government has moved towards a more digital transformation of the Indian budget also. As you must have seen the visuals, Finance Minister Nirmala Sitharaman entered a while ago. The creme de la creme of the Finance Ministry, who are the budget makers, which constitutes of a really new team, Maria, now. And I must really bring this out to viewers that the Secretary Economic Affairs is actually a woman secretary, which has not happened in the longest time, Anuradha Thakur. So the budget making team, while I'm sure it has a lot of other people joining in, at the helm of it stands two important women, one Finance Minister herself and Secretary DEA from Department of Economic Affairs, followed by other, of course, veterans and newly appointed government officials also who will be at the helm of this. The latest being Chairman CBIC, who only recently joined in the month of December and was tasked to bring this major custom reforms, which is likely going to be announced in today's budget. What happens now is in a few minutes from now, you will see that a finance minister along with her A-team will be here for a photo opportunity before they proceed to the parliament, and of course to take in the president's acceptance also on this budget. At 11 a.m. This is finance minister will preside over presenting this budget in the parliament. We are expecting that her speech is going to put emphasis and focus on part B, which is going to be on direct and indirect taxation. Throughout the day, we are going to see a lot of important announcement on India's annual financial statement for FY27. That is the year to come, basis on which there will also be a media interaction followed, and a lot of course, reactions and suggestions and views coming in from India Inc., who kind of form the backbone of taking forward India's economy to a 7% growth rate, which the government has been predicting.
Yes, and interestingly, as Karishma was pointing out, in this 12-member budget drafting team, there are two women, of course, Finance Minister Nirmala Sitharaman and the Secretary of Department of DEA, which is Anuradha Thakur. And on this broadcast, we have two women also joining us, Rumki Majumdar and Sanchita Mukherjee. I'm going to take that question to both of you. Rumki Majumdar, here is the message that is coming in from Finance Minister that the role of women also becomes important. The Secretary DEA is also part of this entire drafting committee. So we can expect some more concerns being addressed, particularly with regards to the social sector and household budget.
Absolutely. And I would like to also say the fact that women have always been at the center of every budget of a household. So why not take it to the national level as well? So with the rising participation of women, I think what will happen is there will be more allocation towards social sectors, which even the Prime Minister highlighted that human will be at the center of every reforms and transformation, right? So with this, I think social sectors, the broad basing of the growth, the sectors which are at the center of creating employment, that is the MSMEs, these will be at the helm of it, and we expect a lot to be done on these.
In these areas. Okay. We'll be looking at some more data, particularly with regards to the social sector. Just look at this graph and, the concerns about the education. Education sector, there has been an increase consistently, barring 2025, where there was a slight dip there. The government has increased its allocation or expenditure with regards to education. It has been going up. Just look at this graph. It started increasing from financial year 2022, went up 223.4K. Then it has gone up, particularly with the budget estimates suggesting this. And then the healthcare, again, an important sector. The budget allocation being consistently going up. So, Sanchita, while we are looking at this area, of course, the focus will be also on what is it that the finance minister has to announce with regards to inflation. The food inflation is in check. The largest growing, the fastest growing large economy also has the lowest food inflation. But the concerns is also about the quality of jobs, even as the government says, and the indication which came in from the economic survey, that the number of jobs have gone up.
Thank you so much for having me on your show, Maria. I'll just kickstart this conversation by quoting the national animal of India, the tiger, tigress. And the tiger actually lies low, not in fear. The tiger lies low when it's taking aim. So I think the whole crux of this budget is how we are taking aim in a very, very heightened environment, which is volatility, uncertainty, complexity, ambiguity on a geopolitical platform, right? I think in the last couple of years, the finance ministry has done a very commendable job in fiscal consolidation. We have been lying low. Our macroeconomic parameters are pristine. If you look at our deficit numbers, fiscal deficit numbers, it's all going great. However, the challenge lies in the numbers that you just quoted. You put up some very exemplary analytics in terms of how do we attract FDI? How do we have more productive education, which translates to skilling and job creation in the economy? How do we do all of this? That can be done, I think, by working very smartly, very thinking out of the box and looking at last mile implementation and execution, which is the need of the hour. See, all of these, the Awas Yojana, Ayushman Bharat, these are schemes, amazing schemes which are there. How do we look at execution? For example, can we look out of the box thinking there is an industry demand? Do we have the skilling for it? Why don't we look at private public participation, right? In which public sector takes up the regulatory risks, takes up the risks of the land. But
Sanjita, since you spoke about the industry demand, the sense within the government was that if they bring something like what they did last time around, the internship scheme, that will also ensure that the industry participates. What has been the reaction and the execution of that?
More simplified execution. To be very honest, we need to cut across the red tape. We need to cut across compliance. We need execution on the ground in terms of the private sector takes the business risk and the public sector takes the risk in terms of regulatory and the land reforms. So this is something that they need to look at in terms of last mile implementation. Similarly, with agricultural productivity, for example, agricultural productivity does not have access to funds the way we would like it to, right? How do you enhance the value productivity in agriculture? We can have credit guarantee schemes like the ones we have in the MSME sector, right? With far, far lesser compliance, ease of doing business, and access to capital. Similarly, the government has done a heavy lifting when it comes to infrastructure, right? You've built your roads, you've built your ports, you've built your freight corridors. How about we look at asset monetization? How about we look at divestment, strategic divestment, gold monetization? There's so much of gold lying in the lockers of India. How do we look at gold monetization to bring that into productive economy, right? So that public sector can keep on spending into productive economy, urban infrastructure, whereas that this will create jobs, this will create consumption, virtuous cycle, and bring the money back in terms of the demand in the economy.
Okay. Because the first set of visuals will be coming in now from Kartavya Bhavan any moment now. A quick reminder for the viewers, this is Finance Minister Nirmala Sitharaman's 9th consecutive budget. She has created history already. The only finance minister to have presented 10 budgets was in fact Morarji Desai, but that was done with a break. So Nirmala Sitharaman has created history and will be creating history again today. This is the budget. The first visuals will be coming in of that tablet from Kartavya Bhavan, because the finance ministry has moved from North Block to Kartavya Bhavan. We'll be getting those visuals, but first I think Ketan Bhutani is joining us as well. He's joining me from Vijay Chowk. A word from you, Ketan. Finance Minister heads to the Rashtrapati Bhavan. That's where the Dahi Chini custom will be played out. This is the beauty of the tradition. While we look at the tablet, you know, as far as moving ahead or adopting technology is concerned, but wrapped in the red cloth, and then that Dahi Chini, you know, tradition with technology is the big message that has been part of the Modi government's Modinomics.
Well, absolutely. In a few minutes from now, we would be seeing the finance minister's cavalcade heading to the Rashtrapati Bhavan for that usual ceremony. But I'm going to tell you one thing. What I'm hearing from my sources is the fact that something on deregulation could probably be announced, because in the previous engagements the Prime Minister has done with the industry, with respective chief secretaries, he has always mentioned about deregulation and deregulating and improving people's lives. So something on ease of living and deregulation could be announced. Secondly, Maria, we are also hearing that a big push towards MSMEs could also be announced. Because remember, 33 crore jobs, 48% of the exports are done by our medium, small and micro enterprises. That could probably be the key focus, and reducing the compliance burden for MSMEs and increasing liquidity and full credit line to the MSMEs would be on the cards. Thirdly, Maria, I want to tell our viewers that the government's focus on infrastructure would remain, because last year we saw a record allocation of about 11 lakh crores towards infrastructure. This year it could probably increase by 58 to 10% for all the infrastructure ministries combined to nearly about 12 to 12.5 lakh crore, which could significantly increase the allocation towards the infrastructure sector as well. So these three key things would be in mind when the finance minister presents her budget today, and we would be expecting a whole lot of ease of living, MSME related, digital economy, digital transformation, push transformation and announcements as well.
Okay, so now let's look at the infrastructure spending. The government has ensured that in the last few years that there is a whole web of highways, of better roads, better connectivity to attract foreign investment, to attract investment within the country. This is the graph. This is how the road infrastructure spending in terms of the number of highways that has been built per year, the kilometer. This is where the highwayman of India, that is the role of Nitin Gadkari, the union minister, comes into spotlight. This is how the focus has been in financial year 24, particularly the number of the highways built per kilometer going up. In terms of power, again, this is how the graph looks like. Total installed capacity actually going up consistently. This has been one of the areas which have been the biggest concern, and that has been addressed by Prime Minister Modi's government so far. Let me bring in Shankar Iyer again. Shankar, so far the government has sent a message that they are preparing the base so that the foreign investment comes in terms of capex, in terms of the infrastructure spending with regards to roads, highways, civil aviation facilities, airports, and of course in power sector. The hope is that this will lead to investments. How is the picture looking like so far?
So if you look at it honestly, the last 5 years, 6 years growth has been driven mostly by government capex. I think Government of India has spent something to the order of over 70 lakh crores in infrastructure. Railways have been, a large part has been electrified. Roads have been widened, new ones built, the flyovers, the trans-city connectivity, all of this has happened. And this has also been enabled by the lending that the center has done to the states. The question now is, now that you have the assets, how do you monetize those assets? And that's the flip side that hasn't quite played out. And this was the responsibility of the Land Resources Management Agency. This was the responsibility of DIPAM. The asset monetization idea has been spoken about by the Prime Minister quite some time back and has been repeated. So the Prime Minister says reform, transform and perform, or rather reform, perform and transform. So the reform part is happening in some ways, but the perform part, which is the down the line ministries and the state governments, is sort of missing. So across the entire social sector, last mile delivery is poor. And that is where the states have to sort of pull up. If you look at investments, FDI, again, it's the same story. They hold all this kinetic Karnataka, magnetic Maharashtra thing, and nobody knows whether the investment has come, not come, whether jobs have been created. So the Niti Aayog actually is well placed to sort of haul these wagons around the circle and sort of figure out how much investment has actually happened. Only two chief ministers, to my recollection, Yogi Adityanath and Devendra Fadnavis, actually put out actual MOUs and implementation data. The other states don't. And this is something that is strange because all the announcements that happened in Davos, for instance, where we had this strange spectacle of companies from India talking to governments of India in and about investing in India. So now all those MOUs need to be listed and somebody has to put out whether all this taxpayer money that was spent in people going to Davos has been worth it.
Okay, since you talk about that mantra, reform, perform and transform, what is the role of states in all these mantras that, great taglines, Rajiv Mantri, but performance has to be about that cooperative federalism, something which has been highlighted by the chief economic advisor also in the economic survey, that the pressure on the states is far more because of the GST collection and their role going down.
No, certainly, I think on the aspect of deregulation in particular, I think a big chunk of the action would have moved to the states now, because the union government has executed on number of aspects and number of areas, and now it's really the ball is in the court of the states to take it forward. Just to give one example, the new labor codes. The new labor codes empower the states to make further liberalization and further relaxation in terms of hiring and firing and the ceiling within which the liberal laws can be implemented. And we need a few states in India, like 2-3 major states need to take this up and drive labor-intensive manufacturing, especially when India has now done trade deals with large kind of economic blocks like the EU, and also, of course, Australia, New Zealand, and probably Canada in the works. So these are major economies where there is a significant export opportunity for taking up labor-intensive exports. And we really need now that a few forward-looking states should run with these reforms.
Okay, so if as Shankar was pointing out, it is the state of Uttar Pradesh and Maharashtra so far which has come up with something very, very concrete in terms of what they have achieved and the numbers. While other states, we were expecting perhaps a Tamil Nadu or even Andhra Pradesh, because Chandrababu Naidu was the first CEO of any state. Those numbers, why is that not coming, Rajiv Mantri?
So it is true that many of the state investment summits and all, they have become like probably, to put it cynically, headline management or generation of PR for the state. And but I do think that for many states it reflects ultimately in the numbers. As the saying goes, you can fool some of the people some of the time, but not all of the people all of the time.
Okay.
So over a period of time, I think we do see which states are growing continuously, which states are actually industrializing, which states are being talked about in the business community as the right place to set up plants and set up manufacturing facilities. So the proof is in the pudding, and definitely, like Shankar highlighted, Uttar Pradesh and Maharashtra score highly on those counts.
Okay, so
also Tamil Nadu.
Maria, we must recognize one interesting thing. Karnataka and Tamil Nadu, for instance, have got the large chunk of investments in both digital and AI-related activity, and also manufacturing in Tamil Nadu, which also you guys were talking about women, electronics. You guys were talking about women in the role of women in the economy. The highest number of women employed in manufacturing is in Tamil Nadu.
Tamil Nadu. Interesting. Interesting. And we'll be talking about the role of women, particularly in drafting this budget as well. Some anecdotes that you have, Shankar, you'll have to share that with us as well. And we have 2 women also on this panel, Rumki and Harshita, who continues to be with us. But soon after, the economic survey was presented by Finance Minister in Parliament. We spoke to the Chief Economic Advisor, Dr. Anant Nageshwaran. Listen in to what he had told me.
I think the fact that we have been able to do the deregulation in states and deregulation in the union government, and not only dealing with policy reforms like indirect taxes and direct taxes reforms, but also dealing with the process reforms in the Ministry of Environment, whether it is Ministry of Road Transport, changing the way in which they invite bids not on L1 basis but technical quality basis. So I think what the government has done over the last 15 months or so is to demonstrate that they have sort of grasped the importance of both process and policy reforms. And we mentioned that as an important reason for us to feel confident about upgrading India's potential growth. And on top of that, Chapter 16 of the Economic Survey points out that states have been very enthusiastic in embracing deregulation. So much so that now we are moving on to phase 2, which is like a harder question paper than the phase 1, which was an easier question paper, which all states did very well. So therefore, I think these two combined initiatives of the union and state governments are the ones that give us the confidence that the Reform Yatra or the Reform Express journey is having two equally motivated and enthusiastic engineers, the union government and the state governments collectively.
Big remarks coming in from US President Donald Trump. And this is with regards to the oil. India will buy oil from Venezuela is what the US President is saying. He has gone on to say that India is coming in to buy oil from Venezuela. So how should this be seen? India will be buying from Venezuela, not Iran, is what US President has said. Let's listen in to what Donald Trump said, and then we'll get you more details. On that note, a quick break, and then Rajdeep Sardesai joins us after that.
India's longest-standing biannual survey. India Today Mood of the Nation. How does India assess Narendra Modi's performance as Prime Minister? Has India acted firmly enough on Bangladesh minority issues? Who do citizens blame most for Delhi's worsening air pollution? India Today Mood of the Nation has the answers. On stands now. Read it in the latest issue of India Today, Making Sense of India. Now available for speed delivery on Amazon and Blinkit. Subscribe now. Log on to subscriptions.intoday.in.
I have one question, and this is for the young parents. They have this concern, which has been perhaps flagged by your economic survey. You have spoken about rapid rise of digital addiction and screen-related mental health challenges in India. How much of that is a concern? And what was the need for economic survey to highlight that?
It's a big concern for the simple reason that demographic dividend rests on that, because today's adolescents are the ones who are going to be part of the workforce tomorrow, and if they are going to be afflicted by anxiety, suicidal thoughts, unable to concentrate and apply themselves in cognitive tasks involving concentration, etc., it will show up in productivity, it will show up in absenteeism, and naturally therefore economic output will suffer. So there is a very direct one-to-one correlation between this and what it means for future growth.
accusing the dog owner of negligence. He has stressed that if the pet owner had followed safety protocols, the incident could have been prevented.
सबसे बड़ी बात है कि ये पूरा इंसिडेंट उस पेट ओनर के साथ में हुआ है। पेट ओनर उसको संभालने में, उसको बचाने में असहाय दिखा है। इस तरीके के कृत्य में जो इस
Hello and welcome. It's February 1st. It's a Sunday, but in a break from the past, we will have the union budget today, and it's a slice of history because Nirmala Sitharaman will be presenting her 9th consecutive budget. That's a record. Remember, Morarji Desai presented 10 budgets, but not consecutively. So we've got plenty on this record-breaking show for you today. Lots to look forward to on this union budget at a time of uncertainty and global headwinds. My colleague, Siddharth Zarabi, our head of Business Today TV, is with us because, Siddharth, you're just back from the icy climes of Davos like me.
Yes.
We're in the sort of relative warmth of the studio, but the news treadmill never ends. You're looking forward to this budget. What number budget is it of yours consecutively?
Okay, that would reveal my age. I'll leave that. But I think the other big part of this record budget, you spoke about Nirmala Sitharaman's and her 9th turnout with this speech, is also that there is likely to be, as per government sources and this story that we broke yesterday evening, a fundamental change in the manner in which, and according to sources, this will be the first time in 75 years of budget making in India that there would be a change, particularly in Part B. And those of our viewers who follow this very closely know that Part B of that budget speech was the real action. It was where the finance bill and all the changes on taxation and tariffs used to happen. What will this change be? Indications are that it's going to be a longer-term vision statement tying in with Viksit Bharat. And remember, Rajdeep, this government has made several changes to the nature and manner of the budget presentation exercise. The date changed and that was brought forward. In terms of the focus, we have seen massive announcements happening outside the budget, the government showing flexibility to respond to emerging economic changes. So that, I think, at the macro level will be the big thing to look out for. And one quick element, deregulation. And this was again something that we picked up at Davos. But the markets have now currently in pre-open, and let me at this stage introduce our colleagues on the show. Shailendra Bhatnagar, Chief Markets Editor of Business Today Television, joins us here with us. Abha Bakaya, our Senior Anchor for Markets, a Consulting Editor, is here with us. Sakshi Batra tracks the markets very, very closely for Business Today Television. You see her every day on India Today and Abha. And we also have a very special announcement to make, Rajdeep. From today, the National Stock Exchange becomes the prime sponsor of the market opening and the market closing show that is shown 5 days a week here on India Today. So also some new firsts for us as well. But let me quickly go across to Abha to set the tone for the markets. The markets have, in the run-up to this budget, been a little weak, but 12 out of 15 times data shows that the markets show a bounce back. Abha, take it from here.
Good morning, Siddharth. Good morning, Rajdeep. And yes, given the state of the markets that we've seen, I think ever since the last few months, we saw a brief respite during festive season, and then there's really been completely lackluster trade and Trump's, complete, politics in the background. The budget so far, according to Market Master, seems to be kind of a subdued non-event unless we really see some major reform push. And that's where I'll come back to both of you in a minute, because what is the scope for the finance minister this time around to really give a fillip, whether it's on the consumption side, whether it's on the private capex side, in terms of some kind of incentive for corporate India to come to the table, or even if it's further government expenditure. But they do need to see some major push, not just something superficial, but something that will actually give a huge fillip to the economy. Remember, when we look at the kind of growth statistics that we're seeing here in India, we are on track, we're looking robust, particularly in the global environment. But in order to really capitalize on that and see all of those growth engines running, we are going to need to see some kind of incentive.
Finance Ministry officials, including Chief Economic Advisor, there is always a meeting of the Union Cabinet that provides formal approval, and that is Nirmala Sitharaman with a new age Bhai Khata iPad possibly behind that red velvet box with the Ashoka emblem on it, and a resplendent sari. I'm waiting to figure out which one this is. That's the entire Finance Ministry brass. There is another first. Secretary of Economic Affairs, Anuradha Thakur, that you see on the left of Finance Minister Nirmala Sitharaman, a woman officer of exceptional ability and capability. So you have that touch also for the budget. We are also joined by our other guests, but I want to quickly go across to Shell. Shell, in specific terms for the markets, what is it that they are looking forward to? Because we have over the past several months seen both outflow of capital, perhaps on account of macro factors like the rupee, but also some taxation overhang as far as the market is concerned. Shell.
So, Siddharth, a three-letter word, tax, and another three-letter word, what do we do with FIIs? So there has to be something that comes in for sovereign wealth funds, that comes in from foreign institutional investors to stem this flow of very heavy selling that you see on the Lal Street. That is something that I'm looking forward to. Then fiscal consolidation, as also a higher capex, a lower borrowing, and of course, lots of external and internal reforms. Siddharth.
Okay, before I go across to Sakshi Badra, let's quickly cut across to our Business Today reporter, Karishma Sudani. Karishma, yesterday you broke that story about a fundamental change, and as sources put it to us, a unique change never seen before in 75 years with regard to the manner in which the budget will be presented, specifically Part B. Very quickly, what is it that we can expect as far as that change is concerned? Karishma Sudani. Okay, as we connect with Karishma, visuals there, Kartavya Bhavan, the new...
Karishma is joining us. By the way, just to say, you wanted to know what sari. Remember, Tamil Nadu goes to the polls in about 2 months from now, so it's a Kanjivaram sari. Nirmala Sitharaman comes from Tamil Nadu, Rajya Sabha MP from Karnataka. But the symbolism is there. Remember, Tamil Nadu is one of the states where the BJP has never really been able to make that major breakthrough. But they will hope that with the AIDMK, they can do that. And the symbolism is of her wearing a Kanjivaram sari. This is only since Siddharth wanted to know what specifically was the sari Nirmala Sitharaman would wear. Karishma Asudani joins us. Karishma, you want to take forward the question that Siddharth raised. What is going to be unique about the budget, particularly Part B of the budget this time?
Okay.
Okay. We'll wait and see if she can. Let me just introduce our other guests joining us. Rajiv Mantri joins us, author and investor. Welcome, Rajiv, to the show. Shankar Iyer joins us, veteran journalist, author, someone who's tracked the economy for what, 50 years now? You can reveal your age. Siddharth is worried about revealing his.
This is my 37th budget.
This is your 37th budget. That's pretty awesome. There is Dr. Sanjay Baru joins us. Dr. Baru also needs no introduction. He's authored several books. He's also been editor of several economic dailies, as well as, of course, been in the Prime Minister's office. What number budget is it of yours, Dr. Baru?
35th.
35th budget. Okay, 35th budget. Okay, 35th budget, 37th budget. Siddharth,
for the record, the 27th budget, since you will persist. But,
okay, good.
But Dr. Baru, do tell us, when the government says that Part B will change, it will be a unique presentation. Income tax changes already made. Indirect taxes now completely out into a federal council. The only scope left is tariffs and customs, and that has to align with the broader trade realignment. What would you have to say? And you can also see the finance minister right up there with the rest of her officials. Dr. Baru.
Well, I don't know what they mean by changing Part B, but you're absolutely right. This time it's going to be all about tariffs because that is where significant changes are expected. What we are not seeing in the last few years was the final statement of what are your revenues, what is your expenditure. The combined statement was not being given in the budget speech. That was left for us to read in the other documents. Now, that used to be a standard practice in the past. So I don't know if she's going to revive that, because at the end of the speech, we need to know what is the total the government has collected, how is it going to spend. Those numbers were out of the budget speech. Budget speech became essentially a political speech with Nirmala Sitharaman. So I don't know if she's going back to a standard budget speech, which is more about numbers than about policy statements.
Well, we just need to wait now pretty much till 11 a.m. to get those details. Two other guests who join us, Akshay Bhagwat, the Senior Vice President of Derivatives Research at JM Financial, and Manish Sonthalia, Director and CIO at MK Investment Managers. Very quickly to you first, Manish, what is it that would move the needle as far as market sentiment is concerned today with any budget announcement?
You're on mute. You're on mute.
Manish, you are on mute.
The only statement which the markets would be watching out for carefully would be the taxation part. LTCG, STCG, STT. You got to lower some of these. I mean, these are the only things which are worrying the market. Apart from that, the fiscal deficit number at 4.2%, your nominal GDP growth assumption of 10.5% translating into revenue collection, and incentives for exports because tariffs are hitting us, and plus your capex number. Of course, fiscal 26 will be left with some sort of revenue shortfall as things stand today. So, FY26 capex numbers are going to be whittled down in all probability, and in that backdrop, we should be looking at slightly elevated capex numbers for FY27, around 12.5 lakh crores ballpark. Plus the borrowings number, gross borrowings number at around 16.5 lakh crores. If these things do come about, markets are going to fly.
Sakshi, take it ahead with Akshay for us.
All right, Akshay, just about 3 minutes to go before the markets open for us. The indicative action is that 13 points higher on the Nifty is what we could start at 25,333. Although it's gold and silver that's crashed right at the open. 17,000 rupees down for silver, 9,000 rupees down for gold. So the over the weekend kind of a crash that we see is now getting even graver. How are you looking at the markets? What will you watch out for? What will your pre-positioning be before the market, before the speech happens? How will you trade the markets?
Good morning to all. Good morning, Sakshi. And it feels so good to see so many cheering faces on a Sunday morning. Well, for the Nifty, the data positioning continues to be weak as far as the FIs are concerned. A lot of short positions continue in the FNO segment. Technical placement is more or less neutral. I would suggest go for a level-based approach where 25,500 based spot Nifty would be an important level to watch out for. There might be some bit of an uptick in the initial first hour before the budget announcement. 25,400, 25,500 may be tested, but we need to be a bit more careful. Only if market sustains about 25,500, I would recommend to go for a buy position. Otherwise, it's more of a muted approach the market might give to the budget today.
Let's focus on some prices that have already come in. The Nifty Metals Index, ladies and gentlemen, is going to open 3 percentage points lower. A 6% down circuit on silver, on MCX, ditto for gold, and therefore all equity derivatives linked with them, Hindustan Copper, Hindustan Zinc, Vedant, National Aluminium, all of them slipping dramatically in trade. Broadly, the first 1 hour will be quiet, and then beyond 11 a.m. when the part B starts, ladies and gentlemen, the action will pick up.
So apart from, of course, the big picture, let's take a look at specific stocks that are going to be in focus. First of all, let's remind everyone, this is the first time, I think, that the budget's on a Sunday, or at least the first time in as long as I can remember. Yes, it is, say our experts who have been doing this for close to 40 years. So this is highly unusual. Markets have also opened, of course, to track all the action. Keep an eye also on pockets like defense. Keep an eye on rail. Keep an eye on anything that is PSU related, where we could see the government announce some kind of fillip or some kind of spending budgets or allocations. This is really what the market's watching out for. Any boost to manufacturing would be a huge positive. That's a bigger step that we're watching out for. Industry status for certain pockets. Of course, anything on exports and tariffs. So the hotel industry is going to be watching out. Pockets like jewelry, textiles, all of these, smaller pockets of stocks will be keeping a very, very close eye on the budget. So from a market perspective, it's not just the big picture, it's also for the broader markets and really where we could see some of that action. And key to track will be defense, will be rail. These are the pockets that have actually been moving ahead of the budget. So maybe not on the index, but in terms of a build-up, we've definitely been seeing it across some of these key pockets. All right, opening bell on your screens. Actually, what are we picking up on opening bell?
25,312. I mean, we've quickly slipped into the red, Abha, as far as the Nifty is concerned, just toggling at the flat line at this point in time. Let's also pull up the Nifty Bank there to see if there is any action on the banking space. Again, flat with a negative bias. So there is nervousness right ahead of the budget speech today, viewers. That's how you're looking at. But private banks, about 0.2% higher, giving us some hope that there could be something for the financial sector, something but PSU banks are down by 1.3%. There was a big expectation that something on the mergers consolidation front could be announced there. Broader markets taking a hit, 0.7% down for the mid-cap 100 index. Look at the small caps, even further down, 1.1% lower. So the larger mood, the broader market sell-off is pointing out to some nervousness. India WIX, the volatility index that tracks the greed and the fear in the markets, that's up by 3.9%, clearly indicating to a lot of nervousness on the D Street. Metals index, looking at and mirroring the gold and silver fall. It's again 4% down. What Shell was pointing out, on Friday we had a massive 5% fall there. And the stocks that have been tracking, copper, silver, all of those stocks are down in double digits, about 15.5% lower for Hind Copper. Look at also in zinc at this point in time, a 10% lower circuit for Hindustan Zinc at 565. So all those gains that we've got in the last 1 month, many of them are going away. Hindalco down by 5%. Shell, what else are you watching out for?
Well, Sakshi, the top 5 losers are either metal stocks or related metal spaces, including MCX, 10% lower at 2275. This is, of course, the global sell-off that we are seeing. Let me just point out some positivity. We've hit upon 5 top losers. Let's look at the gainers as well. Well, the complete defensive market comes into 4. Look at Sun Pharma, 3.5% higher. And Siddharth, a very good beginning for the NSE partnership. IFCI, which is a major holder of NSE stock, is up 10%. It's the top gainer. You have Escorts in the green, 2.5% higher. The Nifty Auto Index doing pretty well because we are looking for the auto numbers to come in. And of course, the likes of Zentech ahead of the defense budget, 2% higher. Insurance stocks are doing well. That's what at least I am looking at.
So I want to come to you, Siddharth, on something because, given a slight nervousness in the markets, but largely the budget has been priced in. So unless and until there's some kind of fillip to growth, there's no real particular downside as far as, Nirmala really disappoints. I mean, if she absolutely does nothing, not even any kind of surface level consumer-led incentives or something, that's really when we'll see the markets nosedive. But otherwise, I see a limited downside. What do you think?
About 3 factors to remember. Yeah. One, the Goldilocks movement that the Indian economy is going through, and our guests here would comment on that, but since we are focusing on the markets for the next few minutes, let me try and respond to that question that you made. Is there scope, necessity for tinkering around with further as far as our indirect tax architecture is concerned? Of course there is, but where will that happen? Outside of the budget. Is there necessity to look at further direct tax changes? Well, there could always be at the margins changing this, changing that. But remember, we are now in an environment where the government of India, the finance ministry, wants everyone to move to the new tax regime. No exemptions, lower thresholds of taxes to pay. And therefore, that is a policy direction that will continue. Therefore, what is left? It is customs tariffs. Now, customs tariffs used to take a lot of time in the budget speech. Dr. Baru would recall that it sometimes used to be 20, 30 minutes plus, including the days of Pranab Mukherjee as the finance minister. He brought that back when he came back to the finance ministry 2009 onwards. So effectively, the scope to tinker around with taxes and tariffs is limited to that extent. So what does it leave with? A statement of medium-term priorities, because remember, one of the criticisms of our budget-making process is you announce something on 1st February. By the time the first policy architecture is made, half of the next fiscal year is gone. And that is why implementation becomes an issue, and outcome budgets were supposed to fix that for us. So I would say, don't surprise anyone negatively. Continue down the path of fiscal consolidation and solid, factual, credible numbers.
Go ahead, please. Let me just mark the markets. Nifty Metals Index, Sakshi, is now down 4.5%. This comes after Friday's loss of 5.2%. In the red are the PSU Banking Index, 1.35% lower. Remember, ladies and gentlemen, this is very heavy profit booking, nothing much to be worried about. We had seen a very sharp rally in the metal prices as also in PSU Bank. So money is moving from the book into the bank. Small cap index is down 1.2%. And it's a very light start to the market, Siddharth. 1,057 shares in the green, 1,200 in the red. The market is light. It could pivot if there is something interesting on the tax side.
Well, we have seen pivots in the past that used to happen when Part B would start. But Chetan Bhutani, who tracks infrastructure for us, standing by at Vijay Chowk. Chetan, very quickly, give us a sense of what the continuing focus for capital expenditure will be. Will it be in-line trend with what we have seen over the past few years, especially post-COVID, or should we expect a major change?
So that we would be seeing a normal minimal hike that has been continuing for the past 3 to 4 years. Nirmala Sitharaman knows that the infrastructure ministries are very capable of spending their money, and they have been spending quite regularly, and so they don't have much of the budget revenue left. So now we will expect normal 3 to 4% allocation for both roads and railways coming up. Not much highway spending would be done because the ministry is itself managing its own expenses, raising money from the markets, getting its highways listed and monetized. So these strategies have worked, and in case the ministry will not be taking too much money from the budget, but a significant 3 to 5% allocation for highways, 3 to 5% for railways, and port, shipping, waterways, telecom sector would see the minimal hike going forward. Secondly, Siddharth, what we know is, of course, the MSME sector. The government would be focusing on MSMEs and agriculture, with the government probably giving a very big announcement for the agriculture sector and in the name of the PM Kusum scheme and its subsequent continuation.
Absolutely. Dr. Baru, very quickly, deregulation is something that is echoing across the world. We have had a deregulation task force. Some policy changes have already happened, and Rajdeep and I both heard Chandrababu Naidu Garu in Davos tell us that it should no longer be about ease of doing business, it should also be about speed of doing business. Is deregulation likely to be a focus, and what would its merit be if at all it were to be announced today?
Well, clearly it has to be. You know, you spoke about Goldilocks moment, and this has become a popular phrase. I've never understood what exactly it means, because what we have, if you see the overall economic situation, is a fairly good record on fiscal stabilization. But demand has not been picking up. Demand continues to constrain capacity utilization, which is below 80% across the manufacturing sector. Private capital, has not been forthcoming. There's been a stagnant share of private capital formation to GDP. So what we really need is to trigger the animal spirits. I mean, Nirmala Sitharaman herself asked a year ago of Indian business, why are you guys not investing? And I think the answer lies with the government.
That's absolutely right, sir. In fact, Sakshi, just come in on the defense theme, because defense is one of the themes. And this question that Dr. Baru raised, we have put it across to policymakers and to industry. And they say, listen, don't always expect investments to come in mature sectors. Look at new age sectors which are seeing investment. Explain this point of view from the defense pack on the screen. Sakshi Batra.
Today, defense sector is up by about 0.5%. So looking at it, there is a high expectation that there could be a higher allocation. Remember, this is the first budget after Operation Sindoor. So that's why this is going to be extremely important. We have been seeing a slew of announcements where the Defense Acquisition Council has been announcing massive orders over the last 6 months. This time around, again, there is an expectation. How much could that defense outlay increase by is the question. Will it be 10% all the way to 25% as well? That's the broad range that most of the experts are expecting. What it comes out to be finally is something that we will have to watch out for in this speech. But definitely, defense is going to be a talking point in the budget this time around. There will be a higher allocation in the budget, that the government will be doing. That's for sure. What is the percentage outlay? Plus, I think, Siddharth, the big question is, given the, lower headroom that we have shortfall of tax collections here. How much fiscal room is there to really elevate the defense spending is the key question. Will there be a way where the finance minister will be able to raise the non-tax revenues and be able to spend big on defense? Looking at the geopolitical scenario is something that we need to watch out for. It's a complete changed world order, and we need to see how the government will be maneuvering.
Shankar, come in on this, because the point that the survey made about a disinvestment approach which says that the government will perhaps hold up to only 26% and therefore a second round of further divestitures. Now, there have been questions around individual companies. Let's not talk about that. But taking that point forward, how much of a scope do you think? You saw that macro chart in terms of percentage trend line shifting downwards as far as defense expenditure is concerned. But from your point of view, how much of scope is there for a post-Operation Sindoor moment to be captured as far as defense allocations are concerned?
See, the defense allocations, for them to translate into actual acquisitions and purchases takes time. So I expect that the announcement would be a kind of medium-term perspective, just like with the NATO guys, they are saying we will reach 3% of GDP and 5% of GDP. India will probably present, Nirmala Sitharaman's budget should sort of probably give you a roadmap for the next 5 years on how they will increase or ramp up the spending in defense. Remember, you may not have a headroom this year, but you can always promise that there will be headroom in the next year and the year after that. And that should be the approach anyway for defense acquisitions, because the process is very long drawn.
Right.
And as far as the story, you mentioned the PSU disinvestment story. I think whoever came up with this idea of 26% sort of never looked back at it, at the government's own record. Since 2004, the 30 companies have been listed through various IPOs. These 30 companies are valued at around 19 lakh crores. Out of these 30 companies, 29 companies, government owns more than 89%. So let's get to 51 first, then we can be ambitious about 26. Let's sell some stuff first,
Fair point. There is so much scope.
This is a dead duck, actually.
Abha, you wanted to take it forward with our market guests. Viewers, we'll stay on the markets for another few minutes and then go back to broader policy making. Abha.
Absolutely. I think, just before I do that, Siddharth, I know he asked everyone else, but I want to ask Rajdeep how many years he's been actually observing the budget. Yes.
I can tell you a little story. In 1994, I was at NDTV when we were commissioned to do the post-budget reactions. So I recall standing, and this was Manmohan Singh's probably third or fourth budget in 1994. I recall standing in front of the BSE in Mumbai on Dalal Street, and the connection kept going off because the technology wasn't good enough. So we were doing it for Doordarshan, cracking large OB van, I think had been placed just outside BSE.
I remember those. Yeah.
So that's my first memory. It is a day since then that I dread, because as an economics graduate, it forces me to almost go back and start reading about things that I thought I had forgotten over the last 30, 35 years. Yeah, but it's been a long time. And I think that was, Manmohan Singh brought, that entire early 90s brought excitement to the budget. You can, whichever way you look at it, after 1991, a certain excitement came in, and it's never really gone. With the Chidambaram budgets in a United Front government, then you had Yashwant Sinha, Jaswant Singh. Every budget had something that became a major talking point. And I think that's been the big change that's taken place. Rajiv is probably the youngest here out of us all in terms of tracking budget. But as an investor, I can very quickly ask you, is there that excitement that exists today about a union budget? Or is there a sense, as Siddharth pointed out, they just want the markets just want the finance minister not to do anything that will harm the budget? or harm the idea of the economy. No retrospective tax kind of bombshell suddenly being brought in. That's all that people really want.
No, I think once you achieve the major tax reforms, the budget becomes a more mundane procedure and process, as it should. Obviously, the earlier era had number of major policy changes that required to be implemented, and the budget became a platform to announce those.
And also, so much more happens outside the budget, and you've got the geopolitical risks that are taking place. I know friends of mine who are more interested to know what Donald Trump's going to do with Iran, which they fear is going to have far greater impact than what happens at home. He's made an announcement today that India has agreed to buy oil from Venezuela and not Iran. Now, he does these statements.
But Rajdeep, that's fair enough. 2 days back, Prime Minister spoke to Delcy Rodriguez, Venezuelan stopgap president or Maduro's stand-in president. So
Yeah, but why should Donald Trump, my only problem is why should Donald Trump be making that announcement? We are a sovereign nation.
There is really no announcement. We've always been buying Venezuelan crude. It was the US and allies who sanctioned Venezuelan crude. We couldn't buy it and we had to switch. Now if it's available on the market, without sanctions,
my point is, why should Donald Trump be making whatever decisions are taking us off? Anyway, the pictures coming in are part of the ritual of budget making, where the finance minister meets the Rashtrapati, presents a copy of the budget to her.
E-copy.
In copy, and then sort of moves on her way to Parliament. So this is all part of the act of budget making. Next to Mr. Murmu is the MOS Finance.
Yes.
And he's also now the UP BJP president. So Mr. Chaudhary wears various hats. So Draupadi Murmu and Nirmala Sitharaman, and probably, of course, you've got a woman president and a woman finance minister. That doesn't happen too often. Today I was recalling when they spoke of Nirmala Sitharaman's 9th consecutive budget. Nirmala Sitharaman first came on a TV studio on a show I did in 2008. And the only reason is I rang up the BJP person and said I want an English-speaking spokesperson. Because they were giving me only Hindi-speaking spokespersons on an English language show. And they said, oh no, we've got this new spokesperson, would you like her? I said, sure. To the credit of Nirmala Sitharaman, she came perfectly prepared, focused, came to the studio. Didn't even say that I want to do it from some external Zoom link. There was no Zoom also in those days. Came, and it's quite a meteoric rise when you think of it. She's been Minister of Defense, and she's been Minister of Finance.
And Commerce. Let's not forget.
So
and Commerce.
In 17
in
years,
2014, yes.
Since I first met her, Nirmala Sitharaman यहाँ से वहाँ गई है, हम यहीं के यहीं रहे. That's the only difference.
Before we slip into a break, a quick look at the markets. Wrap it up for us, Sakshi, on what the markets are looking like right now.
Absolutely. So the markets are nervous. I mean, we are at 932 at this point in time. And what we are going to be probably asking the question is, after we've signed mother of all deals, is it going to be mother of all budgets that finance minister is going to present today? And that is something that the markets will be watching out for. Remember, the markets are down 4% down on the Nifty ahead of the budget all of January. And the Nifty is now only looking at any good news by way of taxation that can probably lift the sentiments on ground for investors at large. At this point in time, a nervous getting into the budget speech at this point in time.
Okay.
Fingers crossed for all the sectors.
All right. At this point, let's thank our colleagues from Business Today, Shailendra Bhatnagar, Abha Bakaya, and Sakshi Batra. And viewers, this is also a beginning for us for the Business Today show, the markets show opening and closing here on India Today, brought to you by the National Stock Exchange. As we continue our coverage, I want to toss this one to you, Rajdeep. In terms of that term that you have dealt with, dream budgets, the scope for dream budgets again changing because the Indian economy has been opened up, license Raj has been dismantled to a very, very significant extent. Yet budget making continues to fascinate everyone, including us who do it for a living. What do you think is your most seminal memory of the budget days?
Look, I'm not going to go into the past. You'll make me feel even older. But I'll only say that these words used, big bang budget, dream budget, I think we should refrain from making, these catchwords. They make great headlines. You remember Chidambaram's budget in 97 was sort of billed as the dream budget. Then we've had budgets being built as big bang budgets. I think budget making should be prosaic. The actual, what should be there is a vision. I have absolutely no problem that budget making increasingly should be about the vision and the direction in which you're taking the government. The word you used is the buzzword at the moment, deregulation. Everyone you talk about to says this budget will be about deregulation. Now, what does that mean? I know Shankar has been writing about it for years. And just one more point.
Yeah.
For years, we have not focused on state budgets. As the economic survey also pointed out, you've got about 19 states now with high revenue deficits. How much do we actually look at state budgets? State budgets actually at the end of the day affect far more.
No, Rajdeep, and that is why one of the other things, and that happens every 5 years, will be very significant this time, which is the report of the 16th Finance Commission headed by Arvind Panagaria. That will now decide what will be the share of states in the overall central kitty. And remember, from 2000-2001, it's gone up from 29.5% to 41%, with that additional 1% of 41 being on account of Jammu and Kashmir. And remember, I think for the state governments, they will perhaps, state finance ministers, state chief ministers will be looking at that with a great focus, because it's also about the so-called alleged north-south divide, which is also played out politically, and the allegations that the center is pulling back funding. See what is happening on G bill.
Sure, and you've got 4 big state elections in just a couple of months. So we've seen in the past, budgets have been at sometimes influenced by immediate electoral considerations, which is why I said you want a broad vision. You don't want to look at just the next 3 months, and to the credit.
Which is why the promise of the government that 75 years might be a change. We might just see this whole changing once again. We will be left with no arguments to make on it.
So in a strange way, rather than look at the next 3 months, look at the next 20 years. The government talks of Viksit Bharat 2047. But Shankar Iyer, because you've been writing about it so often in terms of deregulation, this whole buzzword, it's become almost like a buzzword that this budget will see deregulation. We've seen many false alarms there with governments in the past. There have been pushbacks. Do you believe now the government has the strength, both politically and in terms of certain global headwinds, to take the kind of tough decisions, some of which have been taken in the last 12 months by the Modi government, the so-called Reform Express? Do you believe that that is going to be a critical aspect of what we will see today?
Nothing like a crisis to clarify the mind.
That's right.
So all of the reforms that have happened in India are mostly driven by some form of crisis or not, and that sort of gives me a shot at plugging my book, Accidental India. But more importantly, if you look at the last 10 years itself, labor reforms, the labor code was first drawn out in 2015-16, was reformalized in 2019, was sent to the state governments in 2020, and has been officially sort of unveiled in 2026. This is a government which has had a full majority. This is a government or a political alliance which is ruling in 15 states, and yet they couldn't push. Now let's go back to ease of doing business. For 10 years, we've been hearing ease of doing business. This year, earlier, I think in August or September, Parliament, there was a question, how many clearances you require for a power project? 116. And for the other sectors, it's even worse. 10 years back, when Amitabh Kant used to be the new poster boy in DPIT and sort of talk about ease of doing business, I asked him whether they have ever done a flowchart of the clearances, the permissions. 115 clearances, which means that the file moves from the municipal center to the state capital to the national capital like a mileage gatherer. And all of this is completely raised. Let's see whether the Somnathan committee actually produces something. Because it's easy to say mother of all deals when we still don't know what is the impact of the UK deal.
No, but let's look at this. The fact is, yes, over the years, there have been various, this debate has gone on about the number of regulatory compliances you need. To be fair to this government, they've made the effort. You cannot fault the Narendra Modi government on effort. Whether it's translated on the ground into, I meet MSMEs who still say that they get haunted both by GST tax inspectors, there's tax inspector Raj of GSTs, and they still have an unusual number of compliances to fill in. So it comes down to it, Rajiv, one thing is intent. the Modi government has shown intent on some of these issues, particularly over the last 12 months. Intent translating into action on the ground. Is that to be done in Delhi or is that to be done in the states? Is a question that's often asked.
I can't sort of resist the temptation.
Yes.
This government intent is always executed. Whether policy is executed or not is a separate question. The Prime Minister says...
Give me an example.
So they have said for years that they will fix the power sector. This is the second bailout that is being planned next month in the new electricity bill in the last 10 years. Last time the Udaya or scheme was there. This time will be some new name. But the power sector loses something like 80,000 crores every year and they haven't fixed it.
Very quickly, Rajiv, yes. Do you believe, where is the block for intent? The buzz is that this budget will be about a vision statement. It's one thing to have a vision. How do you translate the vision into action on the ground in a country of a subcontinental size with chief ministers, many of whom believe they are just as powerful as Delhi?
So some of these items are in the union list and thus the central government has to drive them. But many of the items, like we discussed, are also now state subjects and which have to be driven by different states at different levels.
But 19 states with huge revenue deficits before every election, the kind of freebie culture that it is.
There is the double engine sarkar now.
No, but whether it's double engine, triple engine, the fact is across the board,
they should implement these reforms.
One political intent which is being displayed perhaps is also in the choice of the sari of Finance Minister Nirmala Sitharaman. I'm going to put that out. It's very interesting that she is wearing a hand-woven Kanjivaram sari, sending a message to Tamil Nadu. And if you look at, this is her 9th consecutive budget. And from 2019 to 2026, the transition has been rather very, very interesting. Last year, the message was going to another poll-bound state, that is my home state of Bihar, where she chose to wear Madhubani print sari. This time it is Kanjivaram, honoring perhaps the Tamil Nadu's age-old weaving legacy. So that is how it has been from Ikkat to Bomkai to Katha and to Madhubani. So the message is very clear that the intent and, of course, the political messaging is for one of the poll-bound states, which is Tamil Nadu. We should be prepared for some SOPs to come in for also Bengal and Tamil Nadu, keeping in mind that. But just look at the transition, Rajdeep.
Sure, but
2019 to 2026.
I take your point, but style, you see, this is Sanjay Baru, as someone who worked closely with government over the years. Is there a tendency of finance ministers to play to the gallery as well? That this is their big day in the office, so they need headline, whether it's the sari you wear, whether it's the kind of, there has to be sher or shairi that Prime Minister Manmohan Singh as Finance Minister would resort to. Otherwise, a very careful man, suddenly on budget day, you would hear the Finance Minister remembering fairs or poets of the past. Do you believe style sometimes overcomes substance? Because substance goes well beyond, well beyond what happens in the budget.
This is what television has done to the union budget. You asked earlier, since when I was covering the budgets.
Yes.
In fact, 40 years, 1985 was the first time that I actually sat in Parliament listening to the union budget. VP Singh was the finance minister. It was not on television, right? When live television started on budget day, finance ministers have become, first of all, conscious about their national audience. And increasingly, governments have used the budget speech as a political speech. I think, we've been talking about the significance of the budget. Really, Part B was the only part of the budget which was important in the old days. Because you talked about taxes, you talked about customs, duties, etc. All that is out, right? All that is mostly out. That's why I said this year, the budget will be largely about tariffs.
And that is why, Rajdeep, perhaps the point that Dr. Baru is making, more attention in the political economy terms should focus on the 16th Finance Commission report. That will be significant. I just want to make a quick interjection.
Yeah, please go ahead.
Shankar, you said you were plugging your book about the accidental India. To my left here, Dr. Baru wrote about accidental prime minister. So, Rajdeep, Maria, imagine the coincidence of having two authors.
Accidentally.
And both of them are not accidental authors. But yeah, Maria.
So we are looking at those visuals now coming in where the photo opportunity at the Rashtrapati Bhavan is over. Now Finance Minister is heading to Parliament. That's where the meeting with the cabinet will happen, and the cabinet will be approving the budget, and then the finance minister heads to the Lok Sabha for a joint session where it will be about tabling of the budget. Piyush Mishra is joining us from the Rashtrapati Bhavan, from outside Rashtrapati Bhavan. Piyush, so finance minister is now on her way to the parliament.
Well, yes, absolutely. Well, absolutely, Maria. Finance Minister has just left from the Rashtrapati Bhavan. Right behind me, you can also see the convoy. This is the convoy of Finance Minister Nirmala Sitharaman, which is now heading towards the Parliament. She is now coming out from the President House. This is a Raisina Hill, and now she is going towards the Parliament House, where the cabinet meeting will happen. And in that cabinet meeting, the budget is going to be passed. And after the budget is passed, it is going to be tabled at 11 a.m. Before that, Finance Minister has just met with the President of India, where she has sought a permission to table the budget. And after seeking permission, now these are the live visuals which we are getting from Raisina Hill President House, where Nirmala Sitharaman has just come out along with her colleagues, and she is now going towards the Parliament. My video journalist Ankit Singh can zoom and show you the visuals of her vehicle entering inside the Parliament. These are the live visuals of the new Parliament building, where Nirmala Sitharaman has just entered. You can see as to how her vehicle has gone inside the Parliament House. Any minute from now, we will also see, Maria, the cabinet meeting to take place, and the cabinet is going to pass the budget, and then
I'm just going to stop you, Piyush.
Budget will be tabled. A lot of discussions,
I'll stop Piyush at a moment, because, yes, Maria, one of the points that was made is we're going to look at specific areas, and our budget dashboard will provide us that, of the critical areas, the challenges that lie ahead of Nirmala Sitharaman. Now, one of the areas, of course, is infrastructure. The Narendra Modi government has focused a lot of its political equity and financial equity, if you want to call it that, on building a strong infrastructural base. They've tried to make sure that that becomes, in a way, a big talking point. One critical area that Shankar mentioned, though, is power. Just give us a sense of investments that have been made in roads, in power over the last few years, and whether this government has any more fiscal headroom to continue with that kind of infrastructure.
I'm looking at the roads first. Remember, the government has been emphasizing that it is spending a lot in building infrastructure. So look at this graphics. This is essentially talking about the road infrastructure over the last few years, particularly financial year 2020 onwards. There has been overall the number of highways built per year that has gone up. If you look at it, it has moved up to 13.3K per kilometer. These are the visuals now coming in from the main gate of the Parliament of India, where the entire team, this is the budget drafting team, along with Finance Minister there. This is the second round of photo opportunity, and then she heads inside. I'm looking at that visual, Rajdeep, and as a woman, I want to highlight also the second woman who has been involved in this drafting along with the Finance Minister, that is the DEA. A word on her, Siddharth. This is rather interesting because the focus has been...
Well, Anuradha Thakur Maria is actually one of the stars in policy making. The Department of Economic Affairs, one of the most crucial departments in the Ministry of Finance, because pretty much everything, including the appointment file for the governor of the RBI, goes through her. So I think obviously chosen for her merit and performance, and clearly this has the hallmark, this budget, of a very capable set of officials. But remember, this is also a unique budget in the sense that there is no finance secretary. Rajdeep, that's usually the process, that the finance secretary is considered the first amongst equals and convenes the entire process. So I guess in some ways, the finance secretary not being appointed, the reasons are not known publicly. But I thought that is also Dr. Baru a point.
I believe the cabinet secretary is doubling up as the finance secretary.
Well, he was one of the best policy makers that we have seen in North Block for.
But would that be the first occasion in the country's history that you have a budget exercise taking place without without a full-fledged... I don't think it's ever happened that you would not have a finance secretary at a time when the budget is in place.
Absolutely.
I mean, that, it certainly is a question worth asking. Why don't you have... You need a full-time finance secretary, surely. Mr. Zarabi, don't
yes,
you?
Absolutely.
I mean, the government should be giving you a reason. You're saying...
Well, I think it really does. The finance secretary is not a post. It is the first among equals. But that role has obviously been performed by...
It's a 12-member committee which has been involved in this drafting.
Maria, since you have the budget dashboard, I wonder if you have the data on GST collections, if at all it's there. But the reason I ask is, viewers, we just have had the latest GST data come in, and this broader point.
So this is the number here.
Yeah, okay, let's go ahead. Go ahead,
yes. So this is about the GST collection annually. If you look at the larger picture, for financial year 2025, it is around 16.5 lakh crores. In 2024, it was 22.1 lakh crores. So remember, it was in the second half, around October, is when the second generation GST reforms were brought in. So the government's calculation certainly has been that this will increase the overall GST collection. Projection
and
for
Maria,
this year.
you keep that data on screen because we have the latest January month data, and there's a political economy story which Rajdeep, Maria, our guests could reflect on. Net GST collections in the month of January are up 6.8%. But the most interesting part, if you see from a GST, and we know the way it is calculated, Haryana has seen 27% growth. And the steepest decline at 46% is in the state of Jharkhand. Now, with the framework of GST, Shankar, does this sort of tell us that Haryana is now a powerhouse state that has gone beyond what it was 15, 20 years, 30 years ago?
Naib Saini can be happy for 24 hours, but the fact is that this reflects the higher sales in automobiles and therefore the indent on the GST collections from Haryana. And Jharkhand is down because no mining has happened due to unseasonal rainfall, and the down numbers in total mining were visible in the GDP figures. So this is a one
Goa has also struggled with that.
Yeah.
Dr. Baru, on the 16th Finance Commission, before we go back to Maria, how significant is this report for center-state relationship and that so-called divide that was coming up, at least in debate terms?
No, first of all, the Finance Commission report is significant because it's actually a constitutional body that every 5 years has to take a view on the distribution of finances between center and states. And many state governments have been complaining that they have not been getting due share. So what this Finance Commission says is very significant. It is also significant that this is one of the first finance commissions headed by a non-finance chairman, Arvind Panagari, as a trade economist. You know, for the last several years, we've had some people who have been in the field of public finance. So purely in professional terms, I'm curious to see what kind of imprint the chairman would have, because he's not a finance guy.
We're just getting some breaking news at the moment. Gold and silver continue to crash. Remember, there's been a lot of investment in recent times in gold and silver. But the big news this morning is gold and silver continue to crash. Gold, silver prices have hit their lower circuits today. Prices have crashed ahead of union budget. The price crash amidst the strengthening NG dollar. You want to explain that, Siddharth, for our viewers? What explains gold and silver crashing in this manner?
We had commodity market experts earlier on the show. There are two reasons. One, that this rally was unprecedented. And there is some fundamental, particularly on silver, which regards to the new new EV age that we are in. But profit booking seems to be the single most important factor. Maybe Rajiv can add to that. And the fact that as far as the global uncertainty is concerned, Greenland and other things that President Trump has been up to have also fed into safe haven buying, and gold, of course, the safest of the safest bets.
No, these things go in a reflexive loop. High prices, in fact, counterintuitively, sometimes bring in even more investors who come in out of greed.
It's the fear of missing out, Rajiv, which is a lot of people
FOMO,
fall for that. FOMO.
Driving it into a parabolic rise.
Okay. Maria, you wanted to give us a graphic on gold rates and how they've gone.
Yes, so this is how it is placed right now. And of course, this is the assessment, as you were pointing out, it has hit the lower circuit. But it's actually showing that, sudden increase post 2024 in the last 2 years. And the increase has been rather sharp from 2025 January onwards. So perhaps in the last 1 year alone, this is how the graph is looking like. So this is the price of gold. And now let's look at the silver prices. That again has been growing up sharply since January 2025. So it is in the last 1 year. And this has to do with how the global, the turbulence has been globally and with regards to geopolitics. I think when we look at these numbers, Rajiv Mantri, come in on this, with both gold and silver hitting the lower circuit just ahead of the budget, should this be read in terms of some kind of announcement which can be also for the government to acknowledge it as a matter of concern?
So I would not read too much into the week-to-week prices, but I think there is a beyond the week-to-week prices, there is a bigger story probably here regarding the status of the dollar in the international economy. I think a lot of analysts and commentators have been looking at that very closely on how the dollar's position is getting weaker and people are seeking alternatives. Now, obviously, there are no alternatives. Maybe Shankar, you want to also comment on that?
Just to add, we've got more breaking news, because there's gross GST collection numbers announced, rise 6.2% in January to over 1.93 lakh crores. The gross GST collections rise to by 6.2% in January. Shankar, there's been a concern over tax revenues in 25-26. States have also had their concerns on this. How do you see it? GST is broadly seen as a game changer compared to previous systems. And the government did go in for reforms in October to try and simplify certain systems. Has enough been done? Obviously, it won't be done in the budget now. It will be done outside the budget. But do you believe the government has enough fiscal headroom at the moment?
Just about, I think, 1 lakh crore must be there with the government. It has a very limited headroom just now because the corporate and direct taxes collections are down, the GST has been cut. The GST story, in fact, is interesting that the government had estimated that they would lose only about 48,000 crores or 50,000 crores because of the cuts, because they expected an upside in the sectors where they have raised GST rate. But that hasn't happened. In the last 3 months, the GST collections have been down by about 60,000 crores, which was far in excess of what they had estimated. So there is something that they don't understand, and that this is typically about continental size economy, is you wonder which part of the story is not playing out. And to some extent, their own inability to grasp it is their own fault because they are not willing to release GST data. This data of collection of GST, just like the question about Haryana and Jharkhand was asked, if this data was allowed to be explored by economists, analysts, was made public, was put into AI, you would get much more to the district level to propel the economy. Their inability or rather resistance to release data, referenceable data, is actually holding back the economy.
Okay, we've got Prime Minister Modi has reached Parliament Union budget. This is, of course, again, part of the rituals and tradition that you have a budget cabinet meeting before the finance minister eventually goes to the Lok Sabha. So that meeting is taking place. But Maria, you just want to give us the GST annual collections on the budget dashboard.
Yes, so just look at this data. And of course, the GST reforms, the first set came in the year 2018. And since then, it has been increasing, barring the year 21. That was the COVID year, of course. And then comes this particular graph of a sharp rise of 22.1 lakh crores with in financial year 25. And the sense certainly is that it will grow up further in this year. But as Siddharth was pointing out, perhaps the bigger concern will be with regards to states and what is their share in this collection, because that's what the states have been saying in terms of their share going down.
Rajdeep, in fact, 1st February is another first. We have spoken about some first, and this is that the 40% rate that applies to luxury cars, to tobacco, pan masala also kicks in from today. Yes, Dr. Baru.
You see, one of the issues which we're not talking about is the suggestion that we should get away from the secrecy of the budget. You just shown the finance minister going to Rashtrapati Bhavan, now briefing the cabinet, cabinet hears it for the first time. All this is from an earlier era where taxation was the key to the budget presentation. All of us are looking at sales tax, excise duties, etc. All that is out of the budget. And I think there is a time has come for open budgeting that happens in most modern economies, most developed economies. There's no reason for this secrecy. There's no reason, as Shankar said, data should be available in advance for people to analyze.
You're saying it should be before the budget speech, the data should be put out in the public
put
domain.
out everything and let people look at the numbers, and finance minister just comes to the parliament to get parliament's authorization for the spending, for expenditure and for revenue raising. But today, at a time when none of the taxes are going to be impacted, the kind of secrecy we saw in the old days is no longer relevant.
Okay, that's an interesting point. Let's give you the headlines at the top of the hour. All eyes are on Union Budget 2026. Nirmala Sitharaman to deliver her 9th consecutive budget, a record. She is expected to lay a roadmap for the government's Viksit Bharat plan, taxes, reforms and a growth push. Spotlight will be on Part B of Nirmala's speech, which is expected to have the roadmap for the future.
Finance Minister Nirmala Sitharaman and the Minister of State for Finance and others meet President Draupadi Murmu. Before the budget, President gives dahi chini as sign of good luck to the Finance Minister ahead of the budget.
And Nirmala dons a Kanjivaram sari, hand-woven in Tamil Nadu. Nirmala's big Swadeshi pitch on budget day after a Mangalgiri, a Bomkai, a Madhubani sari in earlier budgets. Nirmala champions handloom weavers and their fantastic work.
But amidst the dwindling government revenues with tax cuts, support for jobs, manufacturing and MSME still remain key challenges. What about SOPs for poll-bound states and capital expenditure on infra that may continue to remain a central plank?
And just ahead of the budget, US President Donald Trump's big remark on India. He has said that India is coming in, will buy oil from Venezuela and not Iran.
Okay, all eyes on Nirmala Sitharaman, Finance Minister, as she delivers her 9th consecutive budget in about an hour from now. Prime Minister Narendra Modi has reached Parliament where the cabinet meeting will be convened. Remember, as part of the tradition, it is at that cabinet meeting that Nirmala Sitharaman will officially take permission from the cabinet before she goes to the Lok Sabha to present the budget and then tables it later in the Rajya Sabha. 9 consecutive budgets is a record. The highest number of budgets, interestingly, were presented by Morarji Desai, who was finance minister through much of the 50s and the early 60s. But all eyes now on Nirmala Sitharaman at the moment. Remember, of course, that this is a budget in a session which will be followed by a string of assembly elections. So the political fallout will be looked at closely. Maushmi Singh is there in Parliament. Maushmi, we've seen in the past the opposition gearing up to encircle the finance minister, but recent election results have almost seemingly suggested that the government is on a bit of a roll. What's the general mood in Parliament? First of all, Sunday, parliamentarians don't usually like to come to Parliament on a Sunday. That's unusual. But is there a sense that the opposition will look to use this opportunity, including the budget debate, to score some points ahead of the election? Is one eye, both of the government and the opposition, on those elections that follow soon after?
Very good morning, Rajiv. The parliament is buzzing and but natural, it's going to be a balance between, a rational budget and a poll budget. We've seen last time round before the Bihar and the Delhi Assembly elections, the tax relief and the Makhana board announcements and multiple announcements of highways and railways related to poll-going states have really spelled it out that the 5 election-going states could expect some big surprise for them. And we've seen Nirmala Sitharaman wearing that Kanjivaram sari from Tamil Nadu. So clearly, a lot of messaging there. But I've seen a lot of students coming in. Nirmala Sitharaman apparently will interact with students from across the country after they are going to see the budget speech live. I've also witnessed lots of chartered accountants coming into the parliament premises. They will be witnessing the budget speech live. So as you said, it's going to be really historic because Nirmala Sitharaman is known for a very long budget speech. She holds that record for 2 hours, 42 minutes. We have to see whether she curtails herself within 2 hours or like last time, or whether she exceeds that, and that will actually decide whether the parliamentarians can have their lunch on time as far as, the Sunday is concerned. But yes, a lot of eyes on Nirmala Sitharaman, including the oppositions.
Okay, just to introduce the guest that we have with us, Dr. Sanjay Baru, veteran economic editor, columnist, author, is with us. Also, Rajiv Mantri of Navam Capital is with us, investor and author. And Shankar Iyer, another veteran of many budgets, author. So we've got lots of wise heads here who've covered several budgets, even more than Nirmala Sitharaman's 9 budgets. We also joined by Shehzad Poonawalla, national spokesperson of the BJP, and by Rahul Ahluwalia, founder director of Foundation for Economic Development and former member of the Niti Aayog. Shehzad Poonawalla, just very quickly to pick up from the point that was made about this budget, about budgets normally having some shadow of the election. Last time was on the eve of Delhi elections. There was a major tax break given, particularly for the lower middle classes, many of whom felt that they weren't getting enough out of budgets. Do you believe that that shadow still exists this time? Or will it be the vision statement that we are told that will dominate this budget?
First of all, good morning to both Rajdeep and Maria and the other people who have to come on a Sunday. And new tradition also in this way, that first budget from Kartavya Bhavan, from Atmanirbhar Bharat Bhavan. So now, having said that, Rajdeep, just before I come to your question, 10 seconds on something I heard before you were addressing with Sanjay ji, that why budgets are not open. Rajdeep, like me, you have studied law. We both didn't practice law, but you have studied constitution. Article 112 mandates that budget can have to be placed only before parliament, before it is put in the public domain. So it is constitutional the duty of any government that it cannot make the budget public, even if it has no issues on secrecy, because this is our parliamentary and constitutional obligation to first place it before parliament, and only then the budget can be made public. So just for your clarification, viewers' clarification also. Secondly, Rajdeep, the worst thing, the most important thing that people accuse us is कि ये मोदी को देखो, ये मोदी जी जो है ना, ये good politics को good economics बना दिए हैं. हमने GST, when we got in GST 2017, Gujarat elections were around the corner. Every political analyst said कि मत लाना GST. Modi ji was the person who said मुझे चिंता नहीं वोट की, ये मेरे देश के लिए one tax one nation लाना है. उन्होंने लाया. We suffered little bit in Gujarat elections, but despite that we have bought that reform. And today, Rajdeep, I want to give you something that will be the key word of today's budget. It will be Gita. You will say, अरे इसमें भी हिंदू मुस्लिम कर दिया पूनावाला ने. Gita means G for growth, I for infrastructure, T for technology, and A for Atmanirbhar Bharat. Highest growing large economy in the world. We have gone from 11th position. Sorry?
Interesting. It will be, Shehzad Poonawalla, I've always said that if you can come up with these acronyms all the time, you will go very far in politics, because this government likes acronyms. But we will keep that in mind. Gita is what you said.
But
Rahul Ahluwalia. Okay, just a minute. We've got limited time today. We've got limited time today. I'll give you 10 seconds more. Keep it at 10.
At least let me elaborate on my Gita. See, we are already registering highest growth. We have pushed in great capital expenditure in the last 10-11 years. Infrastructure पे boost है. We have now made technology accessible to the public, digital delivery of services and goods. And 1 lakh crore रुपए बेचते तो 1 lakh crore रुपए जाता है. 85% is not being eaten up. And Atmanirbharta can be seen the manner in which our defense exports, our mobile phone exports have increased. And we are at lowest NPA, lowest inflation rates. And therefore, this gives us more room to boost the consumption, private consumption also, expenditure in infrastructure also. And despite the global headwinds. We are seeing it as an opportunity.
The finance minister will be briefing the spokespersons around 1:30, but Shehzad seems to be prepared much before that briefing that will be done by the finance minister.
You know, one of the key, of course, aspects is for all the talking up of the economy, there are certain concerns. Private investment continues not to pick up. Rahul Ahluwalia, your founder, director of Foundation for Economic Development, former Niti Aayog, should that be a concern for whatever has been done or not done in the last few years, post-COVID? Private investment has simply not picked up.
That's a great question, Rajdeep, and it's exactly what I wanted to talk about. So thank you. In fact, that's the big story of the last 5 to 6 years, right? The big concern has been private investment has not picked up. Our diagnosis is that private investment is not picking up in India because we are not globally competitive. If you think about manufacturing scale, if you look at the one big success story that India has had is Apple manufacturing iPhones in India. India is only 2% of Apple's global market. The only reason they are manufacturing iPhones in India is because they can export them to the rest of the world. We have to achieve this kind of competitiveness in every other sector. The investment not picking up is a signal that public capex and public investment in infrastructure is not the answer. So what is the answer? And I think the government is on the right track, and you've been mentioning it yourself on your show. Deregulation is the answer. Ease of doing business is the answer. A globally competitive business climate is the answer. So that's the big picture that we should be looking for from this budget. Deregulation, I just one last point I'll make is it comes in two flavors. One is you have to reduce the obstacles. The other is you have to increase the certainty and the stability. And both of these things are really more signals that you can expect from a budget. Concretely, I think tariff is the one big thing that we should expect. Tariff rationalization and tariff lowering is something that I'm really looking forward to, at least in the budget.
Okay. Rajiv Memani, President CII, good person to get on that. Private investment just not picking up. And I'd like you to give me a good answer as to why that's happening, Rajiv.
Hi Rajdeep. No, I don't think it's accurate to say that private investment is not picking up. I think private investment may not be growing to the extent that we all want to desire. But I think private investment is picking up in the last 12 months, 18 months. Even if you look at the data for March 25, I think private investment showed good signs. I think during the first quarter of this year, it slowed down a little bit because of all the tariff-related uncertainty, but it started picking up again. So I don't think it's accurate to say that private investment is not picking up. That's first. Can it do better? Surely it can do better. I think there's much greater potential. Balance sheets are under leveraged. Economy is growing very well. So it should be picking up much more. And I think my personal view is that it will pick up more as capacity utilizations go up. And I think as we have more focus around ease of doing business, more focus around factor cost of production efficiencies in India, more focus around which are the goods and services that India really wants to focus on. Maybe a list of 7,500 goods that India wants to focus on. I think it'll get a boost further. One of the other reasons, Rajdeep, that there is a challenge also is because of the global uncertainty, and you have large manufacturing capacity that's built up in one part of the world. I think there is always the price volatility, commodity volatility that happens because of that, and also the amount of technology and investments that's gone there. I think sometimes even for private sector to take that risk and leap of faith, they would need some more. Maybe that's why I said focused PLIs, focused incentives to ensure that they're able to weather the initial storm when they're looking at setting up large investment capacities in India.
Maria, you have the numbers.
Yes, so if we were to look at the private investment trends, the latest trends in India, sir, it looks like, in terms of financial year 2023-24, it was around 4.2 trillion rupees. In 2024-25, it did go up, but in 2025-26, it is around 4.89. What do you think should be done, Rajiv Memani, in this sector then, for the private sector to pick up that trend, because that's needed?
No, it is. I think it is picking up. I mean, if you go sector by sector, you can say that the numbers are picking up. As I said, the first half of this year, it was slightly slower. because of what was happening in the rest of the world, but private investment is picking up. Having said that, as I said, there is always more that can be done given where Indian economy is. My first thing is, I think we need to have, as was said earlier by Rahul, I think on ease of doing business, on factor reforms, I think India needs to be more competitive. Land reforms, availability of land. It takes more time to set up plants, projects in India. And I think the government has done a lot in the last 6 to 12 months. I think we also need to communicate much more. So I think that's one area that I think we need to be doing more. And secondly, I think we need to have, we talked about the success in electronics manufacturing and others. In semiconductors, we are seeing good success. One of the reasons for that is we have a very clearly laid out incentive scheme, especially in newer areas and others, PLIs or other incentives that have been given. I think for chosen products where India wants to be, as was said in the economic survey, where we want to be, strategically well-positioned, strategically resilient or dominant, whatever the word used is. I think those products we need to identify and have a clearly laid out path in terms of technology partnerships, incentives, buying preferences, long-term glide path on customs. I think those are the areas that we need to look at, and as was again said by Rahul earlier, I think if we have customs duty rationalization that we will, at least for the raw material products and others, that will also make India competitive. I do believe that as India signs the FTAs, and once these FTAs become effective, which will take, which could take 6 to 12 months depending on the FTA we're looking at, if that happens, then that will give another boost to manufafacturing in India. But I do agree, Rajdeep.
Dr. Maru, you wanted to put a word in.
Be one of the central things.
Sorry, Rajiv. Yes. Yeah. Go ahead.
This is when I miss Rahul Bajaj. You said earlier about Indian business giving 11 out of 10 for every budget. The fact is
I said it a few days ago. Yes, maybe yesterday. Yes.
The fact is that private investment has not been picking up for 10 years. Forget about last quarter or the last year. For 10 years, it's been stagnant. And the government, the finance minister herself asked Indian business, why are you guys not investing? We talk about animal spirits. I wish Indian industry were more forthright in telling the government why they are not investing, rather than fudge around and say, no, it's going up a little, it will go up. Come on, there is a major problem of confidence.
Yeah, go ahead, Rajiv.
No, so I would say private actors are rational. If you look at capacity utilization, it's been stuck below 80%.
Exactly.
So why would people put up more capacity if your existing capacity is not utilized?
No, but isn't it partly, or at least that's the explanation given, that we live in extremely uncertain times?
No, Rajdeep,
and the geopolitical risks are such.
I'm afraid that's not the answer. The real problem is demand. Why is capacity utilization low? It's not,
it's not low. I think it's optimal.
No, it's not optimal. It's below 80%. Optimal. You say optimal when you hit 80%. That's when companies begin to look at future investments. It's been below 80%.
Let me bring
it is productivity driven.
Demand is not picking up.
So productivity is making your assets sweat better.
No, but unless you get demand, unless domestic demand picks up, the government has made efforts.
Clearly, the economy has been growing, right? The economy has been growing.
But why is it therefore, when the economy is growing, when your macroeconomic numbers are so solid, why is it that investors are still not putting their money where their mouth is the question?
One data point and one question. Data point is Indian companies are sitting on at least 6 lakh crores.
Yes.
Okay. The question they are asking is, what do we produce that China is not able to sell in India? Because we are not competitive against China on across the board.
But Shankar, demand is also not picking up.
That's a secondary.
That is why you gave those GST reductions
so that automobile industries
demand goes up.
I'm also joined at the moment by Varun Santosh of the Congress. I'll go to Shehzad in a moment because he wants to respond. But Varun Santosh, it's all very easy to say, that private investment has not picked up. This government has done a lot to encourage private investment over the years. They've given various incentives. We can go to the corporate tax breaks that took place a few years ago. But for some reason, private investment is reluctant to invest. Now, is the fault lie with the government or does it lie with the investors? Does it lie with private sector? You're sitting on 6 lakh crores, but you're unwilling to put your money, I come back to it, where your mouth is. You'll come on our shows and say, yes, we want the animal spirits of the economy to revive, but they're not reviving.
Rajdeep, who marshals the resources of the
banks
country?
also have been restructured.
So you've got all that in place. The banks have been restructured. Why is investment not picking up?
see, what is the duty of the Prime Minister? To marshal the resources of the country to make it work for India, for Team India, right? Now, why is private investment not picking up? Because 8 lakh crore of, tax cuts have been given, yet demand has not picked up. Is because it's a complete mismanagement of the economy, of the Prime Minister.
Give me the exact mismanagement of the economy. How? Give me an example.
Right. Now, let's take the economic survey. The government's own economic survey of last year said that, quoting Lowy Institute of Australia, that power gap of India is -4, which is the worst in Asia after Russia and North Korea. Which basically means, what is the power gap which Lowy Institute says? We have great economic resources, we have a great youth dividend, we have a great R&D system and tech ecosystem, yet we are not able to marshal all of this to work for Team India, which is a 140 crore people. Why? Why? Because let's go back to Gita, right? Which Shehzad Poonawala said. Gita says, Karmanye vadika raste ma phaleshu kadachan. Do your work and let the fruits play out.
Rajdeep,
What the politics of BJP is that they only focus on the politics, the fruits of power, and not delivering it to the people.
No, these are all, you see, Sean of political reckless, I want specifics.
Please answer that.
We've got a quick response from you, Shehzad Poonawala. You see, this is the major challenge ahead of the budget. What are you actually going to do to revive the animal spirits? As I said, government has made various efforts, but they are not effectively working on the ground in terms of private investment. That's the reality. CapEx is what is driving your growth. It is not what should be driving your growth, which should be private investment.
Rajdeep, now please be fair to me and give me 30 seconds before you make your next intervention. First of all, if you see the corporate investment announcements, in H1 FY25 it was 7.9 lakh crore and now in H1 FY26 it is 14 lakh crore plus. Secondly, gross fixed capital formation is up by 7.8% in this FY, and apart from that it is up to 30% of our GDP. It used to be 27% of the GDP in 2014. If you are saying this has not happened, then let me give you specific examples what we have done. Look at the investments that have come in through the PLI scheme. Look at the fact that we have now streamlined the labor codes. Look at the fact that now we have even boosted the consumption through GST 2.0 reforms. Look at the ease of doing business. And yes, कर्म करना केवल हमारी चिंता नहीं, स्टेट गवर्नमेंट की भी है. The regulation process that we are easing from here, we are removing compliances, we are removing archaic laws. What are the states? State governments also have to do their bit. They can't do Rajniti in the studio and then come and lecture us. Please tell me, Rajdeep, today,
most of these states are governed by the BJP.
1 second, Maria, just 10 seconds. Maria, हमारे स्टेट में तो अच्छा ही हो. For instance, I'll give you the state you are sitting in, Noida, Uttar Pradesh. In that place, we have now got a very progressive labor code. In fact, it allows the women to do the night shift also. But what is the Rajniti that Kerala does? कभी बोलो ना, बंगाल क्या राजनीति बंगाल के लीडरशिप क्या राजनीति करते लेबर कोड पे? Why aren't they doing the labor code reforms properly? Why aren't they following the lead that the central government is following? So reform process and regulation को enabling environment में करना is also the duty of the states. Many of the things are also dependent on the state government. Having said that, secondly, now see, I am sure Congress will have problem with Gita, but let me give you just one example, Rajdeep. There used to be 2 mobile phone manufacturing units or assembling units in this country. Today there are 300 plus. ये किसने बनाया? ये जिन ने बनाया क्या? Is this not a reality? Is this not a reality that today India is self-sufficient in its own mobile phone requirement? First, we used to import it, because of which we used to pay import bill for electronic goods. Please, Rajdeep, tell me, toys we used to import, 70% of our toys was from China. Today we are exporting toys up to 37%. Defense goods exports have increased to 23,000 crores.
But Rajdeep, this is an interesting data here. If you look at it in terms of FDI for various states, it's Karnataka, which is not a BJP ruled state, which is in fact a Congress driven state. It has $5.69 billion investment. So that's what it looks like right now. Moving to Maharashtra at 5.36, Tamil Nadu 2.67. So in top 3, it is the opposition ruled states.
except Maharashtra, which is, of course, BJP-ruled state. No, but, you know, before we make it a political debate, one last word I'll give you, and then I'll move to Chandrajit Banerjee.
No. What is the real wage growth of India? That's the data that we should focus on. 0.01% over the last 5 years. Devastating number this is. 0.01% real wage growth of Indians over the last 5 years. This is
partly colored by the fact that 2 of those years were COVID years.
But still, over the last 3 years, right? So, COVID is far gone now. Now, why are they failing? Because they're passing the buck again now. And, sorry, Sejad, Karnataka is leading, as Maria just pointed out. And point number 2.
Karnataka was in the top even when the BJP was in power. It's not as if Karnataka has suddenly become the #1 state once the Congress. You see, this is the problem. You all cherry pick what suits you all.
So let's go back to the basics then. Who leads Team India? It's the Prime Minister's job. He's the head coach, right? And
okay,
what?
In fact,
no.
In fact,
so he's
Priyanka Gandhi Vadra has spoken. Let's listen into what she's saying.
Sure.
I mean, it's very predictable reaction which is coming in from various political parties already now. Go ahead. Let's play the soundbite.
Budget से क्या उम्मीदें हैं आप? What's your expectation from the budget?
It's very. I don't have much expectations, but
जी, मैम एब्स्टीन फाइल्स पे कुछ कहेंगे? बजट से क्या उम्मीदें हैं आप? What's your expectation from the budget?
It's very. I don't have much expectations, but
जी, मैम एब्स्टीन फाइल्स पे कुछ कहेंगे?
Let's go straight across to Chandrajit Banerjee, Director General CI, now joins us. Mr. Banerjee, we are in the midst of an interesting discussion on what many believe is the big challenge for Nirmala Sitharaman at a time of global headwinds. How do you navigate what is a difficult economic environment and spur, to use the words famously used by Manmohan Singh in 1991, revive the animal spirits of the economy? The truth of the matter is, why is it that private investment is still not keeping up with what otherwise seems to be, from an Indian perspective, strong macroeconomic numbers?
So I think this was something which I would have really talked about strongly a couple of years back, or a year back even. But private sector investments have kicked in. If you see, there are sectors like the cement, there are sectors like steel, there are sectors like renewables. Many more sectors have actually picked up. So private sector investments are kicking in. But coming to your specific question, I'd like to really focus on, this is the time that, I mean, with the global headwinds which you really talked about, India can move into the next phase of reforms strongly, and reforms which are both at the central level and much more in the state levels that needs to be done. More powers to the states who, or rather incentives, if you would wish to use that word, to those states which do reform, and which they don't. And actually the investments figures in the states are in tune with those who are able to provide a stable infrastructure, be it social infrastructure, be it other infrastructure which are required. So I would really expect that capex to continue, which will crowd in private sector investment, reforms to continue, really focus on a cost and ease of doing business. But this is an opportunity, as you talked again about global headwinds. Let's also reform. Everything cannot be manufactured here. So trade reforms. So reforms in the trade side, 3-tier duties in terms of reforms, which was one very important factor, which we talked about the reforms earlier.
Mr. Banerjee,
landmark reforms took place. That's very critical.
Is highlighting an important point that the investors are sitting on around 6 lakh crores. Now, they are not ready to invest. Why do you think there is that great degree of caution or concern here?
So there are investors, both domestic and foreign, which are sitting. There is a global sort of turmoil, as we have noticed. But as we have also seen across the globe, that India still sits on a good spot. Yes, there are issues which needs to be seen with the prism of the global turbulences, for which investors might be sitting in. But there are good projects. There are good investable projects where investors are putting in their money. And the opportunity therefore lies in that there is money to be invested in. If we really create bankable projects, if we create focus on the capex, which I spoke about, and if we are able to crowd in investments through further reforms which we expect from the budget in a few minutes' time, I'm sure that will
Shankar
start
has a
flowing
question
in.
here. Please go ahead, Shankar.
Chandrajit, you've been a visitor to Davos and a knowledgeable person on many of the state investment summits. In your estimation, how many or what percentage of the MOUs get converted into actual investments?
See, I think, MOUs are one, but yes, you're right. I personally, and I think even states today have taken cognizance of the fact that what's more important is to be focused on what really happens on the ground and what investments come in. So because you mentioned about Davos this time, one was really looking at hopefully not more of MOUs, but more of what can happen on the ground, what type of investment opportunities and investments shall trickle in. I think the focus would have to be, and you are very right, the focus has to be on what would be the employment generated in X number of years and what would be the type of money that would be put onto the table in X number of years. There has to be finite period of time. And third, very importantly, what is it that one is offering in terms of infrastructure, just not subsidies and incentives, because sometimes that doesn't even come, the subsidies which are promised. So let's not get into that route of subsidies. Let's get into in the route of where it can be much more stable pipeline.
I just want to understand, and do you believe that this budget, in a sense, given these global headwinds, and we've spoken about this, how adversity turns into opportunity, this becomes the opportunity to reset the way we look at tariffs. We've struck these trade deals. This is the budget where you send that signal, even without going into specifics, that is the direction we are going. You need something like that, to give business the sense that this is now our moment. You strike a FTA deal, which is going to take 6 to 12 months. We don't know till the final print is out what it will look like.
27 countries, 27 months.
Yeah, that's right. We don't know how long that will take. But what you can do today yourself is perhaps use this budget to actually do what, let's say, Chidambaram did in 97 with direct taxes, what Manmohan Singh did in 91 with trade liberalization. This is your moment to look at tariffs.
This is, Rajdeep, India's IPL moment, since we are both cricket fans. What happened to Indian cricket after IPL is that we learned to play with foreigners in a domestic league. That gave us the competitive capability. The same has to be done by opening up sectors, allowing investments, dealing with FTAs.
Give me an example of the things that could be done. Any specific area where you believe this budget provides that opportunity?
Very simple. In agriculture. Agriculture has there is an opportunity to open up agriculture, to find ways to do.
Easier said than done. You've seen the political reaction, the backlash every time you mention the word. Mr. Varun Santosh's party will be doing high jumps. You see, in India, where you stand depends on where you sit. Even if he wanted to do it, he would in the opposition, he's not going to allow it.
But his party has spoken about the second green revolution for at least about 30 years
That's
now.
right. But I'm saying,
the problem
do you believe that this is because even when it comes to trade deals, what's the first thing, including the Prime Minister, they say we are keeping agriculture and dairying out of any negotiation. Do you believe it is possible to use this opportunity?
Amul cheese is being sold in Switzerland. So let's not sort of run down our competitive edge of Indian companies. When India's software sector was opened, it was offered to all the Infosys and TCS that they will close the option of foreign investment in that area. And Narayan Murthy and others, I think FC Kohli and others said, no, we will not close down. We will have 100%. Whoever wants to come, that is the only way we will compete. Do we close down on GCC? Now, slowly, we have opened up insurance, we have opened up telecom, we have opened up GCCs. So this is the way. So you let foreign companies come into
Shankar,
India.
The concern is that only the bigger players...
Autos and textiles.
Okay.
So auto manufacturing, textiles. These are areas where I think India should accept more and more foreign investment.
In terms of agriculture, the concern is that only the bigger players like Amul and all will benefit. What about the small farmers?
No, but Mr. Amit Shah has been creating some 500 odd cooperatives. I don't know
Yes.
to what extent, whether to control the finances of the cooperatives or to promote the cooperatives in agriculture. This has to be, somebody has to determine what is happening to the cooperative sector. This is the first time in independent India that the cooperative sector, the cooperative ministry and department is divorced from the Ministry of Agriculture.
Yes. You spoke about 1991, right?
Yes.
About trade reform. What exactly did 1991 do? It exposed Indian industry to greater competition by reducing tariff rates from 3 digits to 2 digits, right? We have once again come to the stage where unless we expose Indian industry to greater competition and stop mollycoddling them, you will not get economies of scale, you will not get competitiveness. India's biggest problem, manufacturing sector's biggest problem is lack of scale. We constantly complain about China. Unless we expand scale at home, unless you make yourself more competitive, improve labor productivity, how do you do this? By lecturing to CII and FICCI,
Can
you're
I
not
ask,
going to do it.
if Chandrajit Banerjee is still with us, if Mr. Banerjee, you're still with us, you want to... Okay, we'll try and get a CII representative of that, but Varun Santosh, if the finance minister today, and it is still an if, announces a kind of tariff rationalization or pushes for particular specific sectors, some of which have been mentioned, agriculture, textiles, automobile. Do you believe that the opposition will welcome it? Will the opposition welcome it, or will you stand, your stand will depend on where you sit, as we've seen with all governments? Prime Minister Modi had one view on GST when he was in as Gujarat Chief Minister, another view as Prime Minister, one view on a minimum support price for agriculture when in opposition, when in government. You're the same.
Rajdeep, let's focus on the outcomes, right? 11 years of announcements, what has it led to in terms of outcomes, right? That's where you measure.
The government has been reasonably successful on infrastructure. For example, you cannot deny there's been a massive infrastructure
Let me quote the economic survey on infrastructure.
Yes.
Right? Last year's economic survey said, infrastructure without reforms is concrete without consequence. So they have done a lot of infrastructure growth.
The cost of India has come down to below 8% of GDP.
So,
how did that happen? It used to be in double digits, well into double digits.
Economic survey of this government
You are
has said
randomly
that
picking up one sentence.
No.
Yeah,
it's not that.
Picture.
See, the concrete without consequence, what is happening is a lot of capital investment is happening. For example, metros are being constructed in Nagpur, in Lucknow. How many people are using those metros? Why are they not using the metros? Right? So the problem is...
But really, the question is, it's not about how many are using or not using. The fact is that there is a web which is being established, keeping in mind that this is perhaps the base that is being created to make it more attractive.
It is not followed up with reforms on the governance front. You can't just build infrastructure.
GST reforms were reforms.
No. I'm talking about infrastructure. For example, you're talking about infrastructure, right? Now, why are metros not being used? Because the last mile connectivity is broken in our cities. What is the, for example, in Gurgaon, you have a triple engine Sarkar. What is the use of a triple engine Sarkar if you're not able to fix governance at the last
Come in, Shahzad, respond to that.
Rajdeep.
Yeah, go ahead.
Rajdeep, please be charitable to me. These are the people who used to have half kilometer. Be more charitable then. This is the government of UPA which constructed half kilometer of metro line per month. We have exceeded that by 6 kilometers per month. 5 cities to now 25 cities metro connectivity is there. They opposed Mumbai Metro in the name of RA Forest, even though the carbon footprint of people traveling on the metro would be much better than the forest entire thing, and it has been clarified. And these people are now lecturing us about last mile connectivity. Anyway, then see the manner in which they get away with their lies. They spoke about outcome. Bhai, Garibi Hatao was a nara. We take out 25 crore people from Garibi and we made it into Niyat. We gave 4.5 crore people the houses, Pakka Awas. We have given 10 crore people tap water connection, 10 crore people toilet connection. We have given 10 crore people Ujjwala gas cylinder, 50 crore people Ayushman Bharat cover. What did you do except for giving the nara? You gave outlay, we gave outcome. Thirdly, Maria, see, you are quoting the data of Karnataka. Let me clarify to you, not because I am a proud Maharashtrian. Maharashtra has been number one. You should see the whole year figure of FDI. You are quoting only Q1 of financial year, and there Karnataka is slightly ahead of Maharashtra, but in the entire year Maharashtra is ahead. And also, so don't quote quarterly figure and then say that this is a whole year figure. Maharashtra is much ahead, but this is Team India
Karnataka. As Rajdeep was pointing out, even at that time the picture was
exactly. So you. Yes, Maria, I know. Maria, please let me complete. That's why I'm saying that Karnataka has been number 2 right from 2018 onwards. So it's not a new achievement. It is a Team India spirit. Where was Congress Party when German Chancellor came to Bengaluru? They were receiving that Rahul Baba. And fourthly, I want to just say that now Rajdeep was talking about the reform process and all these opening up this sector, that sector. Ask Mr. Congress spokesperson, does he support Labour Code reform? Rajdeep, ask him.
Okay, let me
ask him, does he support the Labour Code reform?
As I said, we didn't want to make this a point, but a quick answer to that. The Labour Code reform, do your governments fully support it or not?
See, what we support is real wage growth, right? Are people of India having a real wage?
You gave 10% inflation.
No. Is money reaching the pockets?
If I speak to industry, they say that two great concerns are labour and land.
Right.
Right? So when the government goes in for a
land.
Labour Code reform, do you support it or not?
See, we have made a stand clear on the labor codes is that you've increased the...
What is it?
You know?
No. What?
You've increased it to 12 hours now, right? Which is wrong.
He's prevaricating.
Now, but the main point is, you've done all these reforms, what are the outcomes?
Okay. Now,
real question.
One moment. In fact, a resident of Lucknow has just sent me a message, Varun, saying that Lucknow metros are choco-block.
See,
so that was also a response to say that infrastructure is being created, not being used.
Look at Nagpur. Look at Ahmedabad. The point is not...
Nothing has been built. It's better not to build.
You know, there are three issues.
This is not the hill to die on, I can assure you.
There were three issues.
Don't build infrastructure, is the wrong hill to die on.
A leading global economist who tracks India, we met in Davos. He said if he had to give India a recipe for the future, he said India needs to focus on three things. 1, rural productivity. 2, urban governance, and 3, skilling. And he mentioned skilling very emphatically, and he gave the example of tourism. He said the number of tourists, for example, in a country like Switzerland are multiple times what come in a subcontinental size like India, and it makes a dramatic difference to the scale of the economy. Now, skilling has been one area where just like infrastructure has been a strength of the Modi government, there have been questions over whether enough has been done for skilling.
The latest CAG report, for example.
The CAG report points out, and look, again, this is also, states also have to pull their weight. This is not just about the center. Different states are showing different levels of skilling for their... But these are the issues that need to be tackled. Now, the budget comes along. Should the vision statement say what this global economist said, that these are my 3 priorities for the next 10 years? Rural productivity, urban governance and skilling. I will commit myself for the next 10 years to it.
On tourism, I'll just add one thing, Rajdeep. Now, one of the reasons why India has been really lagging in tourism is there's been just lack of air connectivity to the country. Direct flights are not there. Even today, we don't have a fully functional airline which is connecting Indian cities and Indian capital to other tourist hubs across the world. So people want to have those access points.
There aren't enough hotel rooms to accommodate Indians traveling.
It's a supply side problem.
Then when I ask a hotelier about that, they say there are still far too many regulatory compliances that they've got to go through.
The government has to solve.
The regulatory cholesterol, which we keep speaking about, can the budget so-called vision statement in part 2 include this?
You know, in February 2014,
yes,
I was at a FICCI National Executive Committee meeting in Ahmedabad, where the Chief Minister of that state, Mr. Narendra Modi, chose to speak for 1 hour addressing the FICCI National Executive Committee on tourism as a priority sector for the Indian economy and how he would in fact use tourism to generate employment. I was totally impressed. After his talk, I actually went up to him and complimented him. That is February 2014 in Ahmedabad. We are now in 2026. What have we done for tourism? And it's states and center. But point is, there are all these issues about connectivity, about hotels, about talent.
No, I'm only asking this because the belief is, as Part B earlier used to be about tax, about indirect taxes, Part 2 this time is going to be a vision statement, is what we are being told as of now of the budget. Should the vision statement be very clear about what are the things that we are going to make, not just catchword, not just Skill India, Stand Up India, not that. Actually, how are you going to translate these words into action, execute them with a clear roadmap? Isn't that what you want? Rather than handouts here, for some scheme or the other.
Part B will be mostly about the change in the proposed customs framework and tariff.
Global opportunity.
So is this a big opportunity for that customs duty reform?
Well, you can open up your sectors. That is the only way you will sort of bring in the competition and sort of have companies come in and invest. The problem with the point that you made about agriculture, there's a simple data point, which is that nearly 50% of the workforce depends on 1/6 of the national income. Agriculture accounts for about 16% of GDP, and over 500 million people depend on that. Now, unless you change that, you will never. So we are number 4 in the size of the economy, number 140 in per capita income, because the mass is not as rich.
Another word that's going to likely to be used is defense. There's a general belief post Operation Sindoor that the government will invest more on military spending. Maria, you have the numbers.
Yes, so just look at the defense military spending vis-a-vis our neighboring countries, which have been a matter of major concern for us, particularly China and Pakistan. The China defense budget has been going up substantially. As far as India is concerned, that has been largely around a straight graph, not much of the expenditure going up, the spending on defense military capability going up. This is where the sense is that the government could announce some major spending in terms of purchasing newer capabilities, because particularly after Operation Sindoor. Another area, Rajdeep, as we have been talking about, this is with regards to GRAMG, the Manrega, which has been renamed. And can that be a point of contention between the opposition and the government? The Manrega funds released, if you look at it, in 2024, that was the highest at 105.3k crores. It did go down, not really significantly, a little to 104.3k crores. Now it seems that this is where the government could increase that number. So, Shankar, coming on particularly with regards to the defense expenditure or defense spending, is there a sense that this could go up?
More important thing would be...
one by one. Let Shankar finish first, yes.
More important thing would be, for a change, we are actually exporting our defense production.
That's a massive shift.
And
that's a massive shift.
Last month, Turkey had a defense exposition in Africa, selling defense equipment to all the African countries. We've had a footprint in Africa much longer than Turkey could have thought of. So why aren't we hosting defense exposition either in India or in Africa or to the other countries? We have a huge potential after the creation of the factories for small arms, for the in Uttar Pradesh, in the drone capacity that we are building. All of these are bulletproof vests. We have built capacities in these areas, and we should sort of present it to the world and say that this is what we have to sell. You have to market and sell your potential.
Make in India.
Yes.
No. Sorry. This is one subject where I have been working on defense. I've written papers, several papers. I work for a defense think tank. Let me tell you one thing. There is a systematic pattern that after every major war, this defense expenditure goes up. 62, 65, 71, 98, right? So when you say post-Operation Sindoor, that's a wrong way of looking at defense spending. What many of us have been demanding is a 5-year plan for defense. And what a lot of private companies today are demanding is assured purchase of whatever they produce. Now, in defense, it is a unique industry in which there's only one customer, which is the government of India. And unless the government of India tells a private company that over the next 5 years, I will buy X amount of guns or rockets or whatever, the private company will not produce. And those are the commitments the government is still not making. I can tell you from my knowledge.
True.
So therefore, you need a reform in the way in which defense spending is done, in the way in which procurement is done, in the way in which we bring in private sector into defense manufacturing. Unless you address that issue at home, exports is only a byproduct. You cannot develop a defense industry based on exports.
You want a quick response to that?
So while we wait for this to happen, the acquisition process in Ministry of Defense has been a bugbear all the way from Lakshman Joshi till now. In 2002, I had done some work with him. So from then to now. So while we wait for it, if there is an opportunity to use the capacity that we are building to provide arms, what is China doing? What is Turkey doing? What is India doing? What was Iran doing till recently? It was selling to the Europeans.
I have two more guests joining us, and we've got about 10 odd minutes before the finance minister comes to Parliament. Punita Sinha joins us. She's an independent director on several companies, global investor for years. Thank you very much, Punita, for joining us. Also joining us is R. Mukundan, President Designate CI, Managing Director, CEO, Tata Chemicals. I want to put to you both my bugbear, which is the weak private investment despite years of policy push, Mr. Mukundan. Since 2019, we've had sharp corporate tax cuts, record capex on roads and ports, PLI subsidies, higher IT exemptions, GST cuts, yet private corporate investment is still below 2019 levels. What more do you expect the FM to do to boost private investment?
Thank you. Actually, I came only prepared for one issue, which I think we will all need to address, which is the private sector investment. I think you rightly pointed out, government has done a lot of heavy lifting. And this point about private sector investment lagging, I think was okay till about 2 years ago. But last 2 years, actually, it has caught up. As the capacity utilization of units have increased to about 75 to 80 odd %, the capex has started to kick in. I can give you some data which we have got from the latest capex pulse, which we got from our members, and we have tabulated them project by project. Year 26, 17,000 private sector projects are going to be coming on stream worth 9 lakh crores. 27, we're going to have 900 private sector projects coming on stream of 7 lakh crores. 11 large projects account for rupees 475,000 crores, and each one of these projects is 20,000 crore or more, largely in renewable energy, in electronics, in steel, in chemicals. And really, 26, 27, if you add, 2,600 private sector projects are coming on stream of 16 lakh crore, which is some of the first two figures I said. So there's been about 30% growth in capex. 92% of all new capex which is coming on stream, approximately of 10 lakh crore, is actually from private sector now. So really, I think private sector has started to come in. What we need to do is to do two things which are the next step of changes which we need to bring. One is to continue to focus on factor cost, which is making sure the power cost and the logistic cost remains the focus. I think these are two big elements. And in the power sector, I think one of the key things we are saying is to make sure our discoms are made more viable. Privatization is a big issue there. I think we need to address that big issue. Having said that, I think the second piece is about building forward from where we are. We have had a great success, for example, in electronics, and I think the PLI scheme has been a big success. But the next step in electronics is going to be building an entire component base. Globally, when you look at this component base, they come within 10 square kilometer of each other from the main assembly unit. So we need large-scale parks and a very targeted component level, let's say, a PLI sort of a scheme to keep the momentum up and actually deepen the exports. When I say deepen the exports, the final product export number will be...
Yeah, Shankar, you had a question. Go ahead.
Hi, Mukundan. Just a quick question. I can see that these projects are coming on stream, which means that these investments have happened in the past, whatever. But I like the point that you made about components in automobile, components in electronics. The components in electronics has to come through only when we sort of invest in technology, R&D, right? What is our percentage of private sector investment in technology?
Yeah. So I think you raise a very different point, which is about R&D and technology investment. I think private sector certainly needs to boost that up. I think that's also been our focus. I think this RDIF fund which government has created, which is getting rolled out this year, I think will give a big boost. I think I'm pretty sure that many companies will take benefit of that. These are long-term funds being given on a 50-year basis with no interest, and companies can use that to sort of address the areas where they may not have very clear market potential assessed at the point of investment. Having said that, I think the key point on components is when you roll out the electronic component, initially I think it will be either a form of joint venture or the component manufacturers coming to India, exactly the way it happened in the automotive sector. When Suzuki came to India, they brought in their entire network of component suppliers and they all invested in and around in Gurgaon. And I think we got to think about how do we make this ecosystem build and how do we reach out. Of course, the big companies which are main buyers and main producers of the assembled units will be the first ones to come in. But then we've got to create an environment where the demand grows to a level where components come in. So I think it's a build forward. I think we've taken the first step. We need to go to the next step.
Okay, Punita, do you believe that while we've looked at private investment, the other concern is FDI? It's slowed down. And again, one reason which is given, and also the economic survey refers to it, is the geopolitical environment in which we live. It's also that there are other countries that are perhaps seen as better options today for American investors in particular. What do you believe needs to be done to give India, just as private investment needs to has been given various benefits, what can be done to get FDI back on the road? We've also seen currency volatility. There are lots of issues that perhaps make this a far more difficult environment for a finance minister to work in.
Yeah, so there are a number of reasons FDI has been weak. Of course, India's nominal GDP growth, as you know, is slower than what it has been, and the earnings growth of companies is also slower than what it used to be. So and the valuations have been high. So investors are obviously factoring that in and deciding which countries to invest. But more importantly, I think the view is that India's lagged on innovation, R&D, and particularly with this AI, the growth of AI, India isn't kept pace with US, China, and other countries. And we don't have a pathway to train our workforce appropriately to keep up with the new age technologies and to reskill them. But I think currency has played a very important role. When you talk to investors, they also feel that whatever money they brought into India, and it is, whether institutional investors, strategic investors, either they take a very, very long-term view and then the growth catches up. But in the medium term, currency has eaten a lot of their returns. So I think some kind of currency stability is very important because, 5-6% or more getting eroded immediately that you bring in the money is also a concern for companies, and that impacts their earnings.
I just want to quickly, Mr. Mukundan, before we switch to Parliament, just understand, okay, he's left us. You see, it's the China factor. AI was mentioned. And AI, in Davos, for example, apart from Donald Trump, the big disruptor of our times is AI. It's changed. And the fact is, everyone you speak to say America and China are engaged now in an AI race. And India needs to start playing catch up. India is attempting to do so. We are going to have a big AI summit later this month. But the sense is, are we ready to even match up to what China is doing at the moment? And that's where investors perhaps are looking at other markets, possibly smaller countries as well as Vietnam, which simply roll out the red carpet. In India at the moment, there are still restrictions in various fields.
We have no role in the foundational story, really, because it's very high capital. It has to have very high tech thing. We are doing 30 and 300 nano chips, whereas NVIDIA is into 3 chips and all. So, let's forget. What is India's opportunity is the enormous quantity of data that we produce, the enormous domestic market scale. The AI story has moved from the producers of chips and stuff and the chatbots to who leverages these things in finance in other places, which is where the GCC story comes in. The Indian GCCs set up in India are actually using some of the stuff. So JP Morgan has 60,000 people in India in their GCCs. So that is being used. What India needs to do is to line up an agenda. In agriculture, we want these problems to be solved. In governance, these are the problems we want to solve. In primary preventive healthcare, these are the problems. And then ask how will you integrate it. There's no point in having a whole Jambori circus tent and saying, oh, we are having AI summit, oh, then we are doing this. Hum log chip bana rahe hain. What is the outcome?
Okay. I've got just 2 minutes to 30 seconds.
No, what I want to say is that, private sector capex will only come in if there is incentive and returns for them. Otherwise, they can't just keep investing. So the government needs to provide the initial capex so that the conditions are set in place for then the private sector to invest in a profitable way.
But to be fair, this government has made efforts in that direction when it comes to capex. I just want to bring in at this moment Firoz Khambata, Chairman, CII Task Force on Affirmative Action, Group Chairman, Rasna Private Limited. Firoz, if you had 30 seconds, because the Finance Minister will be entering Parliament any time now. One thing, your wish list, your top #1 wish list today.
Bring the trust back. I think one thing is clear. All the environment is there for big ticket investment. We need to bring the trust between the investor and the government. And when I say investor, Indian investor also and foreign investor also. When you tell anybody, welcome, we have the red carpet, but when you give him 1,000 papers to sign, declarations, bank guarantees, this, that, he gets afraid. When he doesn't know how to wade through the text, what I call the jungle, he gets afraid. And that doesn't help in getting big ticket investment. We need big ticket money to come, especially in manufacturing.
It takes a Parsi to tell truth to power. I'm glad to see someone from CII telling truth to power. It takes 30 more seconds.
So I honestly believe that this is something which I expect from the government. And for example, I hit the taxation task force in CII and look at so many taxes are there. We need to rationalize them, the custom duties. So many disputes are there. We need a ADR, an alternate tax dispute resolution, a DRC, a mediation, a settlement, amnesty schemes. These type of things will help people to concentrate on business. Entrepreneurs want to concentrate on business. They don't want to wade through all this. So I expect this to definitely happen.
Firoz, you made a point about the custom reforms. The sense is, and the indication that has come from the government is that that's going to be part of Part B of this budget. And for the first time in 75 years, that part is going to be read today. And that's longer than the main budget.
Yes, and if you ask me the GST reforms, GST reforms actually has paved the way for this, because if you have lesser tax slabs, and for customs in 10 seconds I can tell you, why have, for finished goods, how can it be lower than the inputs? The inputs, that means the raw materials should be 0, intermediate should be at a lesser tax.
Mr. Khambata, we've got to cut you off because we have Mr. Om Birla, the Speaker in the House, the Lok Sabha convening on a Sunday. This is the second time in the history of this country. I was told somewhere in the late 1940s or 50s, there was a budget on a Sunday. We can check that, whether this is the second or first, but either way, it's certainly first in recent times.
First Sunday ever.
Okay, I'll read.
Item #1. Sir, with your permission, I rise to lay on the table a copy each of the following papers, Hindi and English versions, under Article 281 of the Constitution, Report for 2026 to 2031, Volume 1, Main Report of the 16th Finance Commission. 2. Report for 2026-2031, Volume 2, Annexures of the 16th Finance Commission. Number 3. Explanatory memorandum as to the action taken on the recommendations contained in the above report. Item number 2, Maanyaja Vitt Mantri Nirmala Sitharaman ji. Honorable Speaker, sir, on the sacred occasion of Magh Purnima and the birth anniversary of Guru Ravidas, I present the budget for the year 2026-2027. Since we assumed office 12 years ago, India's economic trajectory has been marked by stability, fiscal discipline, sustained growth, and moderate inflation. This is the result of conscious choices we have made, even in times heightened uncertainty and disruption. Our government, led by Honorable Prime Minister Modi, has decisively and consistently chosen action over ambivalence, reform over rhetoric, and people over populism. We have pursued far-reaching structural reforms, fiscal prudence and monetary stability, whilst maintaining a strong thrust on public investment. Keeping Atmanirbharta as a lodestar, we have built domestic manufacturing capacity, energy security, and reduced critical import dependencies. Simultaneously, we have ensured that citizens benefit from every action of the government, undertaking reforms to support employment generation, agricultural productivity, household purchasing power, and universal services to people. These measures have delivered a high growth rate of around 7% and helped us make substantial strides in poverty reduction and improvement in the lives of our people. Today, we face an external environment in which trade and multilateralism are imperiled and access to resources and supply chains are disrupted. New technologies are transforming production systems while sharply increasing demands on water, energy, and critical minerals. India will continue to take confident steps towards Vikasit Bharat, balancing ambition with inclusion. As a growing economy with expanding trade and capital needs, India must also remain deeply integrated with global markets, exporting more and attracting stable long-term investment. As I begin part A, I want to express my gratitude to the people for standing firmly with us as we forge our way together towards becoming one of the largest economies of the world. Our aim is to transform aspiration into achievement and potential into performance as we ensure that the dividends of growth reach every farmer, the scheduled caste, the scheduled tribes, the nomads, the youth, the poor, and the women. In Vikasit Bharat Young Leaders Dialogue 2026, several innovative ideas were shared with our Prime Minister, which have inspired many of the proposals, making this a unique Yuva Shakti-driven budget. Our government's sankalp is to focus on our poor, underprivileged, and the disadvantaged. To deliver on this sankalp, and given that this is the first budget prepared in Kartavya Bhavan, we are inspired by three Kartavya. Our first Kartavya is to accelerate and sustain economic growth by enhancing productivity and competitiveness and building resilience to volatile global dynamics. Our second Kartavya is to fulfill aspirations of our people and build their capacity, making them strong partners in India's path to prosperity. Our third Kartavya, aligned with our vision of Sabka Saath, Sabka Vikas, is to ensure that every family, community, region, and sector has access to resources, amenities, and opportunities for meaningful participation. This threefold approach requires a supportive ecosystem The first requirement is to sustain the momentum of structural reforms, continuous, adaptive, and forward-looking. Second, a robust and resilient financial sector is central to mobilizing savings, allocating capital efficiently, and managing risks. Third, cutting-edge technologies, including AI applications, can serve us as force multipliers for better governance. Reform Express. Our government has undertaken comprehensive reforms towards creating employment, boosting productivity, and accelerating growth. After the Prime Minister's announcement on Independence Day in 2025, over 350 reforms have been rolled out. This includes GST simplification, notification of labor codes, and rationalization of mandatory quality control orders. High-level committees have been formed, and in parallel, the central government is working with the state governments on deregulation and reducing compliance requirements. The Reform Express is well on its way and will maintain its momentum to help us fulfill our kartavya. I now move to specific proposals. Under our first kartavya, to accelerate and sustain economic growth, I propose interventions in 6 areas. 1. Scaling up manufacturing in 7 strategic and frontier sectors. 2. Rejuvenating legacy industrial sectors. 3. Creating champion MSMEs. 4. Delivering a powerful push for infrastructure. 5. Ensuring long-term security and stability. And 6. Developing city economic regions. Scaling up of manufacturing in 7 strategic and frontier sectors. Biopharma Shakti, meaning biopharma strategy for health advancement through knowledge, technology, and innovation. India's disease burden is observed to be shifting towards non-communicable diseases like diabetes, cancer, and autoimmune disorders. Biologic medicines are key to longevity and quality of life at affordable costs. To develop India as a global biopharma manufacturing hub, I propose the Biopharma Shakti with an outlay of 10,000 crores over the next 5 years. This will build the ecosystem for domestic production of biologics and biosimilars. The strategy will include a biopharma-focused network with 3 new national institutes of pharmaceutical education and research, popularly known as NIPERs, and upgrading 7 existing ones. It will also create a network of 1,000 accredited India clinical trials sites. We propose to strengthen the Central Drug Standard Control Organization to meet global standards and approve timeframes through and approval timeframes through a dedicated scientific review cadre and specialists. India's semiconductor mission 1.0 expanded India's semiconductor sector capabilities. Building on this, we will launch ISM 2.0 to produce equipment and materials, design full-stack Indian IP, and fortify supply chains. We will also focus on industry-led research and training centers to develop technology and skilled workforce. The Electronics Components Manufacturing Scheme, launched in April 2025, with an outlay of 22,919 crores, already has investment commitments at double the targets. We propose to increase the outlay to 40,000 crores to capitalize on this momentum. A scheme for rare earth permanent magnets was launched in 2025 November. We now propose to support the mineral-rich states of Odisha, Kerala, Andhra Pradesh and Tamil Nadu to establish dedicated rare earth corridors to promote mining, processing, research and manufacturing. To enhance domestic chemical production and reduction import dependency and reduce import dependency, we will launch a scheme to support states in establishing 3 dedicated chemical parks through challenge route on a cluster-based plug-and-play model. Strong capital goods. Strong capital goods capability is a determinant of productivity and quality across different sectors. Towards building this capacity, I propose the following. High-tech tool rooms will be established by central public sector enterprises at 2 locations as digitally enabled automated service bureaus that locally design, test and manufacture high-precision components at scale and at lower cost. 2. A scheme for enhancement of construction and infrastructure equipments will be introduced to strengthen domestic manufacturing of high value and technologically advanced CIE. This can range from lifts in a multi-storied apartment or firefighting equipment in multiplexes, large or small, and to tunnel boring equipments for building metros and high-altitude roads. I also propose a scheme for container manufacturing to create a globally competitive container manufacturing ecosystem with a budgetary allocation of 10,000 crores over a 5-year period. For the labor-intensive textile sector, I propose an integrated program with 5 subparts. 1. The National Fiber Scheme for Self-Reliance in Natural Fibers, such as silk, wool and jute, man-made fibers, and new age fibers. Textile expansion and employment scheme to modernize traditional clusters with capital support for machinery, technology upgradation, and common testing and certification centers. 3. The National Handloom and Handicraft Program to integrate and strengthen existing schemes and ensure targeted support for weavers and artisans. Tex Eco Initiative to promote globally competitive and sustainable textiles and apparels. Samarth 2.0 to modernize the upgrade the textile skilling ecosystem through collaboration with industry and academic institutions. Further, I propose to set up a mega textile parks in challenge mode. They can also focus on bringing value addition to technical textiles. I propose to launch the Mahatma Gandhi Gram Swaraj initiative to strengthen khadi, handloom and handicrafts. This will help in global market linkage and branding. It will streamline and support training, skilling, quality of process and production. This will benefit our weavers, village industries, One District, One Product ODOP initiative and also our rural youth. India has the potential to emerge as a global hub for high quality, affordable sports goods. I propose a dedicated initiative for sports goods that will promote manufacturing, research, and innovation in equipment design as well as material sciences. Rejuvenation of legacy industrial clusters. I propose to introduce a scheme to revive 200 legacy industrial clusters to improve their cost competitiveness and efficiency through infrastructure and technology upgradation. Creating champion SMEs and supporting micro enterprises. Recognizing MSMEs as a vital engine of growth, I propose a three-pronged approach to help them grow as champions. Equity support. I propose to introduce a dedicated 10,000 crores SME growth fund to create future champions, incentivizing enterprises based on select criteria. I also propose to top up the Self-Reliant India Fund set up in 2021 with 2,000 crores to continue support to micro enterprises and maintain their access to risk capital. Liquidity support. With TREDS, more than 7 lakh crore has been made available to MSMEs. To leverage its full potential, I propose 4 measures. 1. Mandate TREDS as the transaction settlement platform for all purchases from MSMEs by CPSEs, serving as a benchmark for other corporates. 2. Introduce a credit guarantee support mechanism through CGT MSE for invoice discounting on TREDS platform. 3. Link GEM with TREDS for sharing information with financiers about government purchases from MSMEs, encouraging cheaper and quicker financing. 4. Introduce TREDS receivables as asset-backed securities, helping develop a secondary market, enhancing liquidity and settlement of transactions. Professional support. Government will facilitate professional institutions such as the ICAI, ICSI, ICMAI to design short-term modular courses and practical tools to develop a cadre of corporate mitras, especially in Tier 2 and Tier 3 towns. These accredited para-professionals will help MSMEs meet compliance requirements at affordable costs. Infrastructure. During this past decade, our government has undertaken several initiatives for large-scale enhancement of public infrastructure, including through new financing instruments such as Infrastructure Investment Trust (InvITs) and Real Estate Investment Trust (REITs), and institutions like NIIF and NABFID. We shall continue to focus on developing infrastructure in cities with over 5 lakh population, that is Tier 2, Tier 3 cities, which have expanded to become growth centers. Public capital expenditure has increased manifold from 2 lakh crore in 2014-15 to an allocation of 11.2 lakh crore in BE 25-26. In this coming year, that is financial year 2026-27, I propose to increase it to 12.2 lakh crores to continue the momentum. To strengthen the confidence of private developers regarding risks during infrastructure development and construction phase, I propose to set up an infrastructure risk guarantee fund to provide prudentially calibrated partial credit guarantee to lenders. Over the years, REITs have emerged as a successful instrument for asset monetization. I propose to accelerate recycling of significant real estate assets of the CPSEs through the setting up of dedicated REITs. To promote environmentally sustainable movement of cargo, I propose to 1. Establish new dedicated freight corridors connecting Dankuni in the east to Surat in the west. Operationalize 20 new national waterways over the next 5 years. Starting with National Waterways 5 in Orissa to connect mineral-rich areas of Talcher and Angul and industrial centers like Kalinga Nagar to the ports of Paradeep and Dhamra. Training institutes will be set up as regional centers of excellence for development of required manpower for these waterways. This will benefit youth in the entire stretch of the waterways to train and acquire skills. Further, a ship repair ecosystem catering to inland waterways will also be set up at Varanasi and Patna. And C, launch a coastal cargo promotion scheme for incentivizing a modal shift from rail to road to increase the share of inland waterways and coastal shipping from 6% to 12% by 2047. To enhance last mile and remote connectivity and promote tourism, I propose to give incentives to indigenize manufacturing of seaplanes. A seaplane VGF scheme will be also introduced to provide support for operations. Carbon capture, utilization and storage. Aligning with the roadmap launched in December 2025, the carbon capture, utilization and storage technologies at scale will achieve higher readiness and in end-use application across 5 industrial sectors, including power, steel, cement, refineries, and chemicals. An outlay of 20,000 crore is proposed over the next 5 years for this purpose. City economic regions. Cities are India's engines of growth, innovation, and opportunities. We shall now focus on Tier 2, Tier 3 cities, and even temple towns, which need modern infrastructure and basic amenities. This budget aims to further amplify the potential of cities to deliver the economic power of agglomerations by mapping city economic regions based on their specific growth drivers. An allocation of 5,000 crore per CER over 5 years is proposed for implementing their plans through a challenge mode with a reform-cum-result-based financing mechanism. In order to promote environmentally sustainable passenger systems, we will develop 7 high-speed rail corridors between cities as growth connectors, namely Mumbai to Pune, Pune to Hyderabad, Hyderabad to Bengaluru, Hyderabad to Chennai, Chennai to Bengaluru, Delhi to Varanasi, Varanasi to Siliguri. Financial sector. The Indian banking sector today is characterized by strong balance sheet, historic highs in profitability, improved asset quality, and coverage exceeding 98% of villages in the country. At this juncture, we are well placed to futuristically evaluate the measures needed to continue on the path of reform-led growth of this sector. I propose setting up a high-level committee on banking for Vikasit Bharat. High-level committee on banking for Vikasit Bharat to comprehensively review the sector and align it with India's next phase of growth, while safeguarding financial stability, inclusion, and consumer protection. The vision for NBFCs for Vikasit Bharat has been outlined with clear targets for credit disbursement and technology adoption in order to achieve scale and improve efficiency in the public sector NBFCs As a first step, it is proposed to restructure the Power Finance Corporation and Rural Electrification Corporation. I propose a comprehensive review of the foreign exchange management non-debt instruments rules to create a more contemporary, user-friendly framework for foreign investments consistent with India's evolving economic priorities. Corporate bond market. I propose to introduce a market-making framework with suitable access to funds and derivatives on corporate bond indices. I also propose to introduce total return swaps on corporate bonds. Municipal bonds. To encourage the issuance of municipal bonds of higher value by larger cities, I propose an incentive of 100 crore rupees for a single bond issuance. 100 crore rupees for a single bond issuance of more than 1,000 crore. The current scheme under Amrit which incentivizes issuances up to 200 crores only, will also continue to support smaller and medium towns. That will also continue to support the smaller and medium towns. Ease of doing business. Individual persons resident outside India, PROI, will be permitted to invest in equity instruments of listed Indian companies through the portfolio investment scheme. It is also proposed to increase the investment limit for an individual PROI under the scheme from 5% to 10%, with an overall investment limit for all individual PROIs to 24% from the current 10%. Emerging technologies including AI. 21st century is technology driven. Adoption of technology is for the benefit of all people. Farmers in the field, women in STEM, youth keen to upskill, and Divyangjan to access newer opportunities. The government has taken several steps to support new technologies through AI Mission, National Quantum Mission, Anusandhan National Research Fund, and Research and Development and Innovation Fund. Our second kartavya is to fulfill aspirations and build capacities. Close to 25 crore individuals have come out of multi-dimensional poverty through a decade of our government's sustained and reform-oriented efforts. Our government has therefore decided to place a renewed emphasis on the service sector to provide a pathway to fulfilling aspirations of a youthful India with the following measures. I propose to set up a high-powered education to employment and enterprises standing committee to recommend measures that focus on services sector as a core driver of Vikasit Bharat. This will make us a global leader in services with a 10% global share by 2047. The committee will prioritize areas to optimize the potential for growth, employment, and exports. They will also assess the impact of emerging technologies, including AI, on jobs and skill requirements and propose measures thereof. To create a range of skilled career pathways, a new range of skilled career pathways for our youth, I propose interventions in the following sectors. Health. Existing institutions for allied health professionals will be upgraded and new AHP institutions established in private and government sectors. This will cover 10 selected disciplines, including optometry, radiology, anesthesia, OT technology, applied psychology and behavioral health, and add 1 lakh AHPs over the next 5 years. A strong care system covering geriatric and allied care services will be built. A variety of NSQF-aligned programs will be developed to train multi-skilled caregivers, combining core care and allied skills such as wellness, yoga, and operation of medical assistive devices. In the coming year, 1.5 lakh caregivers will be trained. Hubs for medical value tourism. To promote India as a hub for medical tourism services, I propose to launch a scheme to support states in establishing 5 regional medical hubs in partnership with the private sector. These hubs will serve as integrated healthcare complexes that combine medical, educational, and research facilities. They will have Ayush centers, medical value tourism facilitation centers, and infrastructure for diagnostics, post-care, and rehabilitation. These hubs will provide diverse opportunities, job opportunities for health professionals, including doctors and AHPs. Ancient Indian yoga, already respected in several parts of the world, was given a mass global recognition when Honorable Prime Minister took it to the UN. Post-COVID, Ayurveda gained a similar global acceptance and recognition. Exporting quality Ayurveda products helps farmers who grow the herbs and youth who process the products. To meet growing global demand, a few more steps are being taken. I propose to 1. Set up 3 new All India Institutes of Ayurveda. 2. Upgrade Ayush pharmacies and drug testing labs for higher standards of certification ecosystem and make available more skilled personnel. 3. Upgrade the WHO Global Traditional Medicine Center in Jamnagar to bolster evidence-based research, training, and awareness for traditional medicine. Animal husbandry. Livestock contributes to close to 16% of farm income, including of poor and marginal households. To scale up availability of veterinary professionals by more than 20,000, I propose to roll out a loan-linked capital subsidy support scheme for establishment of veterinary and para-veterinary colleges, veterinary hospitals, diagnostic laboratories, and breeding facilities in private sector. Collaboration between Indian and foreign institutions will also be facilitated. Orange economy. India's animation, visual effects, gaming and comics sector, AVGC sector, is a growing industry projected to require 2 million professionals by 2030. I propose to support the Indian Institute of Creative Technologies, Mumbai, in setting up AVGC content creator labs in 15,000 secondary schools all over the country and 500 colleges. The Indian design industry is expanding rapidly, and yet there is a shortage of Indian designers. I propose to establish, through Challenge Route, a new National Institute of Design to boost design education and development in the eastern region of India. Education. Our government will support states through challenge route in creating 5 university townships in the vicinity of major industrial and logistics corridors. These planned academic zones will host multiple universities, colleges and research institutions, skill centers and residential complexes. In higher education, STEM institutions, prolonged hours of study and laboratory work pose some challenges for girl students. Through VGF, viability gap funding and capital support, one girls' hostel will be established in every district. To promote astrophysics and astronomy via immersive experiences. 4 telescope infrastructure facilities will be set up or upgraded. The National Large Solar Telescope, the National Large Optical Infrared Telescope, the Himalayan Chandra Telescope, and the Cosmos 2 Planetarium. Tourism. The tourism sector has the potential to play a large role in the employment generation, forex earnings, and expanding the local economy. I propose to set up a National Institute of Hospitality by upgrading the existing National Council for Hotel Management and Catering Technology. It will function as a bridge between academia, industry, and government. I also propose a pilot scheme for upskilling 10,000 guides in 20 iconic tourist sites through a standardized, high-quality, 12-week training course in hybrid mode in collaboration with the Indian Institute of Management. A national destination digital knowledge grid will be established to digitally document all places of significance, cultural, spiritual, and heritage. This initiative will create a new ecosystem of jobs for local researchers, historians, content creators, and technology partners. India has the potential and opportunity to offer world-class trekking and hiking experience. We will develop ecologically sustainable mountain trails in Himachal Pradesh, Uttarakhand, and Jammu Kashmir. Also in Araku Valley in the Eastern Ghats and Podigai Malai in the Western Ghats. Turtle trails along key nesting sites in the coastal areas of Odisha, Karnataka, and Kerala. And 3 bird watching trails along the Pulikat Lake in Andhra Pradesh, Tamil Nadu. It's on the border. Under the visionary leadership of Honorable Prime Minister, we established the International Big Cat Alliance in 2024. This year, India is hosting the first ever Global Big Cat Summit, where heads of governments and ministers from 95 range countries will deliberate on collective strategies for conservation. Heritage and culture tourism. I propose to develop 15 archaeological sites, including Lothal, Dolavira, Rakhi Gadi, Adichanallur, Saranath, Hastinapur, and Leh Palace into vibrant experiential cultural destinations. Excavated landscapes will be open to the public through curated walkways. Immersive storytelling skills and technologies will be introduced to help conservation labs, interpretation centers, and guides. The sports sector provides multiple means of employment, skilling, and job opportunities. Taking forward the systematic nurturing of sports talent, which is set in motion through the Khelo India program earlier, I propose to launch a Khelo India mission to transform the sports sector over the next decade. The mission will facilitate an integrated talent development pathway supported by training centers, which are foundational, intermediate, and elite levels. B, systematic development of coaches and support staff. C, integration of sports science and technology. D, competitions and leagues to promote sports culture and provide platforms. And E, development of sports infrastructure for training and competition. Our third kartavya aligns with our vision of Sabka Saath, Sabka Vikas towards Vikasit Bharat. This requires targeted efforts for 1. Increasing farmer incomes through productivity enhancement and entrepreneurship, with special attention to small and marginal farmers. B. Empowering Divyangjan through access to livelihood opportunities, training, and high-quality assistive devices. C. Empowering the vulnerable to access mental health and trauma care. D. Focus on the Purvodaya states and the Northeast region to accelerate development and employment opportunities. Fisheries. We will undertake initiatives for integrated development of 500 reservoirs and Amrit Sarovars. 2. Strengthen the fisheries value chain in coastal areas and enable market linkages involving startups and women-led groups together with fish farmer producer organizations. Animal husbandry. To provide quality employment opportunities in rural and peri-urban areas, we will support the animal husbandry sector in entrepreneurship development through a credit-linked subsidy program, B, scaling up and modernization of livestock enterprises, C, enhanced creation of livestock, dairy, and poultry enhanced creation of livestock, dairy, and poultry-focused integrated value chains, and D, encourage creation of livestock farmer-producer organizations. High-value agriculture. To diversify farm outputs, increase productivity, enhance farmers' incomes, and create new employment opportunities, we will support high-value crops such as coconut, sandalwood, cocoa, cashew in the coastal areas, agar trees in northeast, and nuts such as almonds, walnuts, and pine nuts in our hilly regions. These, all of them, will be supported. India is the world's largest producer of coconuts. About 30 million people, including nearly 10 million farmers, depend on coconuts for their livelihood. To further enhance competitiveness in coconut production, I propose a coconut promotion scheme to increase production and enhance productivity through various interventions, including replacing and non-productive trees with new saplings or plants or varieties in major coconut growing states. A dedicated program is proposed for Indian cashew and cocoa to make India self-reliant in raw cashew and coconut production and processing, enhance export competitiveness, and transform Indian cashew and Indian cocoa into premium global brands by 2030. Sandalwood. Sandalwood is closely linked to India's social and cultural heritage. Our government will partner with state governments to promote focused cultivation and post-harvest processing to restore the glory of the Indian sandalwood ecosystem, to rejuvenate old, high-yielding orchards and expand high-density cultivation of walnuts, almonds, and pine nuts, we will support a dedicated program to enhance farmer incomes and in bringing value addition by engaging youth. Bharat Vistar, that is virtually integrated system to access agricultural resources. I propose to launch Bharat Vistar, a multilingual AI tool that shall integrate the AgriStack portals and the ICAR package on agricultural practices with AI systems. This will enhance farm productivity, enable better decisions for farmers, and reduce risk by providing customized advisory support. She Marts for rural women-led enterprises. Building on the success of Lakpati Didi program, I propose to help women take the next step from credit-linked livelihoods to being owners of enterprises. Self-help entrepreneur, She Marts will be set up as community-owned retail outlets within the cluster-level federations through enhanced and innovative financing instruments. Empowering Divyangjan. Divyangjan Kaushal Yojana. Information technology, AVGC sectors, hospitality and food and beverages sectors often offer task-oriented and process-driven roles which are suitable for Divyangjan. We will ensure dignified livelihood opportunities through industry-relevant and customized training specific to each Divyangjan group. Divyang Sahara Yojana. Timely access to high-quality assistive devices for all eligible Divyangjan is a fundamental need. I propose to 1. Support the Artificial Limbs Manufacturing Corporation of India, ALIMCO, to set up and to scale up production of assistive devices, invest in R&D and AI integration, strengthen PM Divyasha Kendras, and support setting up of assistive technology marts as modern retail style centers where Divyangjan and senior citizens can see, try and purchase assistive products. Reaffirming our commitment to mental health and trauma care. There are no national institutes for mental health care in North India. We will therefore set up a NIMHANS 2 and also upgrade national mental health institutes in Ranchi and in Tezpur as regional apex institutions. Emergencies expose families, particularly the poor and vulnerable, to unexpected expenditure. We will strengthen and increase these capacities by 50% in district hospitals by establishing emergency and trauma care centers. Focus on Purvodaya states and northeastern regions. Purvodaya. I propose the development of an integrated East Coast industrial corridor with a well-connected node at Durgapur, creation of 5 tourism destinations in 5 Purvodaya states, and the provision of 4,000 e-buses. Buddhist sites in northeastern region. The northeastern region is a civilizational confluence of Theravada and Mahayana or Vajrayana traditions. I propose to launch a scheme for development of Buddhist circuits in Arunachal Pradesh, Sikkim, Assam, Manipur, Mizoram, and Tripura. The scheme will cover preservation of temples and monasteries, pilgrimage interpretation centers, connectivity, and pilgrim amenities. 16th Finance Commission. On 17th November 2025, the 16th Finance Commission submitted its report to the President. As mandated under Article 281 of the Constitution, the government is to lay the report along with the explanatory memorandum on the action taken report on the recommendations of the Commission in Parliament, which, Sir, Honourable Speaker, you've allowed me to do at the commencement of this session. The government has accepted the recommendation of the Commission to retain the vertical share of devolution at 41%. As recommended by the Commission, I have provided 1.4 lakh crores of rupees to the states for the year 2026-2027 as Finance Commission grants. These include rural and urban local body and disaster management grants. Fiscal consolidation. Government has been delivering on our fiscal commitments consistently without compromising on social needs. To strive towards accepted standards of fiscal management in Budget 25-26, I had indicated that the central government would target reaching a debt to GDP ratio of 50 plus or minus 1% by 2030-31. In line with this, the debt to GDP ratio is estimated to be 55.6% of GDP in BE 26-27. compared to 56.1% of GDP in RE 25-26. A declining debt to GDP ratio will gradually free up resources for priority sector lending and expenditure by reducing the outgo on interest payments. One of the main operational instruments for debt targeting is the fiscal deficit. I am happy to inform this august House that I fulfilled my commitment made in 2021-2022 to reduce fiscal deficit below 4.5% of GDP by 25-26. In RE 25-26, the fiscal deficit has been estimated at par with BE of 2025-26 at 4.4% of GDP. In line with the new fiscal prudence path of debt consolidation, the fiscal deficit in BE 26-27 is estimated to be 4.3% of the GDP. The revised estimates of the non-debt receipts are 34 lakh crore rupees, of which the centre's net tax receipts are 26.7 lakh crore. The revised estimate of the total expenditure is 49.6 lakh crore rupees, of which the capital expenditure is about 11 lakh crores. Budget estimates 2026 to 2027. Coming to 26-27, the non-debt receipts and the total expenditure are estimated as 36.5 lakh crore and 53.5 lakh crore respectively. The centre's net tax receipts are estimated at 28.7 lakh crore rupees. To finance the fiscal deficit, the net market borrowings from dated securities are estimated at 11.7 lakh crore rupees. The balance financing is expected to come from small savings and other sources. The gross market borrowings are estimated at 17.2 lakh crore rupees. I'll now move to Part B. Part B, direct taxes. Honorable Speaker, sir, I now present my proposals on direct taxes. New Income Tax Act. In July 2024, I announced a comprehensive review of the Income Tax Act 1961. This was completed in a record time, and the Income Tax Act 2025 will come into effect from 1st April 2026. The simplified income tax rules and forms will be notified shortly. giving adequate time to taxpayers to acquaint themselves with its requirements. The forms have been redesigned such that ordinary citizens can comply without difficulty. Ease of living. I propose that any interest awarded by the Motor Accident Claims Tribunal to a natural person will be exempt from income tax, and any TDS on this account will be done away with. I propose to reduce TCS rate on the sale of overseas tour program package from the current 5% and 20% to 2% without any stipulation of amount. I propose to reduce TCS rate for pursuing education and for medical purposes under the Liberalized Remittance Scheme, popularly known as LRS, from 5% to 2%. Supply of manpower services is proposed to be specifically brought within the ambit of payment to contractors for the purpose of TDS to avoid ambiguity. Thus, TDS on these services will be at the rate of either 1% or 2% only. I propose a scheme for small taxpayers, wherein a rule-based automated process will enable obtaining a lower or nil deduction certificate instead of filing an application with the assessing officer. For the ease of taxpayer holding securities in multiple companies, I propose to enable depositories to accept Form 15G or Form 15H from the investor and provide it directly to various relevant companies. I propose to extend time available for revising returns from 31st December to up to 31st March with the payment of a nominal fee. I also propose to stagger the timeline for filing of tax returns. Individuals with ITR 1 and ITR 2 returns will continue to file till 31st July, and non-audit business cases or trusts are proposed to be allowed time till 31st August. TDS on sale of immovable property by a non-resident is proposed to be deducted and deposited through resident buyers and his or her PAN-based challan instead of requiring a TAN, which is a temporary accounting number. To address practical issues of small taxpayers like students, young professionals, tech employees, relocated NRIs, and such others, I propose to introduce a one-time 6-month foreign asset disclosure scheme for these taxpayers to disclose income or assets below a certain size. This scheme would be applicable for two categories of taxpayers, namely A, who did not disclose their overseas income or assets, and B, who disclosed their overseas income and or paid due tax but could not declare the asset acquired. For category A, the limit of undisclosed income or asset is proposed to be up to 1 crore rupees. They need to pay 30% of fair market value of asset or 30% of undisclosed income as tax and 30% as additional income tax in lieu of penalty, and would thereby get immunity from prosecution. For category B, asset value is proposed to be up to 5 crore rupees. Here, immunity from both penalty and prosecution will be available with a payment of fee of 1 lakh rupees. Rationalizing penalty and prosecution. Multiplicity of proceedings are hindrance to the ease of doing business. I propose to integrate assessment and penalty proceedings by way of a common order for both. There will be no interest liability on the taxpayer on the penalty amount for the period of appeal before the first appellate authority, irrespective of the outcome of appeal process. Further, quantum of prepayment is being reduced from 20% to 10% and will continue to be calculated only on core tax demand. As an additional measure for reducing litigation, I propose to allow taxpayers to update their returns even after reassessment proceedings have been initiated, and an additional 10% tax rate over and above the rate applicable for the relevant year. The assessing officer will then use only this updated return in his proceedings. There is already a framework for immunity from penalty and prosecution in the cases of underreporting. I propose to apply this framework for immunity to misreporting too. However, in such a case, the taxpayer will need to pay 100% of the tax amount as an additional income tax over and above the tax and interest due. Penalties for certain technical defaults, such as failure to get accounts audited, non-furnishing of transfer pricing audit report, and default in furnishing statement for financial transactions are proposed to be converted into fee. I propose to rationalize prosecution framework under Income Tax Act while maintaining a careful balance for deterrence in some serious offence. Non-production of books of account and documents and requirement of TDS payment where payment is made in kind are being decriminalized. Further, minor offences will attract fine only. The remaining prosecutions will be graded commensurate with the quantum of offence. They will entail only simple imprisonment with maximum imprisonment reduced to 2 years and power to courts to convert even those into fines. There is no penalty. There is no penalty presently for non-disclosure of non-immovable foreign assets with aggregate value less than 20 lakh rupees. I propose to also provide them with immunity from prosecution with retrospective effect from 1/10/2024. Cooperatives. Deduction is already allowed to a primary cooperative society engaged in supplying milk, oilseeds, fruits or vegetables raised or grown by its members. I propose to extend this deduction to also include supply of cattle feed and cotton seed produced by its members. I propose to allow inter-cooperative society dividend income as deduction under the new tax regime to the extent it is further distributed to its members. I further propose to allow exemption for a period of 3 years to dividend income received by a notified national cooperative federation on their investments made in companies up to 31/1/2026. This exemption would be allowed only for dividends further distributed to its member cooperatives. Supporting IT sector as India's growth engine. India is a global leader in software development services, IT-enabled services, knowledge process outsourcing services, and contract R&D services relating to software development. These businesses and their segments are quite interconnected with each other. All these services are proposed to be clubbed under a single category of information technology services with a common safe harbor margin of 15.5% applicable to all. The threshold for availing safe harbor for IT services is being enhanced substantially from 300 crore rupees to 2,000 crore rupees. Safe harbor for IT services shall be approved by an automated rule-driven process without any need for tax officer to examine and accept the application. Once applied by an IT services company, the same safe harbor can be continued for a period of 5 years at a stretch at its choice. For IT services companies who want to conclude advanced pricing agreement, APA, I propose to fast-track unilateral APA process for IT services and endeavor to conclude it within a period of 2 years. The period of 2 years can be extended by a further period of 6 months on taxpayers' request. I propose to extend the facility of modified returns available to the entity entering APA to its associated entities also. Attracting global business and investment. Recognizing the need to enable critical infrastructure and boost investment in data centers, I propose to provide tax holiday till 2047 to any foreign company that provides cloud services to customers globally by using data center services from India. It will, however, need to provide services to Indian customers through an Indian reseller entity. I also propose to provide a safe harbor of 15% on cost in case the company providing data center services from India is a related entity. To harness the efficiency of just-in-time logistics for electronic manufacturing, I propose to provide safe harbor to non-residents for component warehousing in a bonded warehouse at a profit margin of 2% of the invoice value. The resultant tax of about 0.7% will be much lower than in competing jurisdictions. To provide fillip to toll manufacturing in India, I propose to provide exemption from income tax for 5 years to any non-resident who provides capital goods, equipment, or tooling to any toll manufacturer in a bonded zone. To encourage vast pool of global talent to work in India for a longer period of time, I propose to provide exemption to global, non-India sourced income of a non-resident expert for a stay period of 5 years under notified schemes. I propose to provide exemption from minimum alternate tax, the MAT, to all non-residents who pay tax on presumptive basis. Tax administration. I propose to constitute a joint committee of Ministry of Corporate Affairs and Central Board of Direct Taxes for incorporating the requirements of income computation and disclosure standards, the ICDS, in the Indian Accounting Standards, IND AS itself. Separate accounting requirement based on ICDS will be done away with from the tax year 27-28. To support Prime Minister Modi's vision of homegrown accounting and advisory firms to become global leaders, I propose to rationalize the definition of accountant for the purposes of safe harbor rules. Other tax proposals. Change in taxation of buyback was brought in to address the improper use of buyback route by promoters. In the interest of minority shareholders, I propose to tax buyback for all types of shareholders as capital gains. However, to disincentivize misuse of tax arbitrage, promoters will pay an additional buyback tax. This will make effective tax 22% for corporate promoters. For non-corporate promoters, the effective tax will be 30%. TCS rate for sellers of specific goods, namely alcoholic liquor, scrap, and minerals, will be rationalized to 2%, and that on tendu leaves will be reduced from 5% to 2%. I propose to raise the STT on futures to to 0.05% from the present 0.02%. STT on options premium and exercise of options are both proposed to be raised to 0.15% from the present rate of 0.1% and 0.125% respectively. We reformed the taxation landscape for corporates in 2019 by providing them a simplified regime with lower tax rate so that they could productively focus on business rather than on claim of deductions and exemptions. To encourage companies to shift to the new regime, set off of brought forward MAT credit, minimum alternate tax credit, is proposed to be allowed to companies only in the new regime. Set off using available MAT credit is proposed to be allowed to an extent of 1/4 of the tax liability in the new regime. MAT is proposed to be made final tax, so there will be no further credit accumulation from 1st April 2026. In line with this change, the rate of final tax is being reduced to 14% from the current MAT rate of 15%. The brought forward MAT credit of taxpayers accumulated till 30th March 2026 will continue to be available to them for set-off as above. Indirect taxes. I shall now take up proposals related to indirect taxes. My proposals for customs and central excise aim to further simplify the tariff structure, support domestic manufacturing, promote export competitiveness, and correct inversion in duty. To continue weeding out long continuing customs duty exemptions, I propose to remove certain exemptions on items which are being manufactured in India or where the imports are negligible. Similarly, to further simplify the process of ascertaining the rate of duty applicable on a particular item, I propose to incorporate certain effective rates in various customs notifications to the tariff schedule itself. I shall now take up sector-specific proposals. Promotion of exports of marine, leather, and textile products. I propose to increase the limit for duty-free imports of specified inputs used for processing seafoods for export from the current 1% to 3% of FOB value of the previous year's export turnover. I also propose to allow duty-free imports of specified inputs, which is currently available for exports of leather or synthetic footwear, to exports of shoe uppers as well. I propose to extend the time period for export of final product from the existing 6 months to 1 year for exporters of leather or textile garments, leather or synthetic footwear, and other leather products. Energy transition and security. I propose to extend the basic customs duty exemption given to capital goods used for manufacturing lithium-ion cells for batteries to those used for manufacturing lithium-ion cells for battery energy storage systems also. I propose to exempt basic customs duty on import of sodium antimonate for use in manufacture of solar glass. Nuclear power. I propose to extend the existing basic customs duty exemption on imports of goods required for nuclear power projects till the year 2035 and expand it for all nuclear plants irrespective of their capacity. Critical minerals. It is proposed to provide basic customs duty exemption to the import of capital goods required for the processing of critical minerals in India. Biogas blended CNG. I propose to exclude the entire value of biogas while calculating the central excise duty payable on biogas blended CNG. Civil and defense aviation. I propose to exempt basic customs duty on components and parts required for the manufacture of civilian training and other aircrafts. It is proposed to exempt basic customs duty on raw materials imported for the manufacture of parts of aircraft to be used in maintenance, repair, or overall requirements by units in the defense sector. Electronics. To deepen value addition in the consumer electronics sector, I propose to exempt basic customs duty on specified parts used in the manufacture of microwave ovens. Special economic zone. To address the concerns arising about utilization of capacity by manufacturing units in the special economic zones due to global trade disruptions, I propose as a special one-time measure to facilitate sales by eligible manufacturing units in SEZs to the domestic tariff area at concessional rates of duty. The quantity of such sales will be limited to a prescribed proportion of their exports. Necessary regulatory changes will be undertaken to operationalize the measures while ensuring level playing field for the units working in the DTA. Ease of living. To rationalize the customs duty structure for goods imported for personal use, I propose to reduce the tariff rate on all dutiable goods imported for personal use from 20% to 10%. To provide relief to patients, particularly those suffering from cancer, I propose to exempt basic customs duty on 17 drugs or medicines. I propose also to add 7 more rare diseases for the purposes of exempting import duties on personal imports of drugs, medicines, and food for special medical purposes used in their treatment. Customs process. India's role and share in the global trade is poised for a major leap in line with our ambition and journey towards Vikasit Bharat. In this regard, I propose many measures for custom processes to have minimal intervention for smoother and faster movement of goods and greater certainty to the trade. Trust-based systems. I propose to enhance duty deferral period for Tier 2 and Tier 3 authorized economic operators, known as AEOs, from 15 days to 30 days. I propose to provide eligible manufacturer importers the same duty deferral facility. This should encourage them to get themselves accredited as a full-fledged Tier 3 AEO in due course. To provide greater certainty and for better business planning, I propose to extend validity period of advance ruling binding on customs from the present 3 years to 5 years. In the spirit of the whole of government approach, government agencies will be encouraged to leverage AEO accreditation for preferential treatment in clearing their cargo. Regular importers with trusted long-standing supply chains will be recognized in the risk system so that the need for verification of their cargo every time can be minimized. Export cargo using electronic sealing. Export cargo using electronic sealing will be provided through clearance from the factory premises to the ship. For import of goods not needing any compliance, filing of bill of entry by a trusted importer and arrival of goods will automatically notify customs for completing their clearance formalities. This will enable goods to be released immediately on arrival. The customs warehouse framework will be transformed into a warehouse operator-centric system with a self-declarations, electronic tracking, and risk-based audit. These reforms will move away from the current system of officer-dependent approvals and reduce transaction delays and compliance costs. Ease of doing business. Approvals required for cargo clearance from various government agencies will be seamlessly processed through a single and interconnected digital window by the end of the financial year. Processes involved in clearance of food, drugs, plant, and animal and wildlife products, accounting for about 70% of interdicted cargo, will be operationalized on this system by April 2026 itself. For goods not having any compliance requirement, clearance will be done by customs immediately after online registration is completed by the importer, subject to the payment of duty. Customs integrated system will be rolled out in 2 years as a single integrated and scalable platform for all customs processes. Utilization of non-intrusive scanning with advanced imaging and AI technology for risk assessment will be expanded in a phased manner with the objective to scan every container across all the major ports. New export opportunities to support Indian fishermen to fully harness the economic value of marine resources beyond our territorial waters. The following measures will be taken. A. Fish catch by an Indian fishing vessel in exclusive economic zone or on the high seas will be made free of duty. Landing of such fish on foreign port will be treated as export of goods. Safeguards will be put in place to prevent misuse during fish catch, transit, or transshipment. To support aspirations of India's small businesses, artisans, and startups to access global markets through e-commerce, I am pleased to announce complete removal of the current value cap of 10 lakh rupees per consignment on courier exports. In addition, handling of rejected and returned consignments will be improved with effective use of technology for identifying such consignments. I propose to revise provisions governing baggage clearance during international travel to address genuine concerns of passengers. The revised rules will enhance duty-free allowances in line with the present-day travel realities and provide clarity in temporary carriage of goods brought in or taken out. There are honest taxpayers who are willing to settle disputes by paying all their dues, but they get deterred due to negative connotation associated with penalty. They will now be able to close cases by paying an additional amount in lieu of penalty. Honorable Speaker, sir, with this, I commend the budget to this august House. Jai Hind.
One and a half hours.
Item number 3, माननीय वित्त मंत्री जी.
Item number 2, sir.
3.
Sir, with your permission, I rise to lay on the table of the following statements under Section 3, 1 of the Fiscal Responsibility and Budget Management Act of 2003. Medium-term fiscal policy, fiscal policy strategy statement, and macroeconomic framework statement.
Item number 4, माननीय वित्त मंत्री जी.
Sir, with your permission, I move for leave to introduce the Finance Bill 2026.
प्रश्न ये कि विधेयक को पुनर्स्थापित करने की अनुमति प्रदान की जाए। जो सदस्य इस पक्ष में हाँ गए, जो सदस्य विरोध में ना गए, मेरे विचार में निर्णय हाँ वालों के पक्ष में, हाँ वालों के पक्ष में अनुमति प्रदान की जाती है। माननीय मंत्री जी, अब विधेयक पूरे स्थापित करें।
Sir, I introduce the bill.
माननीय सदस्यगण, आपको सूचित किया जाता है कि माननीय मंत्री जी के बजट भाषण की कॉपी पब्लिकेशन काउंटर पर ली जाती है। बजट भाषण और बजट से संबंधित दस्तावेज आपके मोबाइल फोन और मेंबर पोर्टल्स पर ही उपलब्ध है। सभा की कार्रवाई कल सोमवार दिनांक 2 फरवरी 2026 को प्राप्त 11 बजे तक के लिए स्थगित की जाती है।
Finance Minister Nirmala Sitharaman's 9th budget, a shorter speech than it has been at some times in the past, less than 90 minutes. And the focus clearly in part A was on a vision statement, words like skilling and innovation dominating that, and then looking at customs duty rationalization in specific sectors, offering various SOPs and benefits potentially to NRIs who wish to invest in India, or foreign companies who wish to invest in specific areas like cloud services, for example. But as you can see, the markets have reacted rather badly to the fact that there is a higher security transaction tax. Markets, BSE, Sensex, in fact, is down by more than 1,000 points. So the markets clearly haven't responded positively to that higher security transaction tax. But let's get in first comments from across the table. Shankar, your first reactions.
I think the budget was split into 3 parts. One was basically the opening where a lot of the gaps. So I will call this a fill in the blanks budget. So you fill in the gaps in the areas where the domestic economy can be promoted. Fill in the gaps in the areas where probably you might get some foreign exchange, so all the NRI and data center tax holiday and stuff. And the third part is basically in the ease of processes, so income tax rules, customs rule and all. Having said that, I mean, this was far too much minutiae. Somebody should do a word map on how many acronyms are there in the budget, and made me feel like I was listening to a Pranab Mukherjee budget.
First reactions, Dr. Baru.
You know, this is very much in line with Nirmala Sitharaman's 8 budgets so far, which is all about specificities. The big picture clouded by too much detail, because I think the approach of this government has been to show every single segment of society and the economy that we have done something for you. So there are all these 1,000 crores there, 1,000 crores there, 10,000 crores here, 2,000 crores here. The spending divided into so many sectors. You don't get an idea of what is the total amount being spent. Normally, budgets in the past would tell you this is the additional demand we are injecting into the economy. This is the total expenditure of the government in coming financial year. So you don't get a big picture view of what is being done in terms of initiatives. And on the customs, again, the old world, we used to have these sector-specific exemptions, too many sector-specific things. If only the finance minister could have said that the average tariff level is being brought down from X to Y. Calculating all these concessions, what is it? Has India become more open in terms of the tariffs, or are we still where we were? Those kind of messages are important for the economy to understand, where is the expenditure going, how much demand can be injected as a result of all these initiatives, and how much openness is there. We don't get a big picture view at all.
I had a friend who just sent me a message saying she should be called Tinker Raman.
Absolutely. So that's
what she's done today.
We are tinkering here.
Rajiv, you want a quick comment? Your first comment?
So I think few encouraging things that I found very important were the emphasis on high-speed railways across the 7 city hubs identified. I think that's a really good step. Then of course the expanded budget for the India Semiconductor Mission, the biopharmaceuticals focus, I think all of that is excellent stuff.
Punita.
So while it is very difficult to analyze these consequences of all these little initiatives on the tax side, and that'll take, a lot of time to do that. At the very high level, based on the speech, I think it's more like going back to the grassroots. Some of these initiatives are very focused, like tourism, medical tourism.
You're setting up rare earth corridors. You're looking at specific areas as well.
Yes, and then Buddhism, promoting Buddhism and cultural centers, education in, underserved tier 2, tier 3 cities. It will help employment. Because in these areas, even simple thing like tourism can generate a lot of revenues, a lot of employment, and some countries just live on that. So if we do this properly and do, whether it's medical tourism or regular tourism or cultural tourism, and then along with that, she's also talked about innovation in semiconductors and biopharma and a little bit on AI. So I think all of those
She tried to touch all the buttons. And sometimes when you touch, there is one view that you should have been more selective, touch 5 or 6 core areas. But she's tried to touch the whole gamut of areas.
But did you notice she didn't touch the defense button, which we were talking about?
No, she didn't even talk about it at all.
No, absolutely.
She sort of stayed away from that. But the sense is the markets have reacted very negatively because of the security transaction tax, which is a minor up, but presumably the markets didn't want any of these taxes to be touched at all.
No, this is an expectation story. Basically, they expected that somehow the FIIs will be wooed back, or somehow the LTCG might be changed.
Yeah, markets wanted, of course, they didn't want capital gains and STT, and instead we've got an increase in STT, so that was a shock. But I think they've given nothing for FIIs, but they have done something for NRIs. So NRIs have been given a lot of tax incentives. Now, whether NRIs will start coming to India more and doing it, I hope they will. But then, they are stuck with this 120-day limit. They can't even spend more than 120
I don't
days
recall when last, during the budget itself, the market has slid by 1,000 points. That's a long time since that's happened.
Market is also much higher now.
But during the budget itself,
1.5% slide.
No, we are going back 20 odd years. We are going back 20. No, during the budget, market sliding by 1,000 points, more than 1,000 points, is about 20 years ago. When, if you recall, that was the first budget of the UPA run with the left, and then A.B. Bardhan famously
But 20 years ago, the index level was also much lower, right?
Sure, but even so, a 1,000-point drop is a substantial drop today, while the budget speech is on. Clearly, the markets had expected that the STT would not be touched. And the fact that it's been touched has led to some kind of confidence lapse. Siddharth Zarabi also will join us in a moment. My colleague Maria Shakil is with us. We'll get reactions both from government and opposition in a moment. Rajiv Gowda is national spokesperson of the Congress. He heads their research cell. Mr. Gowda, you've been a critic of this government. Tell us very honestly, objectively, the best thing about the budget and what you didn't like. I want an honest answer.
I only give honest answers, Rajdeep.
No, our politicians don't. There must be something. First, tell me what's the good thing about the budget.
Good thing is the 2 enhances that they're going to implement in different parts of the country. Mental health and is a domain that really needs addressing. So there's a first step in that direction. Now, just let me turn to focusing on my job, which is to point out what all is wrong. The markets are collapsing there because not just one particular feature, the increase in the tax for the transaction. The basic point is that this was a crisis budget, right? We are facing a crisis in terms of foreign confidence and investment. And so what you need to do is to revive multiple dimensions of the Indian economy. Now, for all the talk about these 3 kartavyas, etc., just take what is being done for youth. Is whatever initiative that she announced here today actually going to create jobs? What has been the track record so far? What happened to agriculture? What happened to defense? How come any of these massive, crucial domains have actually been ignored in this very long, but not longest speech? So these are the sorts of questions that come up right away and say, what's, this government...
I'm just taking short reaction.
Using the budget as an announcement platform, but look at the track record and just see whether any of these have actually translated into any outcome.
Okay. Siddharth Zarabi joins us. Siddharth, your first reactions, particularly as I told Shankar, I don't recall last when during the budget speech the market takes such a sharp dip. Is it just the STT which has spooked the market?
There have been instances of significant dips, including when the
More than 1,000 points, maybe retrospective tax last.
Bases were last, but I recall Pranab Mukherjee's retrospective amendment budget. But the broad point that you were making, Rajdeep, about why, it's a very simple why the securities transaction tax has been hiked. You can talk about the quantum, but its impact is coming at a time when people were looking for some relief from a stock market perspective, essentially on account of the fact that the markets have been negative for quite some time, have taken a beating on account of various external factors. So the comparison in the mind of market makers and market players is that instead of addressing that trend, they are taking this as an absolute negative that you have gone ahead and hiked on futures and options. But why is this? It's very clear on a directional basis, Rajdeep, not now, but for several years, that the government, fiscal authority, believes that as far as this aspect of our economy is concerned, there should not be unnecessary speculation. And that is why this strings together. Now, individual packs, for example, if you were to look at the defense pack of stocks, these are taking a hit on account of, again, this build-up of anticipation that there would be an Operation Sindoor impact. And that is why you are seeing the kind of negative, the Sensex down 1.2%, the Nifty down 1.37% as we speak.
Okay, let's bring in Rajan Navani now. Mr. Navani, how are you looking at the numbers right now? I mean, of course, the stock market has given a huge thumbs down, but the larger question is that how will you describe this budget? Will you be saying, of course, we did not hear any big bang announcements like we saw in 2025. Is this the budget of consolidation then?
Yes, I think exactly that. Budgets normally shape balance sheets for a year, but I think this growth-focused budgets, actually shape a nation's future for decades. And I think this is aligned to the Viksit Bharat 2047 vision of the government, which not only deepens, I think, Bharat's internal economic strength through inclusivity, but at the same time ensuring how India can continue to march on the global stage, leveraging technology, the creative young power that India has. And I think multiple aspects of that in some shape and form have been addressed in the budget. We represent India's pioneering platform in the orange economy. And, this was the first time that has been discussed, which is actually the creative industries in India generating livelihoods, which will not only, come in the time of AI and new technologies, but, shape different aspects as we go ahead. Also, as a board member of the IICT, seeing an additional commitment to creating, 15,000 content centers in schools and in colleges is a big push to get the next generation of livelihood creation, in place, right? A big job of the government is to create jobs. I think we are seeing a big shift due to technology and how jobs will play out in the future. And I think this budget addresses largely that new emerging Bharat young component, not only positioning itself for India, but globally. And now moving really from a content creation to an IP.
Yes, many see this as perhaps the government of India still not ready for the big AI leap of faith that we have seen, say, in having been taken by United States or China. India is still to catch up. Is there a sense also from this budget that, yes, as far as data centers are concerned, that is going up, but still a long march for India to catch up with what has been achieved by China and US already?
Sure. You think of AI. AI has multiple layers, right? I think there are base infrastructure. And I think this budget has clearly said India is going to be a global cloud player, for the world, because that's where the data resides. Giving clarity on tax things until 2047 is, I think, pretty innovative, never heard before in India. So, that was my original point, right? That this budget really talks about a longer term view and also explains, stock markets today look at short term, like what we are saying, higher securities tax and react immediately. But when you think of a long term foundational building base for Indian industry, the Indian economy with the next generation of consumers, the young people who are not only going to consume, but also going to be the world's largest employees, and no country better than India to unlock that potential. So I think if done right, India can ride the journey very well.
Let's look at specifically the tax holiday till 2047. for foreign companies that provide cloud services to India, but we'll get some live reactions that are coming in. Let's listen into some of them.
उन्होंने काफी हद तक सॉल्व किया।
रेयर अर्थ मिनरल और कैपेक्स बढ़ा दिया है। इस ओवरऑल इसको किस तरह देखते हैं? एक्सपोर्ट को लेके भी काफी फोकस है।
एक्सपोर्ट पे फोकस है, रेयर अर्थ पे फोकस है, कैपेक्स भी 1 लाख करोड़ से बढ़ाया है, तो वो भी बड़ा अच्छा है क्योंकि पहले भी अगर आप पहले से देखें तो 11 लाख करोड़ भी बहुत नंबर था। अगर आप 4 साल पहले से देखें तो ऑलमोस्ट डबल कर दिया, तो इस बार और 10-12% से बढ़ाया है।
थैंक यू सर।
So how do you look at the
Siddharth, tax holiday till 2047 to foreign companies that provide cloud services to India, that work with Indian companies, importantly, is a major boost. Do you see that having a... let me also look at semiconductors, for example. Again, the government is promising and committing to a huge push in semiconductors. So specific sectors which potentially over the next 20 years could drive the economy forward are being looked at on a positive side.
Rajdeep, let's take the tax basket, and maybe this was already responded to by our guests here, so allow me repetition. If minus the STT hike that has spooked the markets, and you could also say that in terms of buybacks being brought in under the net, those are fine. If you look at it, there are a lot of specific tax reform measures which take away pain points that exist. On the customs side...
Give me an example.
Plenty of them. For example, you have a reduced TCS rate under the liberalized remittance scheme. This helps those for education fees, those who are paying, or for medical purposes. You will, you have taken specific measures as far as NRIs are concerned. A new foreign asset disclosure scheme. It's allowing people to pay up in one go and get rid of the fear of a legal overhang. Decriminalization of non-production of books of accounts or certain disclosures. These are minutiae. It may not be a headline grabbing, but I just want to take up 3 numbers which to me are the most significant, which talk about how this government has remained on the path over multiple years. One is the fiscal roadmap, and the numbers, the shift to debt to GDP. By next year, we will be able to have a comparative figure. The second is the capex hike. This is again very clear that physical infrastructure along with digital and new age sectors like semiconductors that you spoke about, Rajdeep, remain a priority. And I wonder if it's been discussed, but the 16th Finance Commission report has recommended 41% devolution. That 41% devolution was prevailing for the previous 5 years. That has been continued. So that part of the political economy, especially with regard to resource availability for states, being taken care of. I would say the broad macro numbers and staying on the path, no shocks, no surprises, and obviously the fiscal deficit couldn't have become 3%.
Yeah, go ahead.
Keeping up the capital expenditure.
Keeping up the capital expenditure
over
second,
12 trillion rupees.
And cleaning up the house with regard to certain tax and definitely for customs. These are the 3 broad pillars. Now, allocations for schemes, I must say that those are headline numbers. It takes time for the economy to absorb them. Several of them spill over into multi-year implementation. So for the moment, we can look beyond those numbers as well.
Given the capex numbers that you all just spoke about, let's go to Vinayak Chatterjee, Chairman, CII, National Committee on PPP in Infrastructure, Founder and Managing Trustee, the InfraVision Foundation. Your first reactions, Mr. Chatterjee, also joined by Vivek Bhatia, MD and CEO, TKIL Industries. But first you, Mr. Chatterjee.
Thank you, thank you. I will restrict my comments to my pay grade, which relates to the infrastructure sector. In this budget, I have found 2 major dominant themes in infrastructure. One is a very significant focus on urban infrastructure, and the next is a bit of a transformational agenda, which is 7 new high-speed rail corridors. These are the 2 major dominant themes, and there are 4 sub-themes which find an impactful presence in the budget. One is with regard to the entire focus on social infrastructure, medical tourism, university townships, archaeological sites, sports training institutes, and tourism circuits. The second is coastal and inland waterways. The third is financial restructuring, REITs for unlocking land, monetizing land of CPSEs, Infra Risk Guarantee Fund, restructuring of PFC and REC and municipal bonds. And the fourth is the fair amount of tax incentives being given for data centers, nuclear, biogas, and aircraft, MRO, and manufacturing
Mr.
parts.
Chatterjee,
So these are my broad takes on this budget. Yep.
Yes. One of the highlights is of setting up of infrastructure risk
carry on.
guarantee fund. What will it really entail?
Yes.
Infrastructure risk guarantee
Well, we
fund?
have to see the fine print, but it says, yes, it is the FM clarified that this was for lenders. So I suspect for financial institutions lending to infrastructure projects, if there are difficulties, then this infrastructure risk guarantee fund will mitigate part of the pain. But we have to wait to see exactly what this means in terms when we see the fine print.
NPA insurance.
Sorry,
Infra NPA insurance.
It's basically a form of infra NPA insurance because the distance between the project, the realization of the funds. Now, if you see a large number, and Vinayak might know the details, a large number of projects have yet to be paid by central and state governments, which makes it difficult for the companies executing the projects to repay money to the banks. So this kind of risk guarantee will prevent them to be pushed into NCLT or to insolvency courts. And maybe I hope that they will clarify that this is not some kind of, lend to whoever you want and then sort of encash.
The fact is that this budget
it's an NPA. So
yeah, but this budget was this budget was against the backdrop of these geopolitical headwinds, which even the economic survey has spoken about. And I will come to my guest to find out what specifically does this do to allay those concerns, those fears. How much really could the budget also have done in terms of allaying what is really not in your hand, what is done across the world. But Vivek Bhatia, MD and CEO, TKIL Industries, is there a sense that the government has given a broad vision for where industry goes? We've been discussing this time and again. Private investment is lower than it was pre-2019. What has this budget done to get back that investor confidence? Specific sectors have been targeted, but is there a big picture that emerges?
Well, that's a very good question, Rajdeep. If I look at how the finance minister started her speech today, she spoke about three kartavyas. And the first one she said is about growth, but growth not driven by the brute force of capital, but rather focusing on productivity and competitiveness. The second one that she emphasized was, talking about aspirations and making sure that different parts of the economy, from a citizen perspective, their aspirations are addressed. And third, I think the inclusiveness that she wanted to bring about in terms of covering various parts of the economy. So I think philosophically, if I look at these three objectives and what she has tried to cover, it's really a broad set of strokes with which she has tried to do different things in various pockets of the economy. Having said that, I think if we look at this from a numbers point of view, I think to have fiscal deficit going down from 4.4 to 4.3, and at the same time to have an improvement in overall infrastructure spending, I think it's a fine balancing act. But she has really put money in the right spaces and in the right areas, which is very relevant given the current macroeconomic environment, geopolitical environment that we see today. And what I really liked was, apart from the areas that Vinayak mentioned, which are extremely relevant and promising, I would say I really liked that, she carved out 20,000 crores for carbon capture, focusing on core sectors. And, when we look at the kind of FTAs that we are signing, I think making the Indian economy green, the Indian products greener, would be vital for greater market access in the coming days and years for the Indian economy. So I think that's really positioning us in the right way for those sectors. And then also in some simple ways, I think without...
Sorry, Vivek, I just want to get as many views as possible. Vinayak, very quickly, there was a sense that, as I said, this was an opportunity in the adversity of global headwinds to send out a strong signal that India means business, ease of doing business. Those have been mantras in recent times. Speed of doing business is the new mantra. Do you believe that this budget gives that kind of incentive to industry to recognize that the government is with them? Siddharth just mentioned that there are a few exemptions that are being given, for example, to NRIs to invest in India. But overall, do you see it increasing our manufacturing competitiveness and actually giving us some kind of a direction when it comes to these, to taking on the world in these times of global headwinds?
You know, the answer lies, it's easy to give a macro answer, sweeping answer. But I think to answer your question credibly is to see the level of micro detail that the FM has gone into to actually provide a sense of relief to many, many sectors in term, not just relief, but to provide encouragement to stand up and fight the global headwinds that are blowing. I mean, she has gone from construction equipment to chemicals to rare earths to biopharma, semiconductors, electronics, container manufacturing, natural fiber, textiles, handlooms, the special dispensation for SEZ, sports goods. So what I would say is, compared to other budgets, she has, instead of making general statements, she has specifically gone to a plethora of industries to say, we are standing by you. And I think it sends a very strong message
because there are,
over and above the various
tax
concessions and incentives.
Sure, there are two views of that. Someone here suggested Pranab Mukherjee kind of budget, tinker Raman. Others are saying focus Raman. So Dr. Baru, your reaction was there's too much of detailing, micro detailing. Here you've got Vinayak Chatterjee saying actually that's a strength. You're giving specifics for specific industries.
No, you can give specific for specific industries. But the purpose of an annual financial statement of the government is to tell the economy what is the extra demand being injected through budgetary initiatives. We talk of a fiscal deficit of 4.3%. What is the total expenditure this year going to be? And what is the total revenue mobilization going to be? Every single budget in the past would end with a statement. This is the additional expenditure. When you give 10 different items where you're 10,000 here, 10,000 there, 10,000 there, what does it add up to?
Okay, let me put a specific, since you said specific, tax reforms to boost manufacturing sector. Exemption from income tax for 5 years to non-residents providing capital goods, equipment for tooling to any toll manufacturer in a bonded zone. Provision of safe harbor to non-residents for component warehousing in a bonded warehouse. Deferred duty payment window to trusted manufacturers. Increase the limit for duty-free imports of specific inputs used for processing seafood products for export. Duty-free imports of specific inputs extended to export of shoe uppers, that's in the leather industry. Extension of time for export of final product for exporters of leather or textile garments. Basic custom duties for manufacture of microwave ovens, basic custom duty exemptions for those in aircraft manufacturing. We've also looked at, you can also look at nuclear power specific areas, a special one-time measure to facilitate sale in domestic tariff area of duty by eligible manufacturing units of SEZs. So she will say...
What does it all add up to?
It all adds up to trying to use this to ensure ease of doing business for specific sectors.
But does it make the economy more open? I don't know.
Manufacturing sector has been a matter of concern. These are efforts being made, when one would say.
So has the demand dying, and now you're again coming up with some regulation to incentivize industry through kind of SEZ.
I mean, she's specifically giving you tax reforms for specific sectors.
The big story here is the government of India will spend 1 lakh crore more.
Higher capital expenditure.
Capital thing. The total expenditure is... Total expenditure...
25% of the budget is, I think, on capex now.
Yeah, and the total expenditure is roughly gone up by that much. Yeah. So you have last year's economic conditions with a higher, marginally, incrementally higher expenditure. What the budget sort of the lost in detail story is that there are specific areas which sort of they're creating the roads, like the high-speed rail corridor. But there's no allocation, you don't know where it's going.
That's the point.
So whether it will be funded by public or PPP or the Japanese, we don't know.
But we know from experience, Dr. Baru, at least I think there's an intent put out that 7 more high-speed rail is coming out.
Let's also look at it from a different perspective. If you take the last 11-year period, capital expenditure budget has gone up 6 times. It was 2 lakh crore then, it is now 12.2 lakh crore. And if you look at defense modernization, because Shankar, we have the numbers now, the defense modernization allocation this year is 2.2 lakh crore. So as the details filter in, it seems that the intent that has been followed for several years of a capex push along with other measures, continues very clearly with the numbers.
The best
but
part
still
of the
your
budget.
demand is not picking up. I mean, we began this discussion by saying that the big challenge is stagnant private corporate investment and stagnant demand.
Productivity gains.
Okay,
How
so
do you
let's
get this?
listen into some reactions which have come in. These are political reactions coming in from Parliament.
और हम जो इंतजार कर रहे थे मेरे केरला में हम कुछ नहीं सुन पाए एक टर्टल ट्रेल के बारे में सुना उसके अलावा और रेयर अर्थ्स मैं भी कुछ समय से कह रहा था लेकिन उसके अलावा केरला के लिए कुछ नहीं सुनाई दिया एक ऑल इंडिया इंस्टीट्यूट ऑफ मेडिकल साइंस 15 साल से इंतजार कर रहे हैं कोई अनाउंसमेंट नहीं था ऑल इंडिया इंस्टीट्यूट ऑफ आयुर्वेदा की अनाउंसमेंट किया लेकिन नहीं बताया कि कहाँ क्यों नहीं केरला में बताना चाहिए था कोई जामनगर के बारे में कुछ बोला लेकिन केरला के बारे में
हम लोग का पहला रिएक्शन सीआई का काफ़ी पॉजिटिव है बजट के बारे में और बजट जो हम लोग की जो इंडस्ट्री की मांग थी वो काफ़ी हद तक पूरी करता है और जो खासकर रिफॉर्म्स में कई सेक्टर्स को फोकस करना MSMEs को फोकस करना सर्विसेज में भी नया फोकस उन्होंने दिया है और हर एक सोसाइटी के हर एक वर्ग को अलग अलग भागों में कर उनके लिए क्या कर रहे हैं वो भी काफ़ी अच्छा था और टैक्स में कई जो चीज़ें थी जो पहले से जो कई चीज़ें जो रेस करी जा रही थी सिंप्लीफिकेशन के लिए वो भी उन्होंने काफ़ी हद तक सॉल्व किया.
Okay, as you can see, these are early reactions, and often the devil or the benefits in a budget lie in the details. And until those details start coming out, it would be premature to make the kind of statements like I just heard from Shashi Tharoor कि हमको कुछ turtle के लिए दिया गया है. If you look at it, there are also other areas which could benefit Kerala when it comes, for example, cashew and specific. You see, it almost seems as if a finance minister is in a zero-sum game. If she goes into specifics, people say she's tinkering. If she gives the broad sweep, people say that she's generalizing. The direction clearly has been given of continuity. Am I correct to use that word, Siddharth? That she has effectively gone on the path of continuity where she's been doing the budgets over. Yes, Punita.
So I would say that your question earlier, then have we addressed what is happening geopolitically?
Yes.
I don't think the budget addresses that directly.
How could she, what could she have done?
Well, first of all, no increase in big defense spending. I mean, given the situation that we face with our neighbors, that's a very geopolitically stressed situation. So we've not addressed that. But what we have addressed through multiple different ways is strengthening the domestic supply chains by giving some relief to lots of little MSMEs and, as I said, you know, tier 2, tier 3 cities development, etc. So it's back to like being more insular and focusing more on the domestic economy rather than focusing on the global economy. There's very little here that will help us
Rajdeep,
globally.
in terms of the politics of budget, we often focus on that. Last year, there were some announcements that were made keeping in mind particularly the alliance partners for Andhra Pradesh and also for Bihar. Bihar was poll-bound. Now, we haven't seen any such big announcement with regards to Tamil Nadu or Bengal. These are the two states where the BJP is very keen on expanding its footprints. So the politics of the budget is something that we'll have to wait and see.
No,
there were a few.
Not specifics.
For Kerala, if
yes.
you could see, there was an attempt being made to reach out to specific
No, it was there. The colors were all there. Kerala had stuff. Tamil Nadu had stuff.
Eastern region. She spoke of
Eastern region.
No, Andhra Pradesh had it because of the
Hyderabad, lots of
all the marine.
yes.
The whole marine story is the Andhra story, and there is stuff for Odisha.
Let me
get
in Pawan Verma for a quick comment. Pawan Verma is a former member of parliament. He just written a piece saying that this is a chance for the FM to be brave. Mr. Verma, was the FM brave according to you?
In my view, you have to ask yourself the question, what do you expect from a budget statement? Frankly, I'm a little disappointed because we were expecting a vision statement, and I'll tell you very simply why. The government has been in 2 absolute majorities and 1 stable majority for a 3rd term. The fiscal deficit is under control, inflation is manageable, the growth rates are above 6 to 7%. Given that, this was the time I felt that she should have made a major reform budget. Instead of that, in my view, what you got was overwhelming minutiae. Now you can decluster them and see what is going to help where. But there was no overarching statement for change. And I'll tell you in which sectors, very clearly. Investment. The government keeps telling the economic tigers of India, why do you not invest more? Now, what have you done specifically in terms of ease of doing business, in terms of radical reform? Because you can tinker with the system, or you can give a blueprint by which investors feel confident of putting their cash-rich stocks back into the economy. There is also the other factor. Rajdeep, I'll take another 1 minute only. The fact is that today, those who invest face the fear that failure will be conflated with fraud. And even success may be penalized if you don't sufficiently toe the government line. But that's a political issue. They need more investor confidence. What have you done? For instance, I've just named 4 sectors. These are the elephants in the room, the ghosts in the room. You've got to tackle them.
No, she's tried to in some way give industry some relief or tried to assuage their concerns over tax inspector Raj. She has spoken about that. The question at the end of the day is, again, what does it actually translate into a big picture? I think that's what it's coming down to. Has she been, I repeat, focused Raman or tinker Raman? There are those who are saying she's tinkered around too much. There are others who will say that she's at least given 8 or 10 industries a clear focus as to the path ahead. That, in a sense, Mr. Verma, as a quick final comment, seems to be where the debate lies. You wanted to give a vision statement on investor confidence. There are others who are saying that there are specific industries that needed to know that they are part of India's growth story, and she's tried to address that. Seafood is a good example of those who've suffered as a result of US tariffs in recent times. She's tried to address their concerns.
Okay, I'll just name 4 sectors where I was expecting, I have great respect for Nirmala ji, that she would come out with decisive economic steps akin to the 1991 budget, because we are placed at the same situation. One was ease of doing business. I felt she could have done much more. The second was, what do you do with the dole economy? Because you've got to move people either to employment or enterprise. You can't continue with the dole economy. Third is agriculture. It's plateaued. We need a second green revolution. Fourthly is unemployment. There had to be a massive push on skill development in an age of AI and automation where unemployment opportunities are drying up. And lastly, poverty. Poverty, you've got to lift all the boats of the economy. On per capita income, we are somewhere around 140 in the world, in spite of being the third largest economy. So where is that statement which kickstarts the economy in a manner which takes it to another level, rather than tinkering with the system and doing more of the same?
Siddharth, is this sort of binary that is being drawn, that there are supporters who are saying, look, she's focused on specific sectors, focused Raman, versus those that she's tinkered around too much, very much much like a Pranab Mukherjee kind of budget, is what one of our panelists suggested.
Could this have been a dream budget? I would say the dream lies in the details. And if you look at the details, the argument can well be that instead of rhetoric, there are specific steps. Now, obviously, we might disagree with the nature of these steps or the fact that they are very minute in detail and it is not possible to comprehend. For example, just one quick instance, the defense modernization part of the budget has increased 22%. I keep saying that the details, and Rajdeep, you refer to that. Look at it in terms of reforms. Between the Prime Minister's announcement that had happened with regard to reforms, and this is what we have also been calling our coverage, Reforms Express, from Independence Day to now, 350 specific reforms have been announced so far. What this also tells me, today's budget also tells me, is that the process of announcing major changes will not be confined to this budget.
It will be outside the budget.
And it has happened. The 2019 corporate tax rate cut, which was referenced by the finance minister, happened on 17th of September.
The flip side is all the more she could have then used this occasion, if the reforms were taking place outside the budget, use this budget to give a clear direction as to this reform express. There
is a 7-7 path, kartavya, path that has been expressed. That is the way the government wants to express it.
Dr. Baru, this is a strong point that is being made here, that many of the reforms have taken place pre-budget. What more do you expect the budget itself to do now?
No, look, I agree that I don't disagree with what Siddharth has said. The point is this. There are three dimensions to the annual financial statement of the finance minister. One is fiscal, second is policy, and third is this what you call tinkering, sectoral, Now, on fiscal, of course, we know what the fiscal deficit is, we know what the debt GDP ratio is going to be. So there is some stabilization there, and we are happy with it. We know that Finance Commission report has been accepted. So that's done. On the tinkering part, yes, in any budget speech, finance ministers have to be seen to be appealing to different constituencies. I have no problem with that. But the third dimension to the speech is to tell me this year, will all these initiatives take the economy from 6.5% rate of growth to 8% rate of growth over the next year? Because if you want to be Viksit Bharat by 2047, you need over the next 20 years an average rate of growth of 8% compared to the average rate of growth of 6.5% over the previous 20 years.
Okay.
Now, how will these initiatives, which are essentially sectoral, we've been told each sector something has been done, but overall, will these budgetary initiatives really push growth forward by 1.5 percentage points over the next year or two? That is a kind of big picture thing a finance minister is expected to say in an annual statement to the parliament.
Dr. Barwal, quickly.
If you are traveling overseas, the TCS has been reduced. Earlier it was 5 and 20%. It is down to 2%. Very good rationalization of a measure that had been taken earlier. So yes, the devil lies in these details.
Himanshu Bed, co-chair of FICCI Medical Devices Committee, is joining us. Himanshu, how are you looking at the overall allocation or the message that is coming in for the health sector? Himanshu, if you heard me. Yeah?
Okay, we'll try and go to Himanshu in a moment. Amitabh Dubey, who's with the economic cell of the Congress party, is also joining us. Amitabh Dubey, the first reaction, predictably, of the opposition is to say that the budget is non-transparent. To be fair to Nirmala Sitharaman, that in fact, one of the criticisms that she's resorted to minutiae. So when you say non-transparent, what is the opposition trying to really say? When she's gone into great detail.
Look, Rajiv, I want to make the general point is that about the credibility of this budget, the numbers underlying the budget. We are told that in the economic survey that growth is 7.4%, which implies that the inflation rate is 0.6%. Now, in whose lived experience is the inflation rate 0.6%? And this is precisely why the IMF gave the national accounts a C grade, because the wrong kind of deflator is being used. So rather than the growth rate being so high, if we come up with a realistic assumption of the inflation rate, then growth is much lower. And that obviously throws a lot of these projections into question. And the budget, I want to remind you, is about growth, it's about investment, it's about deficits. These are the important parts of the budget rather than announcement of this or that scheme. And this is why I also want to remind everyone that on the 27th of February, we're going to have a new set of national accounts. So all of these numbers are going to be rendered quite meaningless. So this is one point, is that the entire premise of growth investment of this budget are very questionable. The second point I'd like to make is that we've had a series of announcements. Now, this government is a champion at making announcements, and then no one actually follows up to see what the execution is. So let me remind you that we've had huge announcements on this and that sector over the past 10, 12 years, Make in India, Atmanirbhar Bharat. And the net result is that corporate investment for the last decade has remained at 12%. It hasn't budged an inch. The proportion of the economy in manufacturing is under 13% compared with 16% of the UPA. So you can have all these announcements, but what is missing is execution, and the outcomes are all entirely on the negative side.
Well, some of those, the execution is also with the states. I think one of the challenges for the finance ministers to set you're part of a team and you've got various captains in different states. But Punita, you wanted to make a quick point. Yes.
No, you were saying that is it a focused budget or a tinker budget?
That's the binary I'm offering.
And I'm now putting on my fund manager, investment manager hat. We can run concentrated portfolios or diversified portfolios, and both can lead to good outcomes. This is a diversified budget with some focused areas. So it's like, 70% of your portfolio is going to be on certain areas and 30% goes to the rest. But does it, for an investor, does it mean that they are really standing out areas that you would then change your portfolio and invest in certain sectors? A little bit, but not hugely.
Okay, since their initial reaction was, where is the word defense mentioned? Now, the details are here, and Siddharth, you can climb in on this. There's a big defense spend boost in budget 2026, says the government. Mammoth hike is what they claim in the defense budget. 7.8 lakh crores for 2026, and defense forces to get 1 lakh crores this year. Defense Ministry has allotted a budget of 7.8 lakh crores for 2026-27. Defense forces to get 2.19 lakh crores for modernization.
Now, so Rajdeep, that number, because a large part of the defense budget goes on the revenue account, which is salaries and pensions, and that breakup is available. That is why the focus has to be on modernization. And by my reckoning at this stage, and subject to any correction, this is almost a quarter hike, nearly 22% hike in modernization. So clearly, as the fine print comes out, there is a substantial allocation.
Let's look at expenditure of major items as per the budget.
Transport is
number one, 5.98 lakh crores. Defense number 2 at 5.94 lakh crores. Rural development 2.73. Home affairs 2.55. Agriculture 1.62. Education 1.39. Energy 1.09. Health 1.04 lakh crores. Urban development 85,000 crores. IT and telecom 74,000. Commerce and industry 70,000. Social welfare 62,000.
One of the criticisms. Quick point. Dr. Baru knows it. He's sort of dwelt on this for a large part of his life. Most of our expenditure is already baked in. No government, even if they had all seats in parliament, can suddenly switch gear and say, I will completely stop doing things. You could call it a gravy train, but the Sarkar, the state in India, has massive gravy trains. Transport, defense, others, these are all essential for the realm. But the fact is that the flexibility available to a finance minister to suddenly move around stuff by even 5 percentage points is close to impossible.
But I hear those who said that a couple of years from now, it'll get even more, it'll become even more difficult when the next pay commission's numbers kick in. So therefore, this was an opportunity in a way. I'm asking you, this was an opportunity in a way for greater rationalization to identify the focused areas more clearly. Has the government done that?
Well,
or have they, as Punita said, tried to diversify too much?
There is a lot that a budget of the size of India has to address. There are allocations, and then there are choices that you are making in terms of a policy choice. Should I push A or should I push B? If I have put 40,000 crore in electronic component manufacturing, what will the result be? The result is that we are seeing more and more phones. Now you may say, is it 100% manufactured or 70% assembled in India? Stuff is happening. These are policy choices they have made. We can argue, but at least the voter consistently rewards these policy choices.
Let's step away from the, when we discuss economic policy, I'd much rather that we don't sort of align it to who's winning the election and all. That's a whole separate ball game.
No, are you saying, Shankar, that these things don't have an impact on voter choices?
As we saw in Bihar, in the end, it was a 10,000 rupee scheme that you had to give to more than 1.5 crore women, which made the difference. I think there should be a direction, for example, whether in the budget or any. What is our stand on the dole economy? If you want to call it the dole, but go ahead.
Let me flip that. If we are growing at 8.2%,
I'm like a for and against.
Why are we feeding 81 crore people?
We are not growing at 8.2%.
No, 8.2. First half was 8.2 or whatever. No, total 7.4%. Whatever. We are fastest growing. We have the largest rural employment scheme, largest health scheme, largest food security program, largest Narega. So there is...
And the largest population.
No. Scale is... Both cannot be at the same time. Na? We take it as an advantage. Scale. So we are saying that this is why this is happening. And, so why I always put a stop to this vote thing is that none of the past few elections would have resulted in the results that came out if the doles had been removed. Okay, all this Ladli Bahan, Ladki Bahan, whatever, with just on cash transfer to women is 3 lakh crores. So I would, to use Punita's analogy, I would say this is a capital protection budget. is because the fiscal deficit and all that is covered. What is they have done? They had 4 lakh crores is the total rise in expenditure, out of which 1 lakh crore has gone to infrastructure, 2 lakh crores has gone to defense, and they have worked it around. What is the story that they are trying to tell is that we have created enablers in the economy. Now that might get lost in the minutiae and all. But we should not give this, Rajdeep, I mean, you said that much of the reforms is the states. They are not half tickets on the system, no? They are full tickets. And 15 of the states, the BJP is ruling.
When we look at these defense numbers in particular, because we are flashing those details on our television screens, the total Ministry of Defense allocation has gone up. This is 9.53% increase over 2024-25 and about 13.45% of the total union budget, which is the highest among all the ministries. But this is not just about modernization. Of course, as you said, it's pensions as well, but domestic procurement push is also there.
No, this is good idea because we have done a lot of the import substitution.
That's right.
But what we are all trying to wrestle with is when we started this morning, we said, okay, how do we address the cloud of uncertainty that the geopolitics has done? How do we address the rupee-dollar situation? And how do we address the investments? Now, you would have expected that the budget speech at some point would have a paragraph, 2 paragraphs, 1 line, 1 slogan to say this is what we are doing and then align the pieces. This is a budget that has landed between hope and hype.
See, two numbers.
That's an interesting one.
Two numbers
between hope and hype.
Yes. First number, the total increase in expenditure, total expenditure of the government of India is 7%. Yes. This year or last year, nominal. 7%.
Yeah.
Okay. So let's not get carried away by this. Second, as far as capital expenditure is concerned, it remains at 3.1% of GDP, revised estimates last year and budget estimates this year. There's no change. So, the big numbers, there is a certain status quo as far as the big numbers are concerned. On defense, your increased spending, fine. As I told you, after every conflict, there is increased spending. But the issue today that defense companies are waiting to hear from the government is what is your equipment purchase plan, procurement strategy. What will you buy over the next 5 years? Because I will not produce it if you will not give me a guarantee of buying, because you're the only customer. And a budget speech like this that increases defense expenditure by 13%, which is what you have calculated, I have not done the calculation, should at least have said that the government of India is going to have a 5-year plan or a 3-year plan for defense procurement, so that companies know that over the next 3 years, this is what they're going to be buying, and then they make the production plans, which is not in place. That has to be put in place.
One more point, but that I think is anyway announced separately. It doesn't have to be part of a budget speech as to what the government is going to buy.
Am I right? One of our takeaways is it vaccinates India against Trump tariffs. Does it really do that?
Yes, I think it does. It does.
How?
Because we are focusing on, look, we can't do anything about the tariffs right now. The negotiations are still we've hit a stalemate there. But right now, we can do is focus on what our domestic economy can be stimulated. And that's what she's done by allocating a lot of resources to lots of different initiatives domestically, and also bringing data centers to India and, allowing foreign companies to then work with domestic companies. So that's a good initiative. The thing that we aren't discussing is that, while the 7.2% GDP number, real GDP number is good, our nominal GDP and the company's earnings, which foreign investors have been seeing for years, they feel India's nominal GDP is not good and the earnings growth isn't good. Now, this budget isn't going to address that. It's not going to address, it's not a growth-oriented budget. It's a long-term, little by little, build the foundations across many, many different areas. So it won't really bring FIIs back in a big rush. And then we've been one of the worst performing markets this year to date, and now we've got this STT. So it isn't going to really, even though it's marginal, it's not what investors were expecting.
No, the dollar returns on this economy is poor. Because the rupee has tanked last year, and this doesn't look like it's recovering. So if you take the prism of the dollar returns, it will be different.
Rajdeep, on the point of defense acquisition, now we know that there is a defense acquisition council. What can a budget do, frankly? It is also a question of our decades-long manufacturing incapacity in defense that is only now being addressed. There is an incapacity in faster approvals because of the overhang of past decisions. Also, although that has changed, this government has devolved powers with regard to the level of acquisitions that can be done. The third bit is there is an essential dichotomy between what our armed forces want. They are dealing with very cunning, very devious adversaries on both fronts, and they want top-of-line equipment. Our own manufacturing capacity sometimes, and this is the most recent comment about the delays in delivery of our indigenous fighter jets. I mean, I frankly don't see that turning around in 1 year. I always recall what the late Manohar Parrikar tried to do by bringing in a platform-based strategy and 6 or 7 large manufacturing champions who would not do individual arms. And we reported on that story. They would do platforms. That never went through, Rajdeep.
Okay, Chairman of the 15th Finance Commission, that is Dr. N.K. Singh, is joining us live. Mr. Singh, thank you for speaking to us. Your first big takeaway of this budget.
Okay, N.K. Singh will join us shortly. Remember, the 16th Finance Commission report headed by Arvind Panagriya comes out later this month, and that will be looked at very closely, particularly in the context of states.
Already done today.
Already done today is what are the details out?
Yes. In fact,
can you tell us more?
So see, the 16th Finance Commission report, Rajdeep, continues with 41% allocation, devolution rather, for states as the previous 5 years. So what does that broadly mean? Number one, it does not cut back any state at the gross level. Number two, if you look at the choice that is being made at 41%, the Finance Commission and the government saying that we have accepted it. In fact, that was the one-line item that the Finance Minister spoke about before she began her speech. Yes, it clearly means that as far as the resource availability to states is concerned, that continues down a path that has been followed for years. So, Rajdeep, very quickly, I think we should look at this budget as a defense at the ramparts. They are not going out to capture new territory, but they are making sure that whatever is existing, not even a square inch is ceded.
Okay, N.K. Singh, as Maria just said, joins us. Someone who's tracked several budgets, was part of Manmohan Singh's team as one time and has also been part of Prime Minister Modi's economic think tank. Appreciate you joining us there.
Also part of Chidambaram's dream budget.
That's right. Yes. So he's crisscross. That's why I said from Manmohan Singh to Narendra Modi via Chidambaram is the way we'll put it. But Mr. N.K. Singh, your first reactions to this budget. There are those who believe that Nirmala Sitharaman has gone too much into micro-detailing and tinkering. There are others who are saying it's very focused and provides us some kind of a insulation in a Trump-driven world.
So I would say I have 3 comments, Rajdeep, and thank you for allowing me to share these views in this prestigious channel being anchored by you, which I have had the privilege of being part of much earlier for many, many years. I have 3 broad comments to make. First, I would say that the finance minister has been credible, she has been sagacious, and she has been responsible. Why? First and foremost, we all know that given the fact of great global uncertainties, given the fact that, as the economic survey has pointed out, there are currency issues facing every central banker, if she had not adhered to the path of fiscal consolidation, the overall macroeconomic framework would have seen rather serious adverse consequences. Notwithstanding expenditure pressures, I was listening to the debate on defense and in other areas, she has continued with a very high focus on infrastructure investment of now reaching over 11 lakh crores. She has continued with this in tandem with the fiscal consolidation roadmap. This year, not only will we will she get to 4.4, but next year the audacious one of 4.3. Debt has gone down this year, well on track to achieve the 50% debt to GDP by the terminal date of 2031. So in that sense, the overall is very, very responsible and very credible. My third important point is that yes, there has been, and I would say very legitimately so, the sectoral kinds of issues which must occupy the center space, because she's riding on the back of what is being called the Reform Express, which India has seen in 2025. That's why we have been able to not only withstand the kinds of global exogenous uncertainties and pressures, including from the United States, but in fact we are in a position, Rajdeep, I don't know if you have noticed that the economic survey has bumped up India's long-term trajectory of 6.5% in real terms to 7%. Of course, I don't want at this stage to go into the granularity of nominal
Mr. Singh,
versus
Maria has a question. Go ahead, Maria.
Mr. Singh,
real.
this is with regards to
Go ahead.
8,000 crore, which came in Times of India today, about 8,000 crore allocated for new urban cities, and that has not been utilized. So when we look at the budget allocation, that will also be the concern.
So I think that, Maria, you have pointed out the fact that, yes, as chairman of the 15th Finance Commission, we had given a recommendation which was accepted by government to allocate 8,000 crores for incubation of new cities, which has not been utilized with only 2 months remaining. But she has instead unveiled far deeper reforms on urban rejuvenation and really creating urban clusters which are very credible. And I think that whereas this could have been done in addition to that 8,000 crore, be that as it may, as we look forward, the renewed emphasis on rejuvenating and creating new urban clusters, not only urban clusters as a growth multiplier, but urban clusters in terms of its large contribution to GDP and, dare say, to employment.
You know, the challenge with urban clusters, urban governance, and we mentioned that this was one of the major challenges India faces going ahead. The question is whether those smart city, we've seen the smart city project among those projects which has had mixed results.
The smart city project was a smart idea and a dumb policy. For 10 years, they just did incremental stuff. Last year budget, they had 1 lakh crore for urban challenges. We don't know what's the fate of that idea because it's not been devolved. There is also 1 lakh crore for research and development, which finally they are now got it into a portal and the disbursal might happen. The question about urban governance is that you can't do it top down. It has to be done from the state. There has to be devolution. The 74th Amendment has been buried deep into the ground.
Federalism should not end in state capitals.
Okay, let me bring in Himanshu Baid, co-chair FICCI Medical Services and Devices Committee, Managing Director Poly Medicure, because one of the areas this budget did focus is medical tourism, pharma. The fact is that there has been a genuine attempt, particularly with medical tourism, to give it boosts with various benefits being provided. Your first reactions to that? Do you believe specific sectors will benefit more than necessarily the entire economy? These will be specific wagons that will move ahead.
Thank you, Rajdeep. I think, first time we have seen some detailing on the healthcare sector, especially for future economic growth. And especially this Biopharma Shakti mission for 10,000 crore allocation, expansion of NIPERS, stronger CDSCO, especially to accelerate innovation, approvals, global competitiveness. I think all these were called out. And relief on cancer drugs, then medical value tourism hubs. First time government has given focus on MVT, which is a very big sign because I think India has a great capacity to handle foreign patients. And the way our healthcare is today growing rapidly, I think we are pretty much up there in terms of delivery. So I think I'm for assistive devices. All that is pretty much called out, which was pretty much not there in any previous budgets. So I think very specifically called out positioning healthcare as a social and economic multiplier.
Okay.
In terms of reform, since you're talking about that particular sector, why do you say that there has been no efforts in the past for this sector?
I think it was, when we looked at CDSU, and I'll talk from medical devices perspective, pharma and medical devices were governed by just one single organization. I think a stronger CDSU means there's a deeper approach for approvals, innovation, global competitiveness, which was never there earlier. So I think there's a special focus on these areas.
Himanshu, I'm looking at NIMHANS, setting up of a NIMHANS 2 and upgrading National Mental Health Institute, establishing emergency and trauma care centers in district hospitals. That's how it is looking like in terms of larger benefits for this, healthcare sector. That doesn't seem to be there in the pointers that I've just read.
See, basically, if you see the last budget, there was a focus on oncology, onco care centers, 200 centers were announced and 700 more to be, over next 2-3 years. So I think it's a beginning of, where we see special focus in these areas. It will take few years for these things to come out and develop, but I think the focus is, pretty much there for advancement of technologies.
Okay, so there is a reaction now coming in from the Trinamool Congress. Abhishek Banerjee is speaking. Let's listen in.
दिखाया कि पिछले 4 साल में ग्रामीण सड़क में जहाँ पे 60% पैसा केंद्र सरकार का देना बनता है, वहाँ पे 10 पैसा दिया है. मैं राजनीति छोड़ दूंगा. स्टेट मदरली ट्रीटमेंट और एटीट्यूड. बंगाल में आप हार रहे हो, इसलिए बंगाल के लोगों को सबक सिखाना है. लोकतंत्र में सबक जनता सिखाता है. राजनेता या राजनीतिक कोई पर्सनालिटी नहीं सिखाता है. जनता के बल और जनबल के आगे किसी का नहीं टिकता है. कोई अगर सोचता है मेरे पास ताकत है, मैं जनता को सबक सिखाऊंगा, जनता फिर से सबक सिखाएगा और आने वाले चुनाव में जवाब करारा मिलेगा.
आने वाले चुनाव में जवाब करारा मिलेगा और कहीं ना कहीं जिस तरीके से स्टेप मदरली ट्रीटमेंट केंद्र सरकार वेस्ट बंगाल के साथ कर रही है, उसका जवाब आने वाले चुनाव में जरूर मिलेगा.
So politics as expected has started. Rajiv Mantri, expected lines, the reactions that are coming in. We expected opposition to talk about how there's nothing much.
Those states which have not really been highlighted will always speak out that they didn't get this and they didn't get that. This always happens, so nothing surprising.
But they can always grow coconut.
No, but that's also a very old world. This is like the old railways budgets that used to be there. Unless a train ran from a particular MP's constituency, it wasn't seen as a budget that was fulfilling the needs of a particular state. But
which is very parochial and small.
That's right. This is a union budget at the end of the day. And I think, as we are saying, there are certain focus areas that should be highlighted. Cancer drugs, medical tourism, education, logistics.
The tax break on data centers tells us how much importance the government is placing on data localization.
Sure. So, I mean, I think the government, as I said, you can look at this budget 2 ways, and this is the way it's going to be looked at. Those who believe that the government has given that much needed focus to key areas. There will be others who will say that maybe the government should have provided, as Dr. Baru keeps insisting, a clear intent of the direction in which they are taking the economy in terms of encouraging people to invest across the board and tell us, therefore, where the growth trajectory goes. So those are 2 clear views that are emerging. I don't know whether N.K. Singh is still with us because, Mr. Singh, much of this also, the heavy lifting will have to be now done by the states. The Finance Commission details have come out and we've seen about 19 states have revenue deficits at the moment, some of them whopping given the scale of the dole economy. Should that be a concern? We don't focus on state budgets enough, but states is where governments are simply don't even have money at times to pay salaries on time.
I totally agree with you, Rajdeep. In fact, you have perhaps taken the words from my mouth, that while we are excessively preoccupied with the fiscal and the debt trajectory of the central government, and we focus on it, we have scarcely any focus or a means to focus on state finances. Day before yesterday, you are absolutely right, Rajdeep. The report of the Reserve Bank on state finances came out, and that presents a grim picture where fiscal deficits have slipped, raises broader issues in what kind of a freebie economy and so on the states can do, but what can the central government do? Rajdeep, I want to ask you, this is a question I have posed myself several times. that under the 7th schedule of the Constitution, and since we will not in a position to alter the 7th schedule of the Constitution, as long as the state borrowing is upon the security of the consolidated fund of the state, and since the Indian Constitution doesn't provide any recourse for state-level bankruptcy, while keeping the finances of what the world looks at, you are right, is general government. It doesn't look at, an investor doesn't look at central or state government. In fact, Rajdeep, the ironic circumstance is today,
Mr. Singh, just hold on to your thoughts. Trinamool Congress Supremo and West Bengal Chief Minister is speaking.
Anti-ST, anti-OBC. Education funds, education subsidy declined, social security subsidy declined, fertilizer subsidy declines. It is totally garbage of lies and incompetence, Himalayan incompetence. Totally economy is derailed. Now, you will see within this time, the market falls sharply. Sensex down above over 1,100 points. Nifty 50 has been below 25,000. So you can realize there is a proverb in Bengali, chorer mayer boro gola, ইংরেজিতে বলে চোর কি মাই জোরসে বলে, mother of thieves are soundless, mother of thieves are soundless. Now, for Bengal, what they have given? Nothing. Talking big. Kichu daini.
You know, one of the challenges, of course, has been this notion of cooperative federalism. Mr. Modi himself has been a chief minister, and when he came to power, the planning commission was removed, Niti Aayog was brought in, and their belief was that this would, in a way, so was the hope, actually bring center and state closer together. As we see, even though the BJP dominates several, of course, of the states, the opposition chief ministers versus the Modi government has become a source of immense friction. And you can't, in the times in which we live, it's one thing dealing with Donald Trump outside. But when you're dealing with sort of internal tussles all the time, it makes life difficult. Opposition-ruled states insist that they are being discriminated against time and again.
Rajdeep, let's take that question to Mr. Singh.
Yes.
Mr. Singh, if you can hear us, sir, at 41%, which is the same as
the share to the states,
as you had recommended, are you okay with that? Was there scope to raise it further? Is this enough?
Let me put it this way to you, Rajdeep. Please go back in time and see the trajectory of this devolution. During the time of up to the time of Dr. Vijay Lakshman Kelkar, who headed the 13th Finance Commission, the devolution to the states was in the region of about 31%. This was itself an incremental increase over what Chakravarti Rangarajan had given in the 13th Finance Commission. Kelkar kept it in the region of about 30-31. Then the 14th Finance Commission under Dr. Vedugopal Reddy, for the first time, gave 42%. It was a very, very sharp escalation of 42%. And the explanation given by Dr. Reddy at that time was he expected that all these centrally sponsored schemes and central sector schemes would be very, very greatly rationalized. When it came to my commission, I made 42 into 41 because by then the state of Jammu and Kashmir had really become a union territory, and therefore it was more sensible to increase the grant component of the Home Ministry from which the state of J&K would have
I'm going to stop
got.
you again, sir. We just want to listen to the Minister Ashwini Vaishnav giving a government reaction. Sorry.
मैन्युफैक्चरिंग पे बहुत बड़ा फोकस दिया गया है, इलेक्ट्रॉनिक्स मैन्युफैक्चरिंग हो, सेमीकंडक्टर मैन्युफैक्चरिंग हो, और आईटी सर्विसेज के लिए बहुत एक सिग्निफिकेंट सिंप्लीफिकेशन किया गया है, सेफ हार्बर और फास्ट ट्रैक एपीए के प्रोविजंस लाके। आने वाले समय में डेटा सेंटर्स बहुत बड़ी एक ताकत बनेंगे देश की, जिससे कि दुनिया भर को नई सर्विसेज और भारत के लिए नए एम्प्लॉयमेंट और एंटरप्रेन्योरशिप के नए रास्ते खुलेंगे। तो डेटा सेंटर्स पे जो टैक्स हॉलिडे दिया इसके लिए मैं माननीय प्रधानमंत्री जी को और माननीय वित्त मंत्री जी को धन्यवाद देना चाहूँगा। साथ ही साथ ऑरेंज इकोनॉमी जो हमारी क्रिएटर्स इकोनॉमी है, इसमें 20 लाख एम्प्लॉयमेंट नए बनाने के लिए क्रिएटर्स इकोनॉमी में IICT मुंबई के साथ मिलकर 15,000 स्कूल और 500 कॉलेजेस में क्रिएटर्स लैब बनाने के लिए बजट में प्रोविजन किया गया है। और साथ ही साथ रेलवे के लिए 7 नए हाई स्पीड कॉरिडोर्स, चेन्नई से बेंगलुरु, चेन्नई से हैदराबाद, बेंगलुरु से हैदराबाद, मुंबई से पुणे, पुणे से हैदराबाद, दिल्ली से वाराणसी और वाराणसी से सिलीगुड़ी। एक तरीके से साउथ इंडिया में सदर्न ट्रायंगल बनेगा चेन्नई, बेंगलुरु, हैदराबाद का हाई स्पीड रेलवे का, बुलेट ट्रेन का। वैसे ही दिल्ली, वाराणसी, सिलीगुड़ी का एक नया हाई स्पीड कॉरिडोर बनेगा और साउथ वेस्ट को साउथ से जोड़ने वाला मुंबई से पुणे, पुणे से हैदराबाद का एक बहुत बड़ा मेजर कॉरिडोर बनेगा। साथ ही साथ आज बजट में एक नए डेडिकेटेड फ्रेट कॉरिडोर जो कि बंगाल में दांकुनी, वहाँ से गुजरात में सूरत, इसको जोड़ने वाला, ईस्ट को वेस्ट के साथ जोड़ने वाला नया DFC भी सैंक्शन हुआ है। मैं इस बजट के लिए जो कि युवा शक्ति से प्रेरित है, जो कि विकसित भारत की एक मजबूत नींव बनाता है, जो कि समाज के हर वर्ग के लिए और देश के हर क्षेत्र के लिए विकास का एक नया माध्यम बना है, इसके लिए मैं माननीय प्रधानमंत्री जी, माननीय वित्त मंत्री जी का अभिनंदन करता हूँ।
बजट में कितने लोकेशन किया गया?
Statement from Ashwini Vaishnav there, the Information and Broadcasting and IT and Railways Minister of the country. Just to take that point forward that we were discussing about state finances, about the need for states also to pull their weight. One of the concerns has been this huge South-North divide, or the South-West versus the North and East divide. And that is something that perhaps every government should be conscious of, because it can become a potential friction point in the future. There's not much that you can do in a budget beyond the point. But is there a need, therefore, perhaps for the Prime Minister to take the lead, get all these chief ministers together and find a way forward? Rather than you said a top-down approach doesn't work, for example, for urban governance.
No, but chief ministers who complain about these kind of inequalities or the problem with the distribution should also look at their own states. In Bihar,
no, that's fair enough.
Shevhar has a per capita income of 19,000. Patna has 1 lakh, and then national, and both of them are below the national average. The question really is about all these states. What have they done to promote their investment? It's not enough to have these summits and all. Why not?
Can I give you numbers? West Bengal only spent 24.4% of its budgeted, its own state budget's capex during the year. Chhattisgarh 27%, Tripura 22%, Meghalaya 30%. Do you know which was the best state? 117% of budget? Telangana.
See, let me make two
smaller
points,
state also. Perhaps helps. Yes, go ahead.
One is that the National Development Council, as an institution, was wound up in 2014, along with the Planning Commission. There is no institutional framework today for the center and the states to work together. Nobody writes about it, nobody comments about it. But the fact is that this federal structure which was created has been weakened. But secondly, and the more important thing, I think chapter 16 of the Economic Survey, which is a terrific chapter, all compliments to Anant Nageshwaran. The second part of chapter 16 is all about state capacity. By state, it's not state governments, but the center and the state. Today in India, the ability of governments to spend has gone down. You mentioned unspent budget just now.
8,000 crore.
He's talking about some states not spending. State capacity to spend has gone down.
Yes.
And this is a serious challenge which the government itself is recognizing. In fact, the Economic Survey talks about a major reform of government as the real challenge facing the country. It's not just getting government out of business, but getting the government to function.
Why do you think it's not happening, Dr. Bhatt?
I think there's a weakening of the talent pool within government, the weakening of political leadership within governments, and short-termism has taken over.
No, short-termism also, that what they announced. For instance, Jaitley's 2017 budget spoke about creation of a cadre for panchayats and for municipalities.
That's right.
They never did anything about it.
Okay, let's go to Deepak
the urban
Shetty,
government
Chairman,
structure.
CII Council on Manufacturing Excellence, CEO and Managing Director, JCB India Limited. Thanks very much for joining us. Also joining us with Mr. Shetty is Sitharaman, Managing Director of Sanmar Engineering. Gentlemen, to both of you, your first reactions. First you, Mr. Shetty, will there be, I keep asking everyone from CII, will we see the animal spirits of the economy revive? Private investment is at a lower level than it was in 2019.
Yeah, absolutely. And I just want to give you two reasons why. First of all, last few years we have seen the continuous focus on infrastructure development and the growth which has taken place thanks to it in the industry. I represent the construction equipment industry, which has improved by around 20% year on year last few years. One of the biggest challenge we were facing was in spite of being the third largest market in the world, we are importing a lot of components, a lot of machines from outside the country. We have been requesting the Honorable Finance Minister last few years, and we are very pleased and we really want to thank her for announcing the PLI scheme for production of critical components for the construction equipment industry. And this initiatives like this are really going to bring the animal spirits, as you say, in the private sector investment. I'll just give an example. Thanks to this scheme supported by the EU FTA, there'll be more and more European companies which will be encouraged to invest in India. And this will not only help in increasing the exports from India, but also bring down the cost of construction equipment. I also want to mention that the whole emphasis which has been given on the MSME sector, particularly from the manufacturing side, we have seen globally the whole development in the manufacturing sector has taken place not only by the investment by the big companies, but also by the smaller companies. Case in point is the whole Mittelstand that we have seen in Germany. I feel that with the recent announcements or the announcements which have been made and across the sector is going to help create a huge ecosystem from the MSME side, from the sustainable manufacturing side, and India now can really be the X country plus one option to the global industry. So very, very heartening from that particular point of view.
Yes, Mr. Shetty, but manufacturing sector has been a matter of concern for years now. Do you think the series of announcements which have come in, including deferred duty payment window to trusted manufacturers and also the customs, duty, exemption from basic custom duty on specified parts of certain, aircraft manufacturing, will this actually ensure investment in that sector and boost manufacturing overall?
No, I'm absolutely confident this will. And as somebody, we JCB exports from India to almost 135 countries around the world. The challenges we were facing, even in a small case, like for example, availability of containers, something very basic, we have been seeing challenge. We have been seeing challenge how whenever we move a container, say from Faridabad or from our Jaipur facility to the JNPT port in Mumbai and the dedicated freight corridors, all of them are going to support this focus on easy to do business with from the export point of view, from the manufacturing point of view. There are a lot of SEZs which are
Sorry to interrupt, sir.
Across the country.
I'm just getting in Sitharaman. I want quick comments, sir. Your reactions to the budget. You're from Sanmar Engineering. Do you see that at least the budget has laid a vision for the future? It may not be a budget of today, but it's looking at a 10, 20-year horizon. That's its strength. Some would say that's its weakness as well.
Absolutely right. The budget is focused on the medium and long term. It's very pragmatic, growth-oriented and reform-oriented. From a Sanmar perspective, where in chemicals and general engineering, chemicals has been announced as one of the strategic sectors with specific.
What is the reform, sir? Sorry to interrupt. When you say it's reform-oriented, let's be specific. What's that specific reform you've seen in this budget that encourages you?
A lot of, the process-oriented reforms. We were really not looking for big-ticket reforms, but reforms towards, ease of doing business. Whether it's, for example, electronic sealing, like Mr. Shetty mentioned, focus on advanced rulings to be binding on customs in 3 to 5 years. The focus, there's an emphasis on predictability for doing business and certainty. So a lot of these initiatives are there, it's interspersed in various announcements through the course of the budget speech, but it's all there.
Okay, so
Go ahead, Maria.
Much of the process reforms that is being spoken about is probably part of the GABA report, the GABA committee report. What actually we are looking forward to is details from the Somnathan-led Center State Committee report on what can be done. So we constantly come to this, at any discussion ends at what are the states doing. And there is a political aspect to this that BJP rules in 15 of those states, and even there things are not the best in terms of, like just now Siddharth read out who's using money better. I mean, turns out Telangana, which is Congress ruled state. So there is this aspect that has to be brought in. And say if the central government has an urbanization challenges, grand challenge fund of 1 lakh crore, there seems to be no impulse in any of the states to say, where is the money, how can we do it, whatever is doing. None of the cities, I haven't heard any city. And so there is like a distance between, and we spoke about the end of the National Development Council. Those kind of meetings don't happen. The Niti Aayog, ifs and buts, I mean, there is a sporadic effort to sort of come together.
but GST Council, when you look at it, that's where centre and states sit together.
No, but that's only pure revenue. What we are talking about is, what do you do with agriculture? What do you do?
In sector-wise.
So, I know there are so many new farmer producer corporations that have been created. So many cooperatives have been created. What is the correlation between the policy and the infra, that is the economic infra that is being created?
But in this budget, she's announced a lot of measures to do development in the states, in the tier 2 and tier 3 cities. Are you saying that those also won't happen because the government structure isn't there?
My worry is that the capacity of the states to execute a grand idea from the center is very limited. And India's government, and Dr. Baru and we have discussed this before, in India, the governments do, too many people are doing things that are not needed, and too few people are doing things that are needed. This is the general...
but if all these measures that she's announced for tier 2 and 3
In
cities
fact, Prime Minister Modi
is done,
will be giving his remarks on the budget in some time. So that soundbite
that will be
coming in as well, because thereafter he heads for Ravidas Jayanti.
Okay, I just, we have some breaking news from Siddharth.
I just want to quickly point out, and maybe Dr. Baru and Shankar both will come in. The 15th Finance Commission, in contrast to the previous one, the 16th one, has increased the weight for population from 15% to 17.5%. It has also parallelly reduced the demographic performance aspect from 12.5 to 10%. So Rajdeep, there is more minutiae, but this is going to, in some ways, lead to a debate, because the more people you have, the higher the devolution percentage will be. Shankar, you want to...
So this is the heart of the North-South divide. Right? This is the heart of what Sitharaman and others have been saying.
Reactions as the fine print sinks in.
Siddharth, you use the wrong word. Not debate. This will lead to adjournments.
Okay.
You said, repeat that on demography, 12.5.
So, in terms of the key criteria, population criteria has gone up to 17.5% versus 15. Demographics has gone down from 12.5 to 10. Area has gone down from 15 to 10%.
So that is the adjustment.
Forest ecology stays at 10%. Per capita income, distance and GSDP distance, a technical attribute, 45 down to 42.5. GDP contribution has been added as a new one at 10%. So effectively what this means is...
balance out.
Balance.
They're trying to balance it out. We'll wait and see to get reactions from chief ministers, but we need to take a break.
No, the last one actually is been created to help the southern states.
That's right.
Yes.
Because
they are bigger.
Whether that will be enough to satisfy them, we'll wait and see. We need to take a break. We've been on live continuously since 9 in the morning. And it's been a long day. And there is still much more to nibble on, particularly in terms of the details of the budget. You're watching our special coverage. We'll be back in a moment.
Unleash your inner roar. You know you want more. The new Elevate ADV Bold Move.
Introducing Motorola's signature.
Make a bold move. Unleash your inner roar. You know you want more. The new Elevate ADV Bold Move. Make a bold move. Unleash your inner roar. You know you want more. The new Elevate ADV Bold.
आज का बजट ऐतिहासिक है। इसमें देश की नारी शक्ति का सशक्त प्रतिबिंब झलकता है। महिला वित्त मंत्री के रूप में निर्मला जी ने लगातार 9वीं बार देश का बजट प्रस्तुत करके नया रिकॉर्ड बनाया है। ये बजट अपार अवसरों का राजमार्ग है। ये बजट वर्तमान के सपनों को साकार करता है और भारत के उज्जवल भविष्य की नींव को सशक्त करता है। ये बजट 2047 के विकसित भारत की हमारी ऊंची उड़ान का मजबूत आधार है। साथियों, आज भारत जिस रिफॉर्म एक्सप्रेस पर सवार है, इस बजट से उसे नई ऊर्जा, नई गति मिलेगी। जो पाथ ब्रेकिंग रिफॉर्म्स किए गए हैं, वो एस्पिरेशन से भरे हुए भारत के साहसिक, टैलेंटेड युवाओं को उड़ने के लिए खुला आसमान देते हैं। ये बजट ट्रस्ट बेस्ड गवर्नेंस और ह्यूमन सेंट्रिक अर्थरचना के विजन को साकार करता है। एक ऐसा यूनिक बजट है जिसमें फिस्कल डेफिसिट कम करने, इन्फ्लेशन कंट्रोल करने पर फोकस है और इसके साथ ही बजट में हाई कैपेक्स और हाई ग्रोथ का भी समन्वय है। साथियों, ये बजट भारत की वैश्विक भूमिका को नए सिरे से सशक्त करता है। भारत के 140 करोड़ नागरिक फास्टेस्ट ग्रोइंग इकोनॉमी बनकर ही संतुष्ट नहीं है। हम जल्द से जल्द दुनिया की तीसरी सबसे बड़ी अर्थव्यवस्था बनना चाहते हैं। ये करोड़ों देशवासियों का संकल्प है। दुनिया के एक ट्रस्टेड डेमोक्रेटिक पार्टनर और ट्रस्टेड क्वालिटी सप्लायर के रूप में भारत की भूमिका लगातार बढ़ रही है। हाल में जो बड़ी बड़ी ट्रेड डील्स भारत ने की है, मदर ऑफ ऑल डील्स, उसका मैक्सिमम बेनिफिट भारत के युवाओं को मिले, भारत के लघु और मध्यम उद्योग वालों को मिले, इस दिशा में बजट में बड़े बड़े कदम उठाए गए हैं। साथियों, इस बजट में मेक इन इंडिया और आत्मनिर्भर भारत अभियान को नई रफ्तार के लिए महत्वाकांक्षी रोड मैप प्रस्तुत किया गया है। इस बजट में नई उभरती इंडस्ट्रीज यानी सनराइज सेक्टर्स को जिस मजबूती के साथ समर्थन दिया गया है वह अभूतपूर्व है। बायोफार्मा शक्ति मिशन, सेमीकंडक्टर मिशन 2.0, इलेक्ट्रॉनिक कंपोनेंट मैन्युफैक्चरिंग स्कीम, रेयर अर्थ कॉरिडोर का निर्माण, क्रिटिकल मिनरल्स पर बल, टेक्सटाइल सेक्टर में नई स्कीम, हाईटेक टूल मैन्युफैक्चरिंग को बढ़ावा, चैंपियन एमएसएमई तैयार करना, ये फ्यूचरिस्टिक है, देश की वर्तमान और भविष्य की आवश्यकताओं का ध्यान रखती है। एमएसएमईज को, हमारे लघु और कुटीर उद्योगों को जो समर्थन इस बजट में मिला है वह उन्हें लोकल से ग्लोबल बनने की नई ताकत देगा। साथियों, बजट में इंफ्रास्ट्रक्चर को मजबूत करने के लिए कई बड़े कदम उठाए गए हैं। डेडिकेटेड फ्रेट कॉरिडोर, देश भर में वाटरवेज का विस्तार, हाई स्पीड रेल कॉरिडोर, टियर 2 और टियर 3 शहरों के विकास पर विशेष ध्यान और शहरों को मजबूत आर्थिक आधार देने के लिए म्युनिसिपल बॉन्ड्स को बढ़ावा। ये सारे कदम विकसित भारत की यात्रा की गति को और तेज करेंगे। साथियों, किसी भी देश की सबसे बड़ी पूंजी उसके नागरिक होते हैं। बीते वर्षों में हमारी सरकार ने देश के नागरिकों के सामर्थ्य को बढ़ाने पर अभूतपूर्व निवेश किया है। हमारा प्रयास स्किल, स्केल और सस्टेनेबिलिटी को निरंतर बल देने का रहा है। जैसा कि आज पार्लियामेंट में निर्मला जी ने कहा है, यह युवा शक्ति बजट है। उसमें युवा की सोच भी है, युवा के सपने भी हैं, युवा का संकल्प भी है और साथ साथ युवा की गति भी है। बजट में जो प्रावधान किए गए हैं उससे अलग अलग सेक्टर्स में लीडर्स, इनोवेटर्स और क्रिएटर्स तैयार होंगे। मेडिकल हब्स के निर्माण से, एलाइड हेल्थ प्रोफेशनल्स के माध्यम से, ऑरेंज इकोनॉमी यानी ऑडियो विजुअल गेमिंग को बढ़ावा देकर, पर्यटन को प्रोत्साहन देकर और खेलो इंडिया मिशन के माध्यम से युवाओं के लिए नए अवसरों के द्वार खुलेंगे। भारत को दुनिया का डेटा सेंटर हब बनाने के लिए टैक्स में बड़ी छूट की घोषणा भी की गई है। मैं भारत के युवाओं को विशेष तौर पर इस बजट की बहुत बहुत बधाई देता हूं, क्योंकि इससे एम्प्लॉयमेंट जनरेशन को बड़ा बूस्ट मिलेगा। मुझे बहुत खुशी है कि इस बजट में टूरिज्म और विशेषकर नॉर्थ ईस्ट में टूरिज्म को बढ़ावा देने के लिए भी ठोस कदम उठाए गए हैं। भारत के अलग अलग राज्यों को ताकतवर बनाकर संतुलित विकास की नींव भी इस बजट में मजबूत की गई है। साथियों, हमारे देश में 10 करोड़ से ज्यादा महिलाएं सेल्फ हेल्प ग्रुप से जुड़ी हैं और बड़ा सफल अभियान रहा है। महिलाओं द्वारा निर्मित, महिलाओं द्वारा संचालित सेल्फ हेल्प ग्रुप्स का आधुनिक इकोसिस्टम बने, बजट में इसे प्राथमिकता दी गई है। कोशिश यही है कि हर घर लक्ष्मी जी पधारे। हर जिले में छात्राओं के लिए नए हॉस्टल बनाने का अभियान भी शिक्षा को सुलभ बनाएगा। साथियों, भारत की कृषि, डेयरी सेक्टर, फिशरीज, इन्हें हमारी सरकार ने हमेशा सर्वोच्च प्राथमिकता दी है। इस बजट में भी नारियल, काजू, कोको और चंदन की पैदावार से जुड़े किसानों के लिए अनेक अहम कदम उठाए गए हैं। भारत विस्तार एआई, इस टूल से किसानों को उनकी भाषा में जानकारी मिलने से उन्हें बहुत मदद मिलेगी। फिशरीज और पशुपालन में उद्यमिता, उसको बढ़ावा देने से गांव में ही रोजगार और स्वरोजगार के और ज्यादा अवसर बनेंगे। साथियों, ये बजट एम्बिशियस भी है और ये बजट देश की एस्पिरेशन को भी एड्रेस करता है। मैं एक बार फिर निर्मला जी और उनकी पूरी टीम को इस फ्यूचरिस्टिक बजट के लिए, संवेदनशील बजट के लिए, गांव, गरीब, किसान का कल्याण करने वाले बजट के लिए बहुत बहुत बधाई देता हूं। बहुत बहुत धन्यवाद।
Okay, there you have Prime Minister Narendra Modi saying that this is a budget which will take India into the future. The idea of a Atmanirbhar Bharat, a Viksit Bharat, underlines the budget's intent, and the Prime Minister expressing confidence that the budget in a way will boost the orange economy, as he calls it, and take India forward. So the Prime Minister making his intervention on the union budget, saying that it will be employment oriented, it will enhance specific sectors, for example, tourism, and that this budget therefore moves in the right direction. Coconut, sandalwood farmers, among others, to benefit. My colleague Abha Bakaya is joining us now. Abha, you track the markets very closely. I'm looking at the markets numbers now, 800 points down.
the markets clearly have been completely spooked, presumably, by this higher security transaction tax. Is that alone, or is there something more to it?
It's both the STT and the buyback change that's come in, with now buyback being seen as capital gains, which is not entirely negative, but the markets are primarily reacting to the STT more than the buyback, but definitely both of these came as a bit of a shock. We've recovered, Rajdeep, almost 1,000 points as the markets digest this news, but still, as you can see on your screens, trending weak, so they're not too happy. And remember, today is a Sunday, so we'll actually see the true impact of the budget play out tomorrow when it comes to money markets, when it comes to an FI reaction. I think all of that will really get processed and seen in trade tomorrow as well.
Was it just the STT, or was there something more? Was there something they were expecting that didn't happen, or is it the fact that you have a higher security transaction tax alone that has led to such a big fall in the markets?
So I think it's primarily the STT, even though there will always be, further measures that they would have liked to see, further ways to enhance FI participation, even though a lot has been already done, or signaled in this particular budget. But I think primarily the STT this time around on the
I'm curious about the buyback thing, the conversion of buyback into a taxable proposition. Punita, is there any history, Abha, you also, is there a history? Why would you sort of enter? This is really SEBI's domain. And, you introduce a tax provision saying that if you buy back, that will be treated as a capital gains. Now, I am wondering whether there has been any misuse of the provision of buyback by any company.
Punita, I'll let you come in, but I think there's also a lot of concern for some of the companies where you have non-promoter holdings. And I think this makes it a lot clearer for them, where it now gets treated as a capital gains tax as opposed to everything else. So I think it helps in that case particularly. But Punita, I'd love to get your thoughts.
No, I'm just going to compare this to what is happening in the US, as President Trump has also changed the taxes on buybacks, because his goal was that companies shouldn't buy back, they should reinvest into the sector and use the money for innovation.
Yeah, for defense companies he did that.
Yeah, and so I think what is happening here is that most of the buybacks are happening largely by IT services companies. That's the biggest chunk of our buybacks. Does this mean directionally that our IT companies, by putting this tax, you maybe are disincentivizing them for buybacks and wanting them to reinvest? And maybe they should, because right now Indian IT companies globally are being seen as laggards. And have lost the plot on innovation, is what FII view.
Or the IPOs that happened last year, where a lot of the promoting entities got exits. 63 or 64% of the IPOs were all about but those just check encashment stories. Whether this blocks them, I'm not very convinced about the logic of this.
Rajiv, you want to tell us what your thoughts are? Why is it that the markets have got so spooked?
So it has got to do with the tax on the futures and options, the extra STT.
That's primarily the reason.
I would attribute it to that, yes.
Okay. I'm joined at this moment by Vivek Singh, economist, former banker and columnist. Also, Shrivar Kheruka is co-chairman, FICCI Manufacturing Committee and Managing Director, Borosil. Appreciate both of you joining us. Vivek, your first reactions to this budget. You heard the Prime Minister just now saying it is employment-oriented, it will kickstart jobs in specific sectors, mentioned tourism. Do you believe this sectoral approach works in a budget, or should there have been perhaps something more dramatic that would really give the kind of impetus to the economy across the board?
I think it's a fairly balanced and forward-looking budget. And given the kind of overhauling we already had in the income tax slabs last year, and then the GST regime, I really thought there was very little appetite for further tax cuts or for populism. And the budget this time is largely predictable. It stays true to the themes of Viksit Bharat and Atmanirbhar Bharat, while taking concrete steps on employment. I'll also describe it as an institution building budget in many ways, because it talks about a new National Institute of Design. It talks about a new National Institute of Mental Health and Neurological Sciences. Also talks about an AIIMS-like institution in the Ayurveda sector. And then talks about specific content creator-led interventions in 15,000 schools all over the country. So many interesting steps but largely a balanced budget and stays true to the glide path set by the finance minister as far as fiscal deficit is concerned.
Let's come back to manufacturing and the kind of capex that we've looked at there. And Shrivar Kiruka also joining us. Shrivar, let me get your perspective on how much of a boost this is going to be when it comes to furthering the capacity that we have for efficient manufacturing, for our export hubs, and so on and so forth. Clearly, an emphasis that has been placed on this and much required.
Yeah, well, I think the government itself has a target that by 2047 for Viksit Bharat, we need to have 25% of GDP coming from manufacturing, which actually, if you look at the numbers, it means that manufacturing has to expand 16 times in the next 22 years in order for the government to achieve its own target. That's a very high growth rate. That's the expectation. And I guess the budget is trying to move in that direction, whether it's the emphasis on container manufacturing or biopharma or the mining and the rare earths corridors that they've established. Even the electronics manufacturing 20,000 crore boost is in addition to what was announced a few years ago. I think all of these are really going to promote manufacturing in India. I mean, speaking from my own experience, we have seen many products that earlier were being imported from China or from the rest of the world actually being made in India today. Mobile phones also one example. So I think it's a step in the in the right direction.
Okay. Mr. Mukundan.
We are also joined by R. Mukundan, President Designate CII, Managing Director and CEO Tata Chemicals. Mr. Mukundan, your first reactions to it is it's a question I will continue to ask all those from industry. What will it take to get private investment back on track? Yes, there have been some green shoots in the last 6 months, but we are still below 2019 figures.
Yeah, I think fundamentally, the whole point which you highlighted that this budget actually, what I said in the morning, it builds forward. It's not, we didn't expect a big bang. We wanted a build forward budget and focus mostly on exports. I think this does the right thing with 3 priorities. One priority is on building scale. The second one is very unique. How do we sort of rejuvenate some of the industrial parks? How do you bring technology into them so that the manufacturing in the legacy sites actually has greater competitiveness? And thirdly, a focus on MSME. All these 3 put together will continue to boost investments and make sure that we are very competitive. In terms of scaling manufacturing, of course, much more targeted, which is exactly what we were saying, whether it's semiconductor, critical minerals, rare earth, and chemical parks. I think that a slew of issues there. On MSME, I think clearly the equity investment support, the credit support, linking gems with threads are all the right steps, both from demand side as well as giving them support in terms of equity as well as credit for working capital. The other area which this budget does.
Yeah, go ahead.
Whatever, yes, sir. Sorry, Mr. Mukundan, please complete.
Yeah, the other area which this budget does do is that wherever the targeted indirect tax benefit has been given, it's been given for green investments. You talk about sodium antimonate for solar glass. You talk about the aggregates needed for lithium cell, nuclear power plant. Then it talks about biogas, CNG. So and also, for example, for the hard to abate sectors, whether it be power plant, whether it be steel, chemical sectors, the whole issue of carbon capture. I think this budget actually picks a very big theme, which is theme of green and greening the economy.
So every year in the budget, there's always one industry that complains. And I think this time she's really tried to make it holistic, although I'm sure there's still some that have felt neglected. And the tourism industry is one that's been waiting consistently for a few years in a row. They've always felt neglected. It may not have been possibly covering all aspects of what the hospitality and tourism industry have asked from the finance minister till now, but yet a major fillip, and that's one segment that's definitely going to be buzzing. We've also got the communications minister, Jyotiraditya Scindia, sharing his reaction to the budget. Let's listen into that.
इस वक्त हमारे साथ बातचीत करने के लिए हैं केंद्रीय मंत्री ज्योतिरादित्य सिंधिया। सर, आप बजट पेश जब हो रहा था उस वक्त आप अंदर मौजूद थे। क्या सबसे बेस्ट चीज आपको इस बजट की लगी? निर्मला सीतारमण जी का 9th स्ट्रेट बजट था ये।
देखिए, स्पष्ट रूप से यह बजट भारत की पिछले 12 साल की सफर को मजबूती से संगठित करता है और विकसित भारत 2047 का भविष्य का निर्माण स्थापित करता है। और जहां एक मजबूती दी गई है हमारे अधोसंरचना के लिए, हमारे कैपेक्स के लिए, जहां ग्रोथ 7.5% तक पहुंच चुका है, महंगाई पर पूरी तरह से कंट्रोल 1.7% पिछले 9 महीने में, जो एक भारत का रिकॉर्ड रहा है। और वहीं फिस्कल डेफिसिट भी पूर्ण रूप से कंट्रोल में है। वहीं इंफ्रास्ट्रक्चर कैपेक्स में जो 2 लाख करोड़ होता था 2014-15 में, आज बढ़कर 11 लाख करोड़ हो गया है और अगले साल 12 लाख करोड़ तक हम लोग ले जाएंगे। इसी के साथ जो 3 कर्तव्य हैं, एक इकोनॉमिक ग्रोथ को मेंटेन करना, दूसरा सभी की आशाएं और अभिलाषाओं को पूर्ण रूप से संकलित करना, और तीसरा सबका साथ और सबका विकास, स्वास्थ्य के क्षेत्र में, शिक्षा के क्षेत्र में, और उसी के साथ जो मैंने आपको कहा भविष्य का निर्माण मतलब ऑरेंज इकोनॉमी, हमारे सेमीकंडक्टर्स, हमारा ऑडियो विजुअल, गेमिंग सेक्टर, हमारा आर्टिफिशियल इंटेलिजेंस सेक्टर, हमारा पर्यटन का सेक्टर जिससे रोजगार भी उत्पन्न हो पाते हैं, और हमारा शहरीकरण, क्योंकि भारत तेजी से शहरीकरण की तरफ भी जा रहा है। तो इन सब चीजों को रेखांकित करके एक बहुत ही मजबूत बजट वित्त मंत्री जी ने पेश किया है, और तहे दिल से मैं उनको धन्यवाद देना चाहता हूं, क्योंकि टेलीकॉम सेक्टर में बजट में बहुत बढ़ोतरी हुई है और डोनर सेक्टर में भी बढ़ोतरी दी गई है। उन्होंने उत्तर पूर्वी क्षेत्र को रेखांकित किया है, जहां शहरीकरण में 4000 ई बसेस दी जा रही हैं, जहां 5 बुद्धिस्ट सर्किट्स दी जा रही हैं, जहां स्वास्थ्य के क्षेत्र में, शिक्षा के क्षेत्र में निवेश किया जा रहा है, इनलैंड लॉजिस्टिक्स का पूर्ण नक्शा बनाया जा रहा है, ताकि इन 8 राज्यों को, जो प्रधानमंत्री जी कहते हैं देश की अष्टलक्ष्मी है, भारत का ग्रोथ इंजन बना।
कौन सी बात आपको लगती है जो बजट के अंदर है जो भारत को विकसित भारत बनने में मदद करेगी?
भारत उस रास्ते पर निकल चुका है प्रधानमंत्री जी के नेतृत्व में। अगर आप देखें पिछले 12 वर्षों में जो विश्व की 10वीं सबसे बड़ी अर्थव्यवस्था थी, आज 4थी बड़ी अर्थव्यवस्था बन चुकी है। अगले साल तक 3री सबसे बड़ी अर्थव्यवस्था बन जाएगी। और प्रधानमंत्री जी और वित्त मंत्री जी भारत को भविष्य के लिए भी पोजीशन कर रहे हैं। जो भविष्य के क्षेत्र होंगे उनमें नेतृत्व भारत को करना होगा, चाहे वो एआई हो, चाहे वो सेमीकंडक्टर्स हो, चाहे वो ऑरेंज इकोनॉमी हो, चाहे वो पर्यटन हो। पूरे विश्व को भारत के प्रति हमको आकर्षित करना है।
एक आखिरी प्रश्न मैं लूंगा, आप इसको भविष्य का बजट बता रहे हैं, आप इसको विकसित भारत का बजट बता रहे हैं, लेकिन कांग्रेस पार्टी विपक्ष के कई नेता वो कह रहे हैं कि इसमें कुछ भी नहीं है, 0% सन्नाटा है, कुछ भी नहीं किया।
जो कांग्रेस पार्टी भारत को डेड इकोनॉमी कहती है जी, भारत पर लांछन लाने के लिए कोई अवसर छोड़ती नहीं। उस पार्टी के बारे में हम क्या चर्चा करें जिस पार्टी को देश की जनता ने ही त्याग कर दिया है। बहुत बहुत धन्यवाद
जी, बहुत बहुत धन्यवाद। इस बात बोलते हुए ज्योतिरादित्य सिंधिया जो केंद्रीय मंत्रियों ने कहा कि ये बजट विकसित भारत का बजट है, भविष्य का बजट है, और इससे आगे आने वाले समय में इकोनॉमी को भी मदद मिलेगी। मेरे सहयोगी अंकित सिंह के साथ मैं पीयूष मिश्रा, दिल्ली, आज तक।
Interesting, the jibe that Jyotiraditya Scindia had presumably on Rahul Gandhi, who remember had echoed what an official in the US Trump administration, Peter Navarro, had said about a dead economy, and saying that targeting the Congress party there. It's interesting that you've got now more and more of the guests speaking about individual sectors.
Yes.
And what has been done for specific sectors, Shankar. So, as we said at the outset, that's the direction. You were the one, Shankar, who made the contentious comment that this is a Pranab Mukherjee style budget. I mean, you said this reminded you of Pranab Mukherjee.
Yeah, the minutiae that was read in part B reminded me of a Pranab Mukherjee budget. But I said that this is, I still think that this is a fill in the blanks budget. So it has gone and filled in the gaps in various sectors, in the processes of reforms across the sectors. And then I think the Prime Minister, for instance, did a fantastic job in explaining the budget in his first sentence, where he said, this is a highway for growth budget. And then this is the kind of articulation that was needed in the budget.
Okay, but just to give us, kind of reality check, PM internship scheme budget estimate last year was 10,831 crores. Revised estimate is just 526 crores. Allocation this year is 4,788 crores. You see, the details are useful, but there are other details also. You announce schemes, and then when those schemes don't really take off, that's when let me bring in Shashwat Goenka, Vice Chairman, RP Sanjeev Goenka Group. He's also President of CI. Appreciate.
Dr. Vikramjit Sani is joining us, Rajya Sabha MP and member Parliamentary Standing Committee, Ministry of Commerce. But first, Shashwat, to you, your first reactions to this. Again, that same question. Will this really trigger any kind of enthusiasm among investors? The markets have given it a thumbs down. But will investors, particularly in certain core sectors, feel a little bit more enthusiastic?
Old when I see these kids.
Hi, Rajdeep. So when I look at today's budget was centered around fiscal prudence. And I think the Honorable Finance Minister did a fantastic job of laying out what are the growth parameters for our economy to continue to grow at the growth numbers that we have been growing at over the last couple of quarters. So whether you look at the conversations around manufacturing, the conversation around social infrastructure or overall public infrastructure, whether you look at whether it was on energy security, I think each of these goes a long way in propelling India forward much faster. And when that happens, investment is going to happen. And when investment is going to happen, investors are going to be happy. I don't know if that answers it, but in a nutshell.
All right. No, it definitely indicates how the industry is looking at this. And I think the fact that you're positive on the investments coming in, that's a huge sign because...
But let me be cynical. The industry always gives 11 on 10 on budget day and doesn't put its money where its mouth is. You see, Shashwat, that's my problem with all of you. Y'all come on budget day because you've got to make the finance minister feel, look good. Why don't you all put, the government has given so many incentives to industry over the last 5-6 years. You've just not walked the talk. Let's be very honest.
But I completely agree. And Shashwat, do you think it will be different this time? And if so, why?
I can speak for myself. And when you look at us over the next 5 to 7 years, we have a $10 billion commitment for investment. This is across our sectors of energy, of chemicals, of IT-enabled services, and our other sectors as well.
Okay, I'm going to probe Shashwat a little bit more in a minute, but Vineeta, you have a point.
Two things I want to mention. First of all, on the budget, there's more for FDI than FIIs. That's one point. Second, when everyone says, why is the private sector not investing? Now, I'm putting on my board hat.
Yes.
When companies come to boards and saying, we want to put in more CapEx, our natural question is, what is your return on investment? Are you going to get enough investment? And therefore, only then we'll approve your budgets. So the companies will only do CapEx when they see that their capacity is going to yield better returns and there's going to be enough demand. And that demand stimulus is coming from the government or needs to come from the government and from PLI schemes and other incentives. To the extent the government doesn't provide that, the private sector cannot invest much.
But do you think enough has been done on the supply side this time? Because they've clearly tried to outline certain measures on the supply side.
Well, they've done it in some sectors which are like MSMEs and, as I said, tourism and education. And so there will be CapEx in those areas potentially, not so much in the traditional manufacturing sector. Electronics, yes. Data centers, yes. Real estate maybe will benefit from data centers. So there'll be sector-specific CapEx that will happen.
Got it.
Okay, let's bring in at this moment Vikramjit Sani. Vikramjit Sani, you're on the Parliamentary Standing Committee of Commerce, Rajya Sabha MP. Your first reactions.
Yeah, Rajdeep, I think FM in the beginning, in the preamble said from Kartavya Path, 3 Kartavyas: sustain economic growth, resilience, because we have global winds and we are worried that we may not have, God willing, the situation of 2008 again. But the appreciable announcements were biopharma, as you were saying, biological pharma and strengthening the drug control. Semiconductor mission, 40,000 crore is much needed, but down the line, like we have a semiconductor wafer facility lying idle or unutilized in Mohali, we hope we'll get some funds. Rare earth mineral corridor is good. The game changer can be container manufacturing, because we have seen in COVID, the freights had gone 100x. And MSME equity support for 10,000 crore. One major thing in the infra side, which have been fellow person, my colleagues have said, is the REIT, the real estate, the REIT for PSUs. We all know the large infra lands, unutilized lands are with our public sector enterprises. So if it is properly utilized, like we have seen in case of Aero City, and public infrastructure funds, and also the developing instead of the big cities, because smart city scheme have not taken off as well as you were also saying. So maybe let us try the tier 2, tier 3 cities kind of thing. And appreciable is that Shia FM have been able to maintain the fiscal deficit at 4.4%, going up to 4.3%. Global investment 10-year tax holiday for foreign companies providing cloud computing. But I'm not sure that with the changes in the modification to the tech companies, GCC companies will come or not. But one thing, nothing was on agriculture, nothing on agriculture tech, on agri-food processing and crop diversification. I think that have been missed out. Thank you.
Abba.
Okay, let me also bring in Mr. Pranav Satya, who's Chair FICCI Taxation Committee, and I'll go across to him on all the taxes first, but just to clarify on the buyback bit, to explain it a little better. Earlier, buybacks were taxed as dividend income, now they'll be taxed as capital gains. So for a minority investor, only actual gains are taxed, so it's actually better for them. You have a lot of non-promoter holdings, particularly in those IPOs and so forth that you were talking about. So it's a little technical, but that's really the aim over there. Pranav, thanks so much for joining us. Want to get your view on some of the key measures taken on the taxation front. STT, of course, has come as a huge shock to markets. No changes, of course, on the other indirect measures, which, we've, of course, seen a whole slew of announcements last year. What's your overall assessment of the budget?
Been brought into shock.
You're on mute, Pranav. You're on mute. Yeah. Pranav, you're on mute. Sorry.
Yeah, I'm so sorry. Yeah, I think we have to view this budget in the backdrop of all that has happened over the last 1 year, maybe, from the drop in the direct tax rates for individuals, the GST rationalization, and so on. So I think this budget, one would not have expected any big bang things, but I think it spells continuity, stability, to some extent simplicity as well, and an effort to continue the journey of building taxpayer trust and friendliness. So, for example, if we talk of the way in which they have tried to expand the safe harbor network, I think especially for GCCs, there is a thrust in this budget on services as well, other than manufacturing, which continues. And therefore, we find that there's a lot of certainty, clarity. They are trying to merge IT services in all the GCCs, the contract R&D manufacturers, software development into one. Significantly expanded the safe harbor threshold from 300 crores to 2,000 crores, significantly ensured that there will be a time-bound resolution of an advanced pricing agreement. So I think foreign direct investments, particularly in the IT services space and GCC space, I think would certainly be encouraged by these moves. Also, if you look at... Yeah, sorry.
Yeah. Okay, sorry. We've just got Rahul Gandhi, the leader of the opposition's reaction. He says in a tweet, youth without jobs, falling manufacturing, investors pulling out capital, household savings plummeting, farmers in distress, looming global shocks, all ignored, a budget that refuses course correction, blind to India's real crises. Now, you could argue that's an extreme position that Rahul Gandhi has taken, but Shankar Iyer, when you look at some of, does the opposition have an alternative idea? The problem that the opposition seems to face, it's one thing to criticize the government and say that this budget isn't addressing the real issues. What could the government have done, or what should the opposition be really doing that would give a sense that maybe they have a better plan for the Indian economy?
The British system has this shadow cabinet idea.
That's right, which for some reason we don't want to
do. And so I've written about this 2-3 times, that why don't you present your shadow budget? Even tomorrow, now that all the numbers are there, this is what we would have done with this money, and this is how we've done. Rahul Gandhi has one point. So we have seen sectoral initiatives in this budget. And probably agriculture, they could have looked at in opening it up, maybe modernizing it or whatever. There are some aspects, and some aspects are not there. So the budget looks at livestock, fisheries, coconuts, but I think somewhere...
I want to argue here as well that I'm not sure they're looking at increasing savings. They're trying to increase spending from a market and economy standpoint. Right now, the whole emphasis is on consumers actually...
But that is a very big problem, because the share of GDP to labor and the share of GDP to capital. The share of GDP to capital is expanding exponentially, whereas the share of growth or income to the labor, which is people who work, has gone down. And this is something that the corporate sector has to address.
The opposition does give us occasionally a glimpse of their ideas in the state elections, right? They say what they want to do. In the Bihar election, somebody had said government job for every single household. So bizarre ideas are floated like that every now and then.
I mean, but I sometimes I think we should separate election victories from the state of the economy. I think the economy deserves, a far more focus, ideally bipartisan. That's not possible, but there are questions that, need to be answered by the opposition in providing a blueprint for the union budget in future. It would be useful if, someone, and the opposition not short of fine economic minds, if you brought them together on a table and they gave us what their budget would be, it would be interesting.
So
at least it would trigger a debate.
The question that one could ask Rahul Gandhi and the Congress party is that what have Congress ruled states done on exactly those 7 or 8 points that they made?
Good point. Good point. Okay, we've got a sponsored commitment. Yes. Okay, we've got a sponsored commitment to take a break. We'll be back in a moment. Abha's got plenty more on the other side. You're watching our special coverage.
Got you dancing, now we go back and forth steady with the prancing.
Everything's new except the attitude. The all-new Seltos. Badass forever.
Kia. Movement that inspires.
Introducing Motorola's signature.
Finance Minister Nirmala Sitharaman would be to maintain stability amidst volatile geo-economic situation.
What will this budget mean for the average taxpayer and the common citizen?
And how will the reforms expressed continue to be on track in 2026?
Join my colleagues Maria Shakil and Siddharth Zarabi. Budget coverage of Modinomics 2026.
See you there.
A renewed emphasis on the service sector to provide a pathway to fulfilling aspirations of a youthful India with the following measures. I propose to set up a high-powered Education to Employment and Enterprises Standing Committee to recommend measures that focus on services sector as a core driver of Vikasit Bharat. This will make us a global leader in services with a 10% global share by 2047. The committee will prioritize areas to optimize the potential for growth, employment, and exports.
got you dancing. Now we go back and forth steady with the prancing.
Everything's new except the attitude. The all-new Seltos. Badass forever.
Kia, movement that inspires.
Introducing Motorola's signature.
We have pursued far-reaching structural reforms, fiscal prudence and monetary stability, whilst maintaining a strong thrust on public investment. Keeping Atmanirbharta as a lodestar, we have built domestic manufacturing capacity, energy security, and reduced critical import dependencies. Simultaneously, we have ensured that citizens benefit from every action of the government, undertaking reforms to support employment generation, agricultural productivity, household purchasing power, and universal services to people. These measures have delivered a high growth rate of around 7% and helped us make substantial strides in poverty reduction and improvement in the lives of our people. Reform Express. Our government has undertaken comprehensive reforms towards creating employment, boosting productivity, and accelerating growth. After the Prime Minister's announcement on Independence Day in 2025, over 350 reforms have been rolled out. This includes GST simplification, notification of labor codes, and rationalization of mandatory quality control orders. High-level committees have been formed, and in parallel, the central government is working with the state governments on deregulation and reducing compliance requirements. The reform
Presented by the all-new Kia Seltos, badass forever. Special partner SBI Life, अपने लिए अपनों के लिए. Exchange partner NSE, enabling a billion dreams.
Decoding the budget speech for you, and in fact the Finance Minister will be briefing the media in a short while, giving us some key insights onto her decisions this time around in the budget. In the meanwhile, we've also got Mr. Anshuman Magazine joining us. Let's go across to him. Anshuman, thanks so much for being with us. Let me get your take on the budget and also some of those key moves with regards to, of course, data centers and so forth. We're already seeing an implication across the board on that front.
Absolutely. First of all, the focus on infrastructure, as always, is important. And this time, there were some big announcements. I think one was, of course, revival of Tier 2, Tier 3 cities. If you look at India, the number of cities we have compared to China, there's still, one-third of what China would have, which means that, we can really improve our, cities and the infrastructure. Second is there was a risk fund for infrastructure developers, which will be incentive for developers to put money in infrastructure. One interesting announcement, which I'm not sure if anybody's understood, is structure REIT and InvIT for central government assets and how to monetize them. This is a very interesting structure. If it succeeds, it really means that the assets which are sitting with public sector companies, government, can be monetized or can be optimized, because Government of India and its different state governments and central government and many other enterprises sitting on huge amount of real estate. They would be the largest owners in India. And if those can be optimized, if they could be monetized, all the money you can raise can be reinvested in infrastructure. So this is a great announcement. If this structure works, it will be a big needle mover. You mentioned data center, no doubt for data centers. India has to capture this moment. We have to have increase our capacity in data centers significantly. And I think this tax holiday till 2047 will be a big impetus to doing that,
So, Anshuman, one of the questions that was being asked was whether or not this is going to be the budget post which we're going to see some amount of that private, India in capital spending come through. Up for debate, what's your take?
Certainly it will, I hope, plays as a catalyst for private investment. What we have seen so far, the private investment is not matching, like you rightly said, with what the government capex spending is. But I'm hoping with all the some incentives and some of the funds, for example, for SMEs, for MSMEs, would help to get the private capital to also come into the economy.
All right. We've got the finance minister getting ready for briefing the press. She's just going to begin in a few minutes. So we're just counting down to that and to understanding, of course, exactly what went on behind the scenes. It is being seen as a progressive budget. We already had the Prime Minister speak and share his key takeaways and really how he sees this budget being future forward and a Viksit Bharat focused budget as well. And we're waiting, of course, to hear the Finance Minister herself also answer some key questions this time around. Let's listen in.
27. At the outset, I offer my sincere congratulations to Honorable Finance Minister Srimati Nirmala Sitharaman ji for presenting the budget 26-27 in Parliament today. I extend a very warm welcome to you, ma'am. I extend a warm welcome to the Honorable Minister of State for Finance, Shri Pankaj Chaudhary ji. I also welcome Secretary, Department of Public Enterprises, Secretary Expenditure, Secretary Deepam, Secretary Financial Services, Secretary Economic Affairs, Revenue Secretary, Chief Economic Advisor. Friends, first the Honorable Finance Minister will make her opening remarks. Thereafter, we will take some questions. Please remember, identify yourself and your organization's name. And I would request you to ask one question only so that your friends can be accommodated. Thank you very much. Over to Honorable Finance Minister.
Good afternoon. This is the customary press conference that we hold with all the secretaries. You've heard the entire budget being presented in the Parliament. So as opening remarks, I'll just highlight some of the points which we want to draw your attention to. But subsequently, of course, we'll answer all your questions. All the secretaries are here with me. So this budget being the first one, as the Honorable Prime Minister said 2 days ago, this being the first one for the second quarter of this century, also leading towards Viksit Bharat 2047. We are laying the path and giving a push to the economy to maintain the growth momentum. And for that growth momentum or sustained economic growth, which we want to ensure, primarily we are looking at building the ecosystem with structural reforms which will go on. Reforms have been carried out. We are continuing to do the reform activities, so it will continue with an aim to make sure that we create enough environment for improving productivity and making sure employment is generated. Also, technology, 21st century, this century is completely driven by technology. So we will ensure that technology is brought in to benefit the common man, to make sure common man benefits in the sense of ease of doing living or for his business to prosper, or for farmers for greater productivity or better logistics, whatever. So technology for benefiting every common man. And above all, with all this, inclusive development. Sabka Saath, Sabka Vikas, and that is why you heard me bringing in schemes which have good allocations for bringing better health facilities, creating a cadre of people, not cadre in that sense, but a bulk of people who can come in as health workers, paramedics and so on, and also making sure we are able to provide dignified opportunities for Divyangjan. Mental health has also received a lot of attention. So these are the side for Vikasit Bharat and making sure Sabka Vikas hoega. But the idea is the advantage and the momentum that we gained since after COVID by increasing public capital expenditure will continue. We've announced that 12.2 lakh crores are coming through public expenditure this time. It is 4.4% of the GDP. I'd like you all to please notice that, which is the highest, at least in the last 10 years. It could even be highest if you were to take data earlier. No increment in capital expenditure, sustained fashion, has happened ever before. This one marking 4.4% of the GDP. Then what are the kind of things which will happen through it? You will have dedicated freight corridors. I've named Dankuni in the east, Surat in the west. Then I've also highlighted that 20 new national waterways, not national highways, national waterways are being planned. And again there, those are going to pass through some of the critical mineral areas. Orissa, where the mineral-rich state, you have the waterways taking it to the port, and the two ports have been identified, Paradip and Dhamra. Similarly, we are also making sure that the coastal cargo movements will be enabled through a cargo route, so that through the coastal area we are able to cut down on cost of movement of goods. City economic regions, developing them is a very big new measure that we are coming up with. And for that, an allocation of 5,000 crore per city economic region. Imagine the amount, 5,000 crores in 5 years. 1,000 crore per year per city is being given, and the emphasis is going to be largely on tier 2, tier 3 cities. And then talking of infrastructure further, with the capital expenditure coming with the big number, you're having also the high-speed rail corridors. 7 of them announced. The destinations are clear, so that they become the bridge for all these economical robust centers. So those are for making sure that the infrastructure and the capital expenditure are getting tied up, and the country benefits from the ripple effects that these can bring in. The 7 strategic and frontier sectors in which we've highlighted that will increase productivity and also have new investments come in and give emphasis for India's own brand on those things is on the biopharma sector. I think that's going to be a big change in the way in which we are looking at giving capacity for those who are able to research, who are able to undertake research and development. So 10,000 crore initiative again over 5 years for domestic biologics and biosimilar production. This is a clear message and backed with enough substance that India's lead in the pharmaceutical sector should be kept intact, but at the same time bring in newer ways of helping the pharma sector, and also because it has an impact on human health. Semiconductor mission had 2 major announcements that will improve the India stack and also the IP related matters. Electronic components manufacturing scheme for 40,000 crores is a major encouragement for electronics to become self-sufficient. We have also announced establishing rare earth corridors so that India can face and be able to meet its own requirements with its materials. So once we identify and are able to explore these minerals and process them, make them available for us, our dependency on external sources for bringing in the rare earths will be lesser, and we've identified the states where we want to establish this rare earth corridors. They are going to be in Orissa, Kerala, Andhra Pradesh, and Tamil Nadu. So these are very important developments, and they are going to have multiple decadal impact on the Indian economy. Our dependence on magnets and rare earths will be brought down. 3 dedicated chemical parks, again for reducing our import dependence. High-tech tool rooms for research. That will be set up in 2 locations. Very important thing is about the construction equipment being imported. That could be for building tunnels or metros or high energy and also heavy duty equipments which we are relying on imports. We want to manufacture them in India, and that is why I said, how does it affect a common man? It affects because firefighters today have novel, new, big ticket and small, very small firefighting tools and weapons or equipments. We don't have them in this country. That's why if there is a fire accident in some very congested area, our equipments are not able to reach those points. Whereas there are equipments which today are produced abroad, which can navigate those small corridors and go save people's lives. Whether they or huge ones, all of which we want to make sure that we will have production in this country itself, whether they are tunnel boring or anything else, from small to big, we want to bring in those very impactful infrastructure into India. So we'll support domestic manufacturing. Then container manufacturing is another which we'll support. I think I've gone in detail talking about the textile support in various forms. One very important announcement was made, Mahatma Gandhi Gram Swaraj initiative, which will make sure khadi, handloom, handicrafts will all be brought in, and one district, one product will all be brought in this initiative, and we'll be able to support rural artisans, rural workers, and handloom weavers in those areas. Legacy industrial corridors have got saturated. Manufacturing happening there is now very constricted because they are not able to bring in newer robotics and others. So we want to upgrade these legacy industrial clusters so that they become cost competitive and efficiency comes into these places. Even more important is the champion MSMEs, small and medium industries, entrepreneurs, MSMEs, who are going to be given all the support, and 3-pronged approach is being taken up there. We are giving equity support, we are giving also liquidity support, above all professional support for them, so that MSMEs, the equity support is supported by a 10,000 crore SME fund, growth fund. Above all, we are also topping up the Self-Reliant India Fund with 2,000 crores. So MSMEs should not feel any dearth of resources for equity. Similarly, they shouldn't feel any difficulty for liquidity in their hands, because the TREDS platform will now be treated almost as a backed up, security backed up instrument with which they'll be able to discount and get their monies. For professional support, we're working with the chartered accountant and cost accountant institutes so that they can create corporate mitras who can help these MSMEs in filing their returns, doing their accounts, and so on. Above all, for youth and training, there's so much. You've heard the speech, so I won't want to take your time on it. High-powered education to employment enterprise standing committees being formed so that they can recommend measures for service sector as a core driver of Vikasit Bharat. Part B concentrated a lot on tax and related concessions that are being offered. More importantly is the process simplification which has been announced. So elaborate measures have been taken. You will be able to also seek clarification if you want. New export opportunities for fishermen who can go into the economic India's zones, high seas, and also assess and access the global markets. The one very touching, and I really was moved by this proposal, is where we have identified 17 drugs or medicines which are going to be basic custom duty exempt, which are important for cancer patients. Similarly, 7 more rare diseases are added to the exemption list of the import duties. Baggage clearance and personal items which you bring in when you travel are all being given enhanced duty-free allowance. Besides that, there are quite a few direct tax and indirect tax proposals. Decriminalizing the penalty proceedings and support to the IT sector are some of the high points. As an opening remark, I'll conclude here. I'm sure you'll be able to ask questions and seek clarification. Thank you for coming.
Thank you, ma'am. I'll start this question, taking the questions. First question is 17. 17.
Good afternoon, ma'am. Shishir here from Hindu Business Line. Ma'am, my question is that under the miscellaneous capital receipt, the provision is 80,000 crore rupees. And last year, the provision was 47,000 crore, which has been reduced to 37,000 crore rupees now. Does this mean that there will be more equity monetization this year, or there will be more focus on the asset monetization of CPSEs?
So you've got it rightly. The intent is that we will have a very strong asset monetization plan in place. Last year, ma'am had announced in the budget that there will be a pipeline prepared, which is being done. So we hope to reap the dividends from that.
238.
Ma'am, Timsi Jaipuria, this side from CNBC TV 18. I just wanted to know the rationale behind the hike in STT in futures and options.
So, first of all, I believe some confusion. In fact, the question that you have asked rightly reflects the announcement itself, that the only change made in STT is in the future and options. All the other STT rates remain the same. The primary objective of raising the tax rates on STT has been that it is felt that when you look at the volume of transactions in futures and options, whether you compare it to the size of GDP or size of the underlying securities market, it is largely in the realm of heavy speculation, which results in losses to small, retail, unsophisticated investors. And the government's intention is to discourage speculative tendencies, and the increase in rate is essentially in that direction. So it is meant to essentially handle the systemic risk in derivative markets. Even after this increase, however, the rates of STT will remain modest compared to the volume of the transactions that is happening there. This is the reason. 54.
मैम तरुण शर्मा फ्रॉम जी बिजनेस. मैम आपने पूरा बजट जो है वो न्यू एमर्जिंग सेक्टर पे बड़ा फोकस रखा है. मैम मेरा सवाल आपसे दो हैं यदि आप अलाउ करें. एक मैम आपने जो एक्साइज ड्यूटी का कैलकुलेशन किया है वो पिछले बजट एस्टिमेट से इस बजट एस्टिमेट में तकरीबन 22% की ग्रोथ देखने को मिली है. दूसरा मैम जो आपने MSME के लिए कहा कि जो ट्रांजैक्शंस होंगे उसके लिए आप एक्सचेंज प्लेटफॉर्म का यूज करना होगा, तो क्या मैम ये CPSEs के लिए कंपलसरी होगा जो डिस्काउंट ट्रेडिंग की जो बात है? थैंक यू.
I'll take the second question, ma'am. So, हाँ, ये CPSEs के लिए मैंडेटरी होगा कि डिस्काउंटिंग एज वेल एज नॉन डिस्काउंटेड बिल्स दोनों को ही ट्रेड्स पे करना होगा ताकि वो 45 दिन में भुगतान MSME को कर पाएं, और ये हर तरह से चेक कर लिया गया है कि ये हो सकता है. So we want to make CPSEs as pioneers. We hope, like ma'am has said in her speech also, that other corporates will also follow.
On excise.
increased by 22%, sir, from last year B to this year?
Because there is from 1st of February, all the tobacco products have come back into excise, and all those revenues will account for the increase of the next year. 209.
Ma'am, Prakash Pedashi from ET Now. The budget has announced restructuring of PFC and REC. What will this restructuring look like? And does this also mean that these NBFC will be merged going forward?
What is the later part of your question? That these NBFCs are not going to?
Merged going forward?
Yeah, I've said we are rationalizing it. You'll get to know as we go forward. We want to streamline it, and therefore we'll be taking some steps. We'll let you know the moment we decide how to go about it.
234. Hello, ma'am. Harsh Kumar from Business Standard. Ma'am, two questions. One is, you said that a high-level committee will be formed on the banking reforms in order to 2047. Are we going further for any kind of merger or something, since government is continuously saying that we need at least two of the big banks, at least of the top 20 banks. So are we going towards that?
No, first of all, when I say that it's going to be a high-level committee which is going to look into it, the terms of reference will be prepared, and we are looking at committee to go into the entire expanse of the banking sector so that they come up with recommendations which help us to plan for banking for 2047. We need, by the time we become a Vikasit Bharat, 2047 is our goal. We need to understand what are the other steps that we need to take in the banking area, and based on the recommendations, we'll go forward. But we have the Secretary, Department of Financial Services. We'll ask him to also give us, please.
Ma'am, I think you have rightly responded. There are large number of aspects relating to the banking requirement. For example, the credit to the GDP, commercial credit to the GDP ratio low, and the expansion of the banking network, and what kind of procedures currently we have that is impeding both the deposits as well as credit. All those aspects will be looked at by an expert panel, a committee, and well, we will definitely have TUR, and then also consult the all the stakeholders, and the government will take a view on how to lay strong foundation for 2047 Viksit Bharat.
Ma'am, one more question. 229. Left side, yes.
Ma'am, Premangshu from Ananda Bazar Patrika. Ma'am, have you consciously avoided announcing any bonanza for the poll-bound states? And secondly, can you elaborate on this East Coast corridor, industrial corridor you announced?
See, the industrial corridors are very critical for supply chains. We need a predictable mineral, rare earth and magnet related products to be made available for India's manufacturing, whether it's lithium ion, whether it's automobile sector, whether it's the new age solar. You need these rare earths to be processed and be made available. We have enough raw materials. The coastal areas are rich in these minerals, and therefore states also felt, I must credit that the interaction that I had with the finance ministers pre-budget, many states felt that there are rare earths which they can utilize. We then sat up in the budget group that we have, Revenue Secretary, Secretary DA, and thrashed out, talking with the states. What are the kind of things that we can do so that their capacities to extract these minerals, process them, make them something which the industry can benefit from. So India can be less dependent on imports of these materials. That is where, having spoken to states, we thought it's very important to recognize the corridor and give a policy for it so that industries can invest, private sector can come in, governments, state and center can come together on it. That is where these corridors were announced. And looking at the success of the defense corridor, I can confidently say these rare earth corridors will make that big a difference to the Indian economy. The first question, I think there's enough to cover all the election states. If I do, you will ask me, why have you done it only for the election states? Now I've done it for election and non-election states as well. You want me to spell out what has been done only for the election states? I'm quite happy to do it.
262, front. And the front, please. Yeah, here. Front side. Front row.
Good afternoon, ma'am. Sapna Das here from CNBC TV 18. Two quick questions. Just wanted to understand the gross borrowing at over 17 lakh odd crore. Would the government look at it as being on the higher side? Just asking that. And within that also, if you look at your net tax revenue stream, of course, B to RE, it's higher. And a lot of concessions have been given away both on direct and indirect taxes. But the trend seems to be a bit flat, around 28 lakh odd crore. So if you could explain to us, how is this entire thing looking? And second, ma'am, in terms of the disinvestment aim, 80,000 crores, would this also include IDBI stake sale sometime in FY27, ma'am? Thank you very much.
So you've covered a number of secretaries all at one go. So on the borrowings, no, we don't think it's on the higher side because the net market borrowings are in the range of 11.73, which is been plus around that number for the last couple of years. The larger number is because we have 5.5 lakh crores which have to be repaid this year. So to that extent, we don't think that it's a large number. We have a plan how to manage this. And according to that plan, which also gets released from time to time, the markets would also know, as well as all of you all.
4. Okay.
So, on the tax stream, because of some concessions that were given this year, there has been some course correction. But if you look at the next year, the direct tax is growing at 11.4%. and continues to be 3.1% of the GDP. The total collection would be 6.9%. The indirect tax excise is growing very healthily because of the base correction, the base which has got added. Customs too is showing a decent buoyancy. So on the tax revenue, I think we are looking up. And even GST, as you would have seen the collection figures today, after rate rationalization, the buoyancy which we had expected, and in this hall we had discussed about it, you can see that coming back on that tax.
Hi, ma'am. Meghna Mittal from Money Control. The fiscal deficit target that you have set for next year from 4.4 to 4.3 is being seen as very, very gradual. Is there a specific reason, or is it because of the global uncertainties as one of the major factors for being such a gradual fiscal consolidation path?
I would have thought you'll appreciate it being gradual. Because particularly fiscal, drastic changes don't go down well. One or the other section gets hurt. We will have to be gradual, but yet keep it well within that band which gives confidence. And to show that we care for fiscal prudent management. There's no point in me dropping it to, let's say, 4. It has to be steady so that the economy goes in a steady speed. So it is a responsible number and realistic number. It's not as if I wanted it to be so gradual. It is a responsible number. We should achieve it and equally not bring in any kind of turbulence anywhere.
Thank you. From the center flank, 190.
Thank you and congratulations on a very comprehensive budget.
Before you start, I was going to look at PIB and say this side is being ignored.
Yes.
But good that he called you.
Thank you. I'm Aprajita Saxena from CNBC International in Singapore. I'm very curious because you started talking about tech, and I want to ask a question about the ISM 2.0. There are those on the outside who say that India sort of lags when it comes to AI innovation, especially innate, innovative LLMs. Is the strategy of ISM 2.0 to sort of become part of the global value chain, or are you more positioning towards India creating its own native LLMs? Thank you.
I think Kashmini Vaishnav, the minister, has been speaking extensively about this. There are several aspects of it. We want to be sure that in the semiconductor domain, we have every expertise for all those 5 major chip or modeling or, the infrastructure, design, every aspect of it. So he is talking about creating capacities within the country to be able to have that kind of a infrastructure well laid out within the country. And similarly, if you're looking at the way in which our startups are working, using AI, and very clearly we have also shown a path that it is not just the large language models, but also smaller ones, medium-sized ones, which can serve the requirement of your economy. So AI in India, particularly when you have a huge demographic dividend, will have to give us results to ensure that our people have work and also the opportunities are going to be enticing enough for the youth. It cannot replace human efforts. So we are at the same time redefining for ourselves, if I may use that expression, on how to use AI, what is the capacity that we have to create, the kind of infrastructure that we have to lay in the ground for it. Equally, the products which come out of it will have to benefit our people because our youth are revving to do more and new. For them to do something new and for them to do something more, we have to create benefits out of AI rather than, push along with AI unthinkingly that it doesn't serve our people. So I think these many different factors play in making a decision on semiconductor. And that is where semiconductor ISM 2.0 looks into these aspects as well. And I'll ask the CEA to speak a bit on it because he spent a lot of time so that he could write effectively capturing what's happening down. Ananta, you want to say anything on it?
Actually, we have to see the semiconductor mission and the announcements related to the rare earth corridor, which ma'am talked about a few minutes ago. All of them as part of the framework that we presented a couple of days ago here on the strategic resilience part. So, in fact, many elements of this ma'am's budget speech focus both on equipping us to handle the AI-related technology as well as skilling the population in areas where they can be immune to some of the AI-related impacts as well. So it covers both dimensions, and therefore the semiconductor mission, the rare earth corridor, and also some of the Part B announcements ma'am made about the various electronics and manufacturing sectors were all part of the initiatives to make sure that we make ourselves strategically resilient in a very fraught global environment.
138 at the back side. Yeah.
I'm Rishabh with NDTV Profit. Just wanted to ask on the buyback tax, the rationale behind it, because was it essential to do it now? Because in 2025, there were a lot of companies that came out with significant share buybacks. Also because, and also do you foresee some sort of a reduction in buybacks? And secondly, on pollution-related schemes, the outlay has been very stagnant, but pollution as a problem remains. Is this not a policy priority for the government now?
On the buyback, I'll have Revenue Secretary brief us.
So first of all, on the buyback, I'd like to clarify. I hope that the point was clear enough in the speech also, that it is in fact, a relief. It's not a tax, additional tax. It is a relief. Buyback tax system was changed to make it as a dividend income, which is income at the applicable income tax rate at the hand of the shareholder. It has been corrected now, and we have put the tax to be and the hands of shareholder as a capital gains tax, which long-term.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange. Co-powered by Purvankara, the art of development celebrating 50 years.
Hello and welcome. You're watching the collab show between Business Today and India Today Television. This is the market closing show. Last 10 minutes to go before the market shuts shop. It's presented by NSE. Let me quickly welcome all our guests joining in. Saurabh Mukherjee, founder and CIO, Marcellus Investment Managers. Swaroop Mohanty, CEO, Mirai Asset Mutual Fund. And we also have with us Dheeraj Relly, MD and CEO of HDFC Securities. Welcome to all of you. Thank you for standing by. The Finance Minister just took some of the questions from media on the budget that she's presented. Sort of coming to you first. What do you think is the key reason why the markets are disappointed so much? 2% down for the Nifty, 24,800 has been given up. Is it the disappointment on STT or is it the disappointment of some more announcements that have gone missed?
I think the market had unrealistic expectations going into the budget. We're living in a country where dollar EPS growth, right, is close to zero now for 2 years. And the market trades at 20 times forward, right? So you can just get just to give you a sort of headline view of how unrealistic views are. Earnings growth in rupees is 5%, in dollars is barely anything. The market trades at rich multiples compared to any other country. And therefore, the unrealistic nature of expectations meant that they were more likely than not to be disappointed. I think the FM hasn't done anything wrong. It's a good budget. It was a high time that FNO taxes were increased. I've been shouting myself hoarse for the last couple of years that this doesn't make any sense. We have 1 trillion rupees of speculative activity in FNO markets. Much of that money is ending outside India as smart algo traders on Wall Street take retail investors in India to the cleaners. I'm glad that the FM has decided to tax that activity at higher rate. It's basically a sin tax. It's a good idea. And the second, I think, positive thing she's announced is a big review of the banking sector. I don't know exactly how the review will play out, but unless the FM wants the repetition of the status quo, there is possibility that the review of the banking sector leads to more foreign capital, perhaps more foreign corporate capital also entering the banking system. More capital in the banking system is much needed given where we are with many of our smaller banks struggling with profitability. The only negative I could spot was this obsession about jacking up capex, which obviously results in more borrowing in the bond market. I think tomorrow morning when the bond markets open in India, we'll see bond yields going up. And that's unwelcome, especially since the CE has said, the chief economic advisor has said, India needs cheaper capital. I'm not quite sure how the government borrowing more money in the bond market is going to reduce the cost of capital for the country. But in difficult circumstances, a decent budget. I think the market being disappointed is more the market's own unrealistic expectations than anything that the FM has done.
Right. Let me come to you, Dheeraj, and quickly ask you as well, what stood out for you in this budget and where do you think the finance minister could have done more?
I think this budget is a more nuanced and fine print oriented budget rather than, a big bang reforms. We've seen government continuing to focus on the capex side. I think that is good because India is a infrastructure deficit country and capex has its own repercussions on the employment and growth also. So to that extent, I think more or less FM has ticked all check boxes, no big bang reforms. Yes, STT increase in FNO have been a dampener, and I think this is a knee-jerk reaction in the market. Maybe there for a couple of days, and then markets will move on from here. What I think FM could have done better. My take is that we have good enough of assets available with the government to monetize. I don't know why they are reluctant to monetize the assets, because with that monetization of assets, they can get funds and they need not to borrow more from the markets. So that would assuage the concerns Saurabh was pointing out. Government is sitting with a lot of assets and they must look at monetizing the same. They can also reduce their stakes in some of the PSU banks also.
Yeah.
Hopefully, the high-powered committee, sustained committee, could work in these directions.
Okay. Swaroop, to you as well. On a scale of 1 to 10, how would you rate this budget and what adjective would you use to describe this one?
If you just take out the stock market perspective and look at it from a broad India, what can I say, destination or path story, I would rate it 8 to 9. But at this moment, it's completely wrong to discount the stock market at a time when people are abandoning India with the quantum of money that's going out. That was a message being given to the country, and I'm not against the implementation of STT, but I think it could have been avoided at this moment. Please understand, today the FIs are not at play in the market. We'll come to see the full impact tomorrow. And see, there is a lot of noise on the world. We can ignore that noise and continue our path of fiscal prudence, which the budget has continued, which is, I think, controlling the controllables. I think when you look at the broad budget, I think the focus on that has been a standout. A lot of factors which the world was screaming out, because the world's divided into two parts. Again, speaking from a stock market perspective, of there's an AI world and a non-AI world. Yes, we've addressed our intent to be there through data centers and semiconductors. That's an intent. Time will tell whether people will take that bait. Now, the concern for the country has been private capex. The government cannot be, ticked anywhere out of 10 on its intent on public capex, which it continues. Right. This is a phenomenal budget, but time will tell whether people will take the bait on private capex. The other part, which is very significant for me, is, at 9% unemployment, this budget also lays down the ground for the beginning of employment across sectors, which these were three things which stood out for me. But ignoring the stock market, we'll come to see the full impact tomorrow.
That's where the impact is. Okay, Saurabh, to you as well. Do you think this budget has done enough on two accounts? Taking a leaf out of what Saurabh also mentioned, Swaroop also mentioned, and that's as far as the private capex is concerned. That's been subdued. We've seen only the government doing all the heavy lifting. Will it finally pick up? And second of all, will FIIs come back that have been awaiting us?
So, two aspects to understand on private capex, right? A promoter of a private sector company looks at demand. If you have tax revenues growing at 3 to 4% in a country, if you have capacity utilization at 70-75%, right? But demand has been weak for a couple of years now. Job creation in the private sector is anemic. Real wage growth in the private sector is negative. Difficult to see why a promoter should press the back button on capex. After all, he or she, the promoter, is a profit-oriented creature, and if he does not see the ground level economic activity to justify private capex, I'm not so sure what the FM can suddenly do to trigger private capex. So I think that's the first piece. It will be a while before we can see private capex, because job creation, private sector job creation, especially white collar job creation, does not seem to be happening at this juncture. Coming to FPIs, or let's focus on FPI money, the point that Swaroop was saying, where FPIs are heading for the door. The FPI's bone of contention is very simple. Their point is, look, you're one of the few countries in the world which taxes us at destination. Most countries have residence-based taxation. Most countries do not tax FPIs. We are one of the rare countries which taxes FPIs. When we were a country where earnings growth was in 15% or high teens, right? FPIs were happy to pay that tax. Now they're saying that there is no earnings growth in dollar terms. Valuations are rich, and yet you guys continue taxing us. And their point is, why should we therefore invest in your country? Now, I'm not the person to address that issue. I think it's high time that between now and the next budget, the government and the FPIs have a chat with each other and figure out a middle ground which suits both sides, because I don't see FPIs returning to India with the GT regime that currently prevails for foreign investors.
Okay. Neeraj, coming to you. We just are a few seconds away from the market shut shop, maybe 1 minute to go, and we're already down sharply across the board. There's a broad-based sell-off, so the markets are clearly unhappy with what the budget has done. But for an average retail investor, from tomorrow, what is the strategy you're advising them? Is it back to earnings, back to tracking those companies which are, tracking with profitability? How should one be really understanding what their strategy should be post this budget?
One thing they can do is to relook at their portfolios and try and optimize their portfolios in the sectors where we see better earning growth. Because ultimately, budget or geopolitical issues, these are more bigger noises only, and they'll have to, focus on the earnings. And we can safely assume that FY27 will be a better year for earning in terms of quality of the earning, and overall earning should be better. That's what our estimates are. And that's where we believe that they can look at the sectors which are where we have better potential for earning. BFSI is one space they can look at. I know PSU banks and some of the banks got hammered today, and capital market stocks are also hammered. But my take is that BFSI is one strong sector. And with the impetus given in the GST 2.0 and last year relief in the taxation and no tweaking this year, I think the benefit will continue, and that continuity should provide more money in the hands of Indians, and that should pay well for the consumption related stocks. And now that they haven't seen the volume growth, they've been riding on only on premiumization in last few years. We're hoping that the demand will pick up in the next fiscal, and that's where consumption oriented stocks and low cost discretionary stocks should do well.
Okay, let me quickly just wrap up the markets and come back to all of you. 24,825 barely moved up above that 24,800 mark, but ending 495 points lower on the Nifty today. The Nifty Bank also has seen a sharp fall in today's trading session, viewers, especially led by the fall in the PSU banking story, 2% down, 1,193 point of a cut on the Nifty Bank. All the sectors have slipped into the red, barring just minute gains on the IT sector today. It's the India VIX that shot up almost 11%, indicating heightened volatility in trade today. Look at what the metals are doing. Last couple of sessions, we've seen heavy sell-off, and it again ends with about 4% losses in today's trading session as well. PSU banks are coming under heavy pressure, something that Dheeraj was also marking out, that it's the borrowing that the government has indicated in the budget, a record borrowing of over 17 lakh crore rupees, and that's creating some pressure there. Look at the defense stocks. There has been an increase in the outlay, but you still see the index down by 5% in trade. So it's an all across the board sharp sell-off that you've seen in the markets today. A lot of those stocks also getting under pressure. Let me come to you, Swaroop, and try and understand, what should be an investor's understanding of asset allocation from here. Up until thus far, people were riding on this entire FOMO of gold and silver, jumping onto every opportunity, riding it high. But bang comes the sharp correction, which anybody of us would have anticipated, but not so sharply in just the last 2-3 sessions as to what has happened. For those investors who were heavy on gold and silver, what would you advise? For those under equities, what would you advise?
See, my smile was whenever I hear the term asset allocation, a smile comes to my face, because as